So China's definitely been investing for decades in trying to have their own independent semiconductor supply chain, and they've been making some progress. The thing to know about semiconductors is there's a huge range of sophistication from the really basic semiconductors, computer chips that go in basic devices, your smart fridge, your car, up to the kind of more advanced chips that might go in a brand new iPhone, up to very advanced chips that go in kind of the data centers, gigantic warehouses full of computing, which is what you're training advanced AI systems on. So China has made a lot of progress on the more basic end of the semiconductor sort of scale, and is still really struggling to hit the most advanced end. And that's where, it's not even, you can't even say the US is, alone able to create those advanced semiconductors. But what you have is an incredibly advanced global supply chain.
Many describe artificial intelligence and its development across these two superpowers as an arms race. Is that framework misguided, do you think?
I think it's a bit misguided. I think you really want to look at what kind of AI are we talking about and in what way might it be a race. I think the place where it's clearest that it makes sense to think in a competitive framework is in kind of military domains. So, it's just true that the US military really wants to make sure that it is keeping pace with and ideally a little ahead of, the Chinese, or a lot ahead of the Chinese military in terms of what technology they have.
Dan, Washington has taken some steps to curtail some of China's ability to get their hands on the cutting edge chips that really power these AI platforms. What's your take on that? Is that an effective strategy, or will China just find a way to build their own?
I think that China is going to try to figure out a lot of the way to build their own. A lot of the chip makers now have been under very significant stress from US sanctions dating back to about a year ago now, released by the Biden administration, that is really stopping their ability to access not just the high-end chips, but also the semiconductor production equipment as well.
एवरीवन गुड मॉर्निंग टू ऑल ऑफ यू वेलकम वंस अगेन टू दिस लाइव एनालिसिस। स्टार्ट करते हैं आज का सेशन। नेचुरल गैस को देखोगे, कल सेलिंग आई थी, एक ट्रेड बनाया था सेलिंग में। मार्केट कल थोड़ा बहुत फॉल किया था, एक नीचे पॉइंट ऑफ इंटरेस्ट था, नीचे टारगेट तो दूरी है अभी। तो लेट्स सी आज ये कंप्लीट फॉल करने आता है नीचे या नहीं। अभी भी ऊपर वाला ये लेवल रेजिस्टेंस का ही है, यहाँ पर आता है तो वापस सेल कर सकते हैं। एंड नीचे आएगा तो ये लेवल पे देखेंगे 272 से 274 के बीच में। यहाँ पर एक सपोर्ट जरूर है, मल्टीपल टाइम टेस्ट हो चुका है, तो देखना पड़ेगा यहाँ पर सपोर्ट लेता है नहीं लेता है। बीच में कोई नया सपोर्ट बनेगा तो विल सी। अभी तो फिलहाल कोई खास वॉल्यूम आया नहीं है नेचुरल गैस में। क्रूड ऑयल में देखोगे, कल अच्छा फॉल कर गया था, उसके बाद मार्केट ने एक नीचे सपोर्ट लिया था। ये एंट्री वाली एक लेवल कैंडल थी, यहाँ पर मार्केट ने ओपन इक्वल टू हाई बना दिया था एग्जैक्टली सपोर्ट एरिया पे, बट वहाँ पर एक सपोर्ट पे एक बाइंग जरूर बनी थी, याद होगा कल आप लोगों को। एंड वहीं पर मार्केट आज क्लोज हुआ था। एंड अर्ली मॉर्निंग चेकआउट करोगे तो वहीं पर मार्केट आज ओपन हुआ, नीचे एक और सपोर्ट था, वहां से भी लिक्विडिटी लेने की कोशिश करी, अपसाइड गया। तो ये पूरा जोन आप कह सकते हो सपोर्ट जोन ही है। दिस होल एरिया जो सपोर्ट जोन, ऊपर रेजिस्टेंस देखें तो 5870 से 5890 के बीच में एक छोटा सा रेजिस्टेंस देखने के लिए मिलेगा 15 मिनट टाइम फ्रेम पे। तो दिस होल एरिया इज अ सपोर्ट एरिया राइट नाउ इन क्रूड ऑयल। तो इस एरिया से बाइंग प्लान कर सकते हैं, पूरा ही है। चाहो तो अपर लेवल से भी ले सकते हो, लोअर एंड से भी ले सकते हो। ट्राई करना कि अपर लेवल से लोगे तो क्वांटिटी थोड़ी कम रखना, क्योंकि दो सपोर्ट पास पास बने हुए हैं, तो चांसेस हैं कि प्राइस अपर लेवल से ही निकल जाए, नीचे लेवल पे आए ना। ठीक है, एक पॉसिबिलिटी इस चीज़ की बन सकती है, क्योंकि ये भी सपोर्ट ही है, दिस इज ऑल्सो सपोर्ट। तो ये दो चीज़ कर सकते हैं, या तो यहाँ नीचे आने का थोड़ा वेट कर सकते हैं, बट जरूरी नहीं है वहाँ तक प्राइस आएगा ही आएगा, ध्यान रखना। हो सकता है प्राइस यहीं से रिवर्स कर जाए इस सपोर्ट जोन से। तो अगर यहाँ से ले रहे हो, अब इसमें यहाँ से लेंगे तो इतना बड़ा एसएल तो नहीं रख सकते ऑब्वियसली है, इतना टारगेट भी नहीं है अपर लेवल पे, कोई लॉजिक नहीं बनता। सो अगर यहाँ से लोगे तो क्वांटिटी कम ही रखना, सो दैट अगर प्राइस नीचे आके एसएल भी उड़ा दे तो भी थोड़ा सा मार्केट मोमेंटम में चला जाए। तो दिस इज अ होल सपोर्ट जोन राइट नाउ, एक्सपेक्टेड है दोनों साइड से मार्केट पे मोमेंटम आना चाहिए। ठीक है, ये भी सपोर्ट ही है आपका, दिस वन इज ऑल्सो सपोर्ट जोन। ठीक है, इस कैंडल ने थोड़ा सा गड़बड़ कर रखी है। ये ओपन इक्वल टू जो हाई कैंडल बनी है, इसने थोड़ा सा प्राइस को सपोर्ट एरिया पे ट्रैप करने के लिए नीचे डाल दिया। एग्जैक्टली देखोगे, ये कैंडल जो कल बनी थी ओपन इक्वल टू हाई शाम को 11:15 पे, सपोर्ट पे थी एग्जैक्टली, ओपन इक्वल टू हाई बना के ब्रेक किया, फिर वहीं पर क्लोजिंग आ गई। अभी भी प्राइस उसी लेवल पे चल रहा है, नीचे से नीचे आएगा वहां से लिक्विडिटी मिलेगी, बिकॉज नीचे भी सपोर्ट है। सो इन दो सपोर्ट के बीच में अभी है प्राइस नाउ। ये कोई ब्रेकडाउन नहीं हुआ है, तो इस पे ऐसा नहीं कि नीचे से आएगा तो यहाँ सेल कर देना। दिस एरिया इज अ सपोर्ट एरिया, दिस होल एरिया इज अ सपोर्ट एरिया, इसको आप कह सकते हो। कल एक लेवल बनाया था, दैट इज इंटरनल लिक्विडिटी, ये है एक्सटर्नल लिक्विडिटी जोन। तो हमारे पास एक्सटर्नल सपोर्ट जोन कहलाएगा ये पूरा। ठीक है, दिस होल एरिया इज अ एक्सटर्नल सपोर्ट जोन। दिस होल जोन हो सकता है यहीं से बाइंग आ जाए, ध्यान रखना। अपर लेवल से लोगे क्वांटिटी कम। दिस इज ऑल्सो अ सपोर्ट। नीचे से लेंगे थोड़ा सा एसएल छोटा होगा। कि मैं एक्सपेक्ट कर रहा हूँ प्राइस आज थोड़ा सा बुलिश ही रहना चाहिए अपर लेवल की ओर, अनटिल अनलेस कोई नया रेजिस्टेंस क्रिएट नहीं होता। बाकी सिल्वर को देखोगे, कल बताया था एक $75 का लेवल है, होल्ड करके बैठा हुआ है अभी भी। नैस्डैक, निफ्टी, बैंक निफ्टी गैप डाउन ओपन हुए उसके बाद इंट्राडे में बेरिस ही बने हुए हैं। निफ्टी थोड़ा सा ज़्यादा ही बेरिस है, गैप डाउन एंड थोड़ा सेल ऑफ। लेट्स सी थोड़ा बाइंग आती है या फिर नहीं निफ्टी फ्यूचर में। 2-3 दिनों से रेजिस्टेंस एरिया पे कंसोलिडेशन कर रहा था, अच्छा मौका था ब्रेकआउट करने का 26,050 के ऊपर। फ्यूचर में मैं 2-3 दिन से आपको बता रहा था, नहीं कर पाया। कल भी ओपन इक्वल टू हाई बना के कंसोलिडेशन में ही चला गया था सेलिंग साइड पे। आज ऑलरेडी गैप डाउन हुआ है, इसका मतलब अभी भी रेजिस्टेंस 26,050 फ्यूचर में स्ट्रॉन्ग है। इस तरह से निफ्टी गिरता रहा तो पता नहीं कहाँ रुकेगा वापस से। अब प्राइस वैसे वापस अगर जाता भी है तो अब 50 की अगर बात करूं फ्यूचर चार्ट की तो 25,000 जो पहले का मेजर रेजिस्टेंस था अपर लेवल 26,050 वहां छोड़ो, उससे पहले ही कल का जो लो है वो रेजिस्टेंस की तरह काम करने लग जाएगा। 15 मिनट में प्राइस अगर रिटर्न भी करा तो अब जब तक वापस 25,870 880 के ऊपर मार्केट वापस सस्टेन नहीं करता प्रॉपरली 15 मिनट में और ऊपर एक्सपेक्टेड नहीं है, ये लेवल अब रेजिस्टेंस की तरह काम करेगा 25,870 टू 880। यहाँ पर प्राइस एक्शन कैसा है देखना पड़ेगा, नहीं तो फिर यहाँ से वापस सेलिंग ही करेंगे। लेट्स सी क्या अभी यहाँ रिवर्स करता है या फिर थोड़ा और गिरता है। वैसे ऊपर लिक्विडिटी है तो एक बार जाना चाहिए 25,870 880 रेजिस्टेंस लेने। फॉल करता रहा निफ्टी तो देयर आर चांसेस, ठीक है। प्राइस देखो या तो ऊपर फ्यूचर की बात करें 25,878 80 पर रेजिस्टेंस मिल सकता है, बीच में अभी और मुझे कोई सपोर्ट दिख नहीं रहा है, गैप है वो हो सकता है फिल करने जाए। अदरवाइज वापस जहां लास्ट ट्रेडिंग से जो डील हुई थी यूएस और इंडिया के बीच में उससे पहले का जो ट्रेडिंग लेवल था हो सकता है वहीं वापस आ जाए 24,800 फ्यूचर में। मार्केट के पास अपॉर्चुनिटी थी ऑल टाइम हाई जाने की बट आई थिंक इट मिस्ड इट। कल अक्रॉस द एसेट्स सारे के सारे फॉल किए हैं, यूएस मार्केट, क्रिप्टो, मेटल्स, इंडाइसेस। ये थोड़ा मोमेंटम आया है नेचुरल गैस में, ये पॉइंट ऑफ इंटरेस्ट जो कल का लो था उसके नीचे निकल गया है, ठीक है। एक्सपेक्ट करेंगे जो कल का फाइनल टारगेट था वो मिले, मैं ऐसे एक्सपेक्ट कर रहा था गैप डाउन होगा, हुआ नहीं, हो जाता तो बेटर था मार्केट में, ठीक है। ये पॉइंट ऑफ इंटरेस्ट के नीचे निकल गया, इसकी जरूरत नहीं है, आप इसको रिमूव कर सकते हो, ठीक है। यहाँ तक का एक टारगेट है, फाइनल टारगेट 281.5, यहाँ पर देखते हैं प्राइस एक्शन कैसा बिल्डअप होता है, कोई नया सपोर्ट ना बने तो बेटर है, ठीक है। नीचे फिर हमारे पास वही 270 272 के आसपास का एक मेजर सपोर्ट है, मल्टीपल टाइम टेस्ट हो गया बट अभी तक ब्रेक नहीं हुआ है, तो देखेंगे वहां पर वापस आएगा तो बाई करेंगे, कैंडल ओपन इक्वल टू हाई ना बने उस लेवल पे बस, ठीक है। मार्केट स्ट्रक्चर देखोगे थोड़ा सा बेरिश साइड पर ही है अनटिल अनलेस प्राइस वापस 300 के ऊपर सस्टेन नहीं करता, 270 के नीचे अगर गया प्रॉपरली ब्रेक डाउन करता हुआ तो फिर हम थोड़ा सा ज़्यादा ही बेरिश हो जाएंगे, 250 के अराउंड पॉसिबिलिटी है वहां तक भी चला जाए प्राइस। लास्ट टाइम देखोगे उस लेवल पे प्राइस आपका अक्टूबर के आसपास आया था, तो 5-6 महीने के बाद उसी लेवल पे वापस, जहां से रिसेंटली रैली आई थी मार्केट 250 से 600 चला गया था। बाकी अगर सस्टेन करता है 270 जोन के अप्रॉक्सीमेटली, तो फिर एक पॉसिबिलिटी है कि एक डब्ल्यू पैटर्न बनाने की कोशिश करे प्राइस। इसी लेवल के आसपास रहे तो बेटर है मेरे अकॉर्डिंग, एटलीस्ट 250 270 से ऊपर और 350 450 के बीच में, बिकॉज अगर 250 के आसपास चला गया तो फिर वहां पर इंट्राडे में मोमेंटम बड़े कम छोटे हो जाते हैं। ठीक है, 5-6 पॉइंट का ही मोमेंटम आता है इंट्राडे में, कोई बड़े मोमेंटम आएंगे नहीं, विच इज़ नॉट गुड। एटलीस्ट 300 के ऊपर सस्टेन करता है 300 टू 400, तो इजीली वी कैन एक्सपेक्ट 10 टू 15 पॉइंट मोमेंटम। बट अगर ये 250 के नीचे सस्टेन करने चला गया तो फिर प्रॉब्लम हो जाएगी, याद रखना मोमेंटम उतना होगा ही नहीं। देखोगे 300 के नीचे है तो इंट्राडे में नॉर्मली जो मोमेंटम हो रहा है 10 से 12 पॉइंट का हो रहा है, 250 के नीचे गया तो और कम हो जाएगा ये मोमेंटम। 300 के नीचे ऑन एन एवरेज मोमेंटम 10 से 15 पॉइंट ही होता है। मेजर डेटा है, ध्यान रखना, यूएस का सीपीआई का, इंडिया का तो कल आ गया है सीपीआई का डेटा, इन्फ्लेशन का डेटा। यूएस इन्फ्लेशन का डेटा है, इंपॉर्टेंट रहेगा आज कितना आता है यूएस इन्फ्लेशन, कोर सीपीआई और नॉर्मल सीपीआई का डेटा। और कोई डेटा आज तो है नहीं, मंडे को वॉशिंगटन डे है तो यूएस में शायद मार्केट क्लोज रहे, वहां पर वॉल्यूम थिन रहेगा, तो कॉमोडिटी देखना पड़ेगा वॉल्यूम आता है नहीं आता है मंडे के दिन, मोस्ट प्रॉब्ली नहीं आएगा शायद। वॉशिंगटन डे बैंक हॉलिडे इन यूएसए।
So, you mentioned, clean technologies before, where China, if you're looking at,
The MXAP index yesterday at an all-time high, today pulling back a little bit. This CSI 300 also down by 0.7%. We got the home prices data from China, not looking very pretty. Used home down as well, but at a slower pace than before. So that's a little bit of a relief. And it looks like the Nikkei as well taking a breather from that Takaichi trade. It seems even the yen slightly weakening today. But the Kospi though, it seems like Teflon, right? Still pushing higher. It seems like Samsung inexplicably continuing to push higher today, and it seems like the Korean market has been pretty insulated from the tech sell-off in the US, perhaps because some of these tech stocks in Korea tend to be higher up in the value chain, more concentrated around the hardware rather than the software.
Yeah, Kospi, lone spot of green, Min Low in Hong Kong. Thank you so much. Joining us for more market insights is Sebastian Page, Chief Investment Officer and Global Multi-Asset Head from T. Rowe Price. Good to have you in the region.
Thank you.
Let's start with the tech route that we're seeing. What do you think is going on?
It's interesting. We're moving from the trade where everyone's interested in the AI build-out to everyone's talking about the AI beneficiaries, those that are going to have huge productivity gains, to the AI victims. And I think this trade could continue for a while. And you know what? We're not too worried about it. In our portfolios, we're actually barbelling our U.S. exposures between growth stocks, which have come down, and that's more of a contrarian play, and value stocks. And we actually underweight the core, stocks that have run up, but that have nothing to do with the AI build-out.
So could we be in an environment where AI stocks or AI victims, so to speak, continue being revalued by the market, but at the same time reevaluated by the market, but at the same time other parts of the economy actually do quite well.
Absolutely. And we could continue to see the volatility in the AI victims while the economy in the U.S. is looking pretty good, Jumana. It's on a nominal basis, probably growing at around 7% right now.
Yeah.
That's higher than any calendar year between the great financial crisis and COVID.
Yeah.
That is solid growth. The U.S. administration wants solid growth into the election, and they're going to pull every lever they have. So AI stocks volatility is one thing, but the U.S. economy is doing just fine right now.
So what, you buy small caps then?
We are long small caps. For small caps to perform, you do need the short rates to come down. You know, those companies, they borrow short term, and when the cost of short-term borrowing comes down, it flows directly through their bottom line. That's why over the last few years, every time you get Fed dovishness, you see small caps outperform.
Yeah.
But they also need positive growth. But not too high growth, because then the Fed's going to step back. So there's a channel where small caps do well.
Goldilocks, yeah.
It's Goldilocks.
Or you maybe get 1 or 2 interest rate cuts out of the Fed this year, but the outlook is still pretty robust for the U.S. economy.
Exactly.
So are you not worried about portfolio effects, like what I was just saying at the top of the show? You know, gold, surprisingly yesterday, people selling down and trimming down in their portfolios. There's so much concentration around these AI stock plays. And I do wonder that if we continue to see moves of this magnitude, there will be certain knock-on effects to other industries, not necessarily because they're getting a hit to bottom line, but because they're in people's portfolios.
Yeah, because they're the victims. Markets right now are close to historical highs in concentration. From an asset allocation perspective, we are long diversification. We like non-U.S. value stocks. We just talked about small caps. I think if you look out 6 to 12 months, the markets will continue to broaden. This doesn't mean the AI theme is over. It just means that diversification will, I think, do well if we get a down market, which is supposed to do, but also on the upside. So I like the asymmetry of being long the broadening. On gold, Jumana, it's been such an interesting trade. It went up 130% in 2 years. It's come down a little bit. I'm kind of a correlation nerd. I've studied correlations. I've published articles on correlations. In the last 12 months, you saw all sorts of strange correlations.
Yeah, okay, so let me bring you another correlation one, since you're looking at that space. What is going on between Asia-Pacific stocks versus the U.S.? The correlation there has completely broken down. And, you know, day after day, we've been talking about the massive outperformance of the MSCI Asia-Pacific, some of the specific chip maker indices, the KOSPI. Why do you think that is going on?
Historically, when the U.S. market does not do well, it really propagates to the rest of the world. If you're seeing lower correlation, in my mind, it's because you have better relative valuation opportunities outside the U.S. and a convergence of earnings growth. You have an opportunity for earnings growth to accelerate in Asia-Pacific, all over the world, relative to the declining, still fast-growing, but declining rate of growth of the U.S. large-cap growth companies. So not only do you have a valuation advantage, but you also have a convergence of fundamentals. So that should help, and it's possible that you'll get. So, like last year in U.S. terms, non-U.S. stocks outperformed by 10, 15% the U.S.
Yeah. I want to round up with a question just addressing the fact that you are in the region. What are the types of discussions that you've been having with investors here? I mean, are they concerned about what's happening in AI space? Are they buying the dip?
Fascinating discussions with investors all over the Gulf region. They're really still interested in private markets. The amount of capital being deployed in this region is staggering. The economies are growing well. Inflation is not a problem. There's a lot of employment. There's a lot of traffic, too. I've learned here in Dubai. I got stuck in traffic yesterday. We got stuck in traffic in Riyadh. But that's dynamism. I would say generally my discussions with large investors here, they're optimistic for the future. It's a positive vibe I'm getting.
Yeah. Good. We like positive vibes. Sebastian, thank you so much for coming on.
Thank you.
Sebastian Page, T. Rowe Price, CIO and head of Global Multi-Asset. Well, I'm going to bring you some breaking news. This is coming through from the FT. Let me just say, the U.S. seemed to be weighing a plan to roll back some aluminium and steel tariffs. So this is interesting, which would be obviously have a notable impact on some of the metals that had been impacted by restrictions in this place in the run-up to the imposition of those tariffs. The approximate effective tariff rates as they stand right now for aluminium, iron and steel are around 40%. So we don't have more details at this point as to how much of the tariff rate will be rolled back. But what we do know from this FT article is that the U.S. is considering undoing some of them. So we will bring you more developments on that if we hear more details. Now for a look at some of the other stories we're following today. Washington and Taipei have finalized a trade deal to cut tariffs and boost market access for U.S. products in Asia. Goods from Taiwan will now face a 15% tariff, with some exceptions for tech and pharmaceuticals. Taiwan's pledging to buy $44 billion of U.S. energy and further open its markets. But uncertainty remains over Taipei's promises to invest hundreds of billions in U.S. chip making. President Trump says he can see negotiations with Iran stretching for as long as a month as he seeks a diplomatic agreement that would roll back Tehran's nuclear ambitions. He also says it will be very traumatic for Iran if it fails to reach an agreement. Trump's comments came a day after he met with Israeli Prime Minister Benjamin Netanyahu at the White House.
It's ultimately up to me. If the deal isn't a very fair deal and a very good deal with Iran, then it's going to be I think a very difficult time for them. I'll talk to them as long as I like, and we'll see if we can get a deal with them. And if we can't, we'll have to go to phase two. Phase two will be very tough for them. I'm not looking for that.
And coming up, the U.S. Energy Secretary says Venezuela is happy to have America's help in rebuilding the oil sector. We hear more from Chris Wright next. This is Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jumana Bersecci in Davos, Switzerland, and this is Bloomberg.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Welcome back to Horizons Middle East and Africa. I'm Joanna Bersecci in Dubai. Bloomberg has learned Venezuela plans to grant more oil production land to Chevron and Repsol. Sources say officials in Caracas are preparing to award the exploration and production blocks as soon as this week. U.S. Energy Secretary Chris Wright has toured a project operated by Chevron in Venezuela's Orinoco oil belt. Washington's pushing for private companies to rebuild the nation's energy sector. Now, the U.S. Energy Secretary also says that Venezuela's acting president, Delcy Rodriguez, is happy to have America's help in rebuilding the oil sector. Wright is the most senior U.S. official to visit since the capture of former President Nicolas Maduro, and he told us there's reason to be optimistic about Venezuela's desire for reform.
The last 5 weeks have shown absolutely yes. We've worked very careful with interim President Rodriguez. She's made enormous changes very rapidly, starting January 5th. We already see a better business climate for Americans. We see smiles on Venezuelans' faces. We see local businesses here now optimistic about their future, talking about a return flow of Venezuelans if things continue on this path. So yeah, I think great optimism.
The president at one point said the U.S. was in charge of Venezuela. What does that mean on the ground practically?
I think it meant that 20-plus years of failed diplomacy have failed to change the trajectory of Venezuela. And now, with, again, a very groundbreaking approach, we have so much influence over Venezuela that we're able to nudge things in the right direction, maybe more than nudge. But I think we're aligned. What's in the best interest of interim President Rodriguez is to enhance the lives of Venezuelans. As society opens up and moves towards democracy, you got to be popular with the people.
Some might hear nudge and think leverage. What kind of leverage potentially does the United States have and is using?
The big leverage we have is we're selling the oil that's produced and exported from Venezuela. This has big advantages for Venezuela as well. We're getting more than 50% higher dollars per barrel for the sale of that oil. We're removing a lot of the corruption that was associated with that, and we're able to direct those funds to the government and people of Venezuela, but we have discretion about continuing to direct those funds. It forces us into a partnership to drive improvement in Venezuela and improvement in American-Venezuelan relations.
Chevron, where we are, has been in this country for 100 years, so they're ripe potentially to expand production. But what about others? Are you going to be releasing new licenses for oil companies to produce in Venezuela and expand production?
Absolutely. We've already released a general license for all American and, in fact, international oil and gas companies to come down, meet with officials, investigate possible deals, and then just come back to us when they have specific deal terms. We're releasing soon licenses that's going to allow the import of parts and services, so giant oil processing facilities like we're here can be upgraded and modernized.
Any new licenses or deals that potentially could be announced or that would be coming out of this trip specifically?
Well, Chevron is being enabled to massively grow their business here. They're the largest producer in Venezuela today, and they're going to be able to both expand the reserves they have and expand their operations. We're going to see a pretty good clip in rising Chevron production over the next 18 to 24 months in Venezuela. They're just one of many, but they're going to be a big one.
U.S. Energy Secretary Chris Wright speaking with Bloomberg's Anne-Marie Hordern in Venezuela. Now, coming up, South African President Cyril Ramaphosa vows to accelerate reforms to boost growth and attract investments. We'll bring you that story next. This is Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time,
helping to translate the policies from Washington into actionable ideas
for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise.
With some fun along the way.
This is Bloomberg Surveillance.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Dubai. Ghana is moving to revamp its cocoa pricing system after a steep drop in global futures. The Ghanaian finance minister said the government wants to link prices more closely to international markets, allowing automatic adjustments when prices rise or fall. For the remainder of the season, the price paid to farmers has been reduced by nearly 30%, with state purchases set to resume at the revised rate. Congo has returned to the Eurobond market for the second time in 3 months, selling new debt maturing in 2035. The government priced the bond at a lower yield than its debut sale in November, aiming to take advantage of improved market conditions. According to Congo's finance minister, the offer received more than $2 billion of orders, with strong demand from a diverse base of international investors. Zambia's local bond market is seeing foreign investors pile in after authorities lifted a cap on non-resident participation in debt auctions. According to the central bank governor, foreigners accounted for nearly half of purchases since the limit was raised. The higher participation limit gives foreign investors room to roll over holdings maturing this year by reinvesting in government securities, easing refinancing pressures for the government. And the South African President, Cyril Ramaphosa, has pledged to accelerate reforms aimed at boosting growth, attracting investment, and improving government efficiency. In his State of the Nation address, he pointed to progress on infrastructure, stabilizing debt, and rising investor confidence. Our chief Africa correspondent Jennifer Zabazaja joins us from Johannesburg. So no surprise that the president struck an optimistic tone, and certainly that's been the key, I guess, macro discussion around South Africa over the last 6 to 9 months. What was the key focus of his speech last night on upcoming priorities?
That's right, Jumana. This was quite a lengthy speech for President Ramaphosa, clocking in at just about an hour, 45 minutes. And as you mentioned, yes, unlike past speeches, which have really focused in on a lot of the crises that this country has faced, a lot of the speech was spent focusing in on some of the optimism that we have seen within the macroeconomic setting and the backdrop here. And we heard that from President Ramaphosa. He talked about how we have seen inflation come down to the lowest levels that we've seen in almost 2 decades. He talked also about how we're seeing 10-year government bonds have dropped as well. And he also focused in on how we've seen consecutive growth of the economy, GDP growth, and a number of analysts have also pointed to that. And so you can tell that he was having quite a bit of fun just focusing in on that. And it seems like, especially with this new government of national unity, there was a bit of sigh of relief that there is a bit of stabilization in the economy. But yes, as you're mentioning there, a lot of the focus, though, is on what is ahead, because there is no silver bullet to a lot of the challenges that this economy still faces, which he did acknowledge. Unemployment is still just about 30%. And some of the reforms that analysts and investors are hoping for here in this country, they need to move faster. And so the president talked about the focus on accelerating the improvement and the building of infrastructure. So he focused in on roads, bridges, dams, of course, ports, which is very important for South Africa. Yeah. He also brought up this idea of reviving the property market. And still, you know, I think what was very interesting is that there still is, I think, a macroeconomic backdrop that looks like stabilization, but the lived reality is still not being felt. And so he acknowledged that there's quite a lot that needs to be done from a national level, that the local governments, in his words, have not really been able to tackle, water being one of those issues.
Okay, let's talk about electricity. Eskom also coming up. What did he say about the utilities restructuring? Obviously, this is a long-standing issue or challenge for South Africa.
Yeah, of course. And fortunately, it was not about load shedding, but the bringing up of Eskom was, in fact, this idea that they would create this independent power transmission company, which actually counters what many people had been expecting and what Bloomberg had been reporting in the past. And President Ramaphosa actually brought up just about 5 or so years ago the idea of breaking up Eskom into 3 separate companies. Many people looking from the outside thought that this would be a better idea for competition and also for operating the electricity market, especially given some of the challenges that we've seen in the past. But now this new entity that President Ramaphosa brought up said that he said that it will have ownership and control of transmission assets and be responsible for operating the electricity market. The concern here, though, is that, as I mentioned, it doesn't create separate entities. So what does it do for South Africa's enabling of and moving towards this just energy transition partnership, which is backed by the EU? How does it help South Africa phase out of coal? And also, what does it mean for some of the debt issues that Eskom has had in the past? We don't know those answers yet, but this is the latest that we did hear on Eskom from the president last night.
Jen, thank you so much for bringing us some of the highlights from that State of the Union. Jennifer Zabazaja, our Chief Africa Correspondent in Johannesburg. Well, coming up, we speak to the CEO of Talabat as it reports a 15% jump in profits year on year. We'll discuss the regional food delivery giant's plans for 2026, as well as consumer trends next. This is Bloomberg.
Peru is maybe first country inspired to me to how can I use the different ingredients. First time I went to Peru, trying to culture food. I never had this ingredients never used in Japan. Kind of like a wow, you know, and cilantros, chili, garlic, and olive oils. It's a lot of good seafoods, complete a different way. Example, they have the fresh fish, but Japan, the fresh fish uses sashimi. But Peru use fresh fish, make the called ceviche, cooked with the lemon juice. You never use the soy sauce. First time I eat this, kind of wow. So then after this one, my open eye more, my cooking style that change, combine to Japanese style and another country food, then make novel style.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Taking fright, Asian equities track the drop on Wall Street as the AI scare trade rolls on. The sky is the limit. The U.S. Energy Secretary says he sees tremendous potential for U.S.-Venezuelan cooperation as the Trump administration pushes for private companies to rebuild the nation's energy sector. Plus, we speak to the CEO of Talabat as the UAE delivery giant posts full-year earnings. It's just gone 9:30 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. Well, a pullback for Wall Street and also in Asia today. So ending the week on a negative tone. Obviously, in terms of data to watch out for, CPI data in the U.S. is what people are going to be paying attention to. But in the interim, what we are seeing is this tech rout. The AI sell-off continues, and not just to software names, as we were speaking about last year, but really any industry that is seen to be an AI victim. We spoke about wealth management yesterday. Today, also the focus on logistics, trucking, U.S. trucking getting hit as well. So those are some of the themes that are emerging from the U.S. session. Today, S&P futures stabilizing somewhat, but still leaning towards red, down 0.2%. NASDAQ down 0.2%. We saw a real big pullback. The likes of Apple down 5% yesterday in trading. 10-year yields, because of this risk-off move, we saw investors piling in to fixed income. We rallied about 8-9 basis points throughout the course of the day yesterday. We're actually at the lowest level for 10-year yields in the past year, sitting just over 4.10 now. Markets is still pricing in around 2 rate cuts for 2026. And then gold rebounding a little bit this morning, but still shy of $5,000, up 1%. And yesterday, interestingly enough, I spoke about this earlier in the show, with the sell-off that was taking place, we actually saw gold come off as well, which is strange. Typically, the safe havens would do well, and speaks to perhaps of investors trimming positions after sustaining losses. So you sort of sell your winning positions to compensate for the losses in other parts of your portfolio. And switching over, I did mention disruption, AI disruption. This is the impact that yesterday's... oh, no, this is a different one. Apologies. This is actually a setup for our next segment. Emerging markets continue to do well, and this is sort of a break in the correlation between some of the price action that we've seen in the U.S. this year versus other markets. We've been obviously speaking a lot about the massive outperformance of the Asia-Pacific index, the MSCI Asia-Pacific, but then you're also seeing a tremendous performance in some of the African stock exchanges, the Johannesburg Stock Exchange, and in a short while, we're going to be speaking about Oman as well. So lots of these emerging market indices are doing quite well. So something to bear in mind. Now, a recap also of breaking news that came out at the top of the show. And just to tell you that this could potentially be quite market moving. According to the FT, the U.S. is weighing plans to roll back some aluminium and steel tariffs. And here you can see that the approximate rate on aluminium as it stands right now is around 40%, iron around 40% as well. Other tariffs slightly lower. But the point is that it seems as though the U.S. administration is having a rethink because of a fear that U.S. consumers are beginning to complain about the state of the economy and paying for higher prices. And remember, this is going to be quite a political year with the midterms coming up. So you have to wonder whether that also got factored in to this decision. Nothing is confirmed yet, but this is a report coming through from the FT that the U.S. administration is reconsidering or perhaps lowering or softening the tariff rate on some of these key commodities. Right, let's turn to earnings now. Food delivery giant Talabat has reported full-year adjusted profit of $451 million. That is a jump of 15% year-on-year. The Dubai-headquartered firm plans to invest $100 million this year to grow its subscriber base across its verticals. Joining us now is the CEO of Talabat, Ton Gijsels. Really good to have you with us on the show. Maybe let's just start out with a look back at the year and whether you're pleased with Talabat's performance and the jump, your full year adjusted net income, $451 million versus $393 the year before.
Look, thank you for having me, Jumana. 2025 was a very strong year, strong growth, strong profitability, and we're also returning some of that capital to our investors. We're proposing to the board a dividend of $421 million. that will be approved by the AGM in May. So it was a very strong year with actually accelerated growth.
Yeah, well, this is the first time I speak to you in your role as CEO. How are your priorities going to be different from your predecessor?
So I think the foundation that Talabat built is very strong, right? It's a leader across all our markets. And what I bring, so I've been at Talabat before, so I know the business. Afterwards, I spent time early stage, and I bring some of that early stage focus energy back, because we're going to build the future for Talabat beyond food. Right? Talabat will become an everyday app. And we already have great traction in grocery, but the coming year we'll also be investing in building new verticals. In H1 alone, we'll build 3 new companies that we start. So it's actually really positioning Talabat beyond food as that everyday app.
So that $100 million that you've set aside for investment, where is it going to go to?
The bulk of it will go to the grocery segment. In groceries, we see accelerated growth now hitting 48% year on year, and we need to build the capacity for the future. Right? So we have Talabat Marts, which are our integrated verticals, our grocery dark stores. We need to build out that network to cope with the demand in the future. That's where the bull goes. Also, part goes to the subscription program and the ecosystem, and then these new ventures as well.
Yeah, I think lots of people have questions about competition in the space. You have competition coming thick and fast from China. Meituan is expanding quite rapidly in the region. How are you countering it?
So you see in the Q4 results that actually our growth is very robust. What we see competition impact is our low value segment. Right? These people are a bit more sensitive to discounts, but our high value customers, which represent 81% of GMV in the competitive markets, they're extremely sticky. And actually their frequency is increasing by 6% year on year. And that's not just because we have the best offering on food, but also because of that ecosystem and the groceries.
But it's not just about GMV, right? It's also about your pricing power. And I think, you know, if you can give us visibility on your pricing margins for this year in the context of that much competition, that would be quite useful.
So you see Q4 results, EBITDA is flat compared to Q3. So we're able to defend that quite well. What we're doing for 2026 is we're going to invest half a percentage point of margin to really strengthen that food position as well.
Yeah. And in terms of the strategies to maintain or increase your market share, what is the plan?
So our strategy is really becoming that everyday app and making sure people further increase their frequency. Today they're already a lot, but what we see people coming on a subscription program, for example, they uplift their frequency by 28%. So it is building that ecosystem, building additional verticals, and then the customers, they become extremely sticky to Talabat.
Yeah. So right now, if you look at the stock, it is actually trading at a discount to your peers. What do you think investors are not pricing adequately about the forward growth profile of Talabat?
So I believe that the investments we announced for 2026, right, it's a bit of a trade of short-term gains versus long-term value. And we're very confident on making these investments. And it's not new to Talabat. When I first came to Talabat, it was a marketplace model, and the world was marketplace. Actually, people didn't believe in delivery. It was my first priority to build out that delivery. And so we made these investments back then, which sacrificed short-term profits for long-term gain. So we're doing the same now, and we're building Talabat for the future.
How does your market share today compare to what it was like a couple of years ago?
Today, we are still the leader in all of our markets.
Yeah. Do you plan to expand into other geographic locations? Or are you happy with the ones that you are?
We have a lot of growth left in our areas, but we are always looking at further expansion. Last thing I did at Talabat before was the expansion to Iraq, and it's something we should keep on our radar.
Yeah. And where would you say, in terms of geographic growth purely, where is the fastest growing region in the GCC right now?
For us, that's Egypt.
That's Egypt.
Egypt, we still have so much growth potential. It's a huge population as well. We see great opportunities there.
Okay. So looking ahead, when you think about the integration of all of the verticals that you speak about, how are you weighing investments in your business versus potential shareholder return?
We are sticking to the dividend policy, what we said at IPO. So we'll pay out 90% of net earnings, which we continue to do. And I think that's the right balance, where we can continue investing above net profit, which we're doing, but we stick true to that policy to have the right balance, short-term, long-term.
Oh, great, sir. Thank you so much for coming on our show. That was Toon Huysels, Talabat CEO, on the day of earnings. Now, Omani stocks are heading for their best week in more than a decade as optimism builds that the Gulf bourses push to be classified as an emerging market will unlock fresh investor inflows. The rally reflects growing anticipation that Oman could secure an MSCI upgrade as trading volumes improve and a spate of recent listings deepen the market. Joining me now is Laura Gardner-Cuesta, Bloomberg's Middle East Equity Capital Markets reporter. Well, we don't speak about Omani stocks that often, but perhaps we will start speaking about them a lot more. What's been driving the upswing?
So the rally actually started sort of mid last year. It was just like in this week, it's really like kicked off. But it's this story, like you said, the inclusion into emerging market indices that is really driving the rally. And I think people are seeing how serious the authorities are about this. There's been a lot of market makers and liquidity providers added to the market, which is obviously improving liquidity. They're really going on the road, meeting investors, saying, hey, we're here. And I think it's also a bit of a, like, the rally feeds the rally, right? Because to be on the emerging market index, it's market capitalization is a big part of that. So, of course, like the rally increases the market cap, which in turn makes it more likely to be part of the index. So it's a bit of a virtuous circle.
What is the read across for potential IPO listings? Was it last year or the year before? I've lost track of time where actually they secured the largest IPO of the region.
Yeah, so it was 2024. They had a record. Yeah, they had a record year. They surpassed London in listing volumes. The problem is those IPOs didn't actually perform for around 6 months. So they really struggled. So it kind of put the brakes on the privatization program. But right now, with this rally, there's a few listings in the pipeline. There's a fertilizer business, and obviously this is like a big boost for them. So we'll see.
Laura, thank you so much. Laura Gardner-Cuesta, Bloomberg's Middle East Equity Capital Markets reporter. Thank you. Now for a look at some of the other stories we're following. Saudi Arabia has appointed Fahd al-Saif as its new investment minister, tasked with drawing more capital into the country. Al-Saif replaces Khalid al-Faleh, who served in the role since 2020 and will remain in the cabinet as Minister of State. The appointment comes as the kingdom reviews its policies and spending priorities amid fiscal pressures and seeks to accelerate its agenda to diversify the economy beyond oil. Egypt has cut interest rates to their lowest since mid-2023 and trimmed the reserve ratio for banks to spur business borrowing and speed an economic revival. The central bank reduced the benchmark deposit rate to 19% and the lending rate to 20%. The move aims to safeguard the effectiveness of monetary policy transmission and free up liquidity to support credit growth. Now, coming up, allies pledged $35 billion in military aid to Ukraine ahead of the security conference this weekend. We're live in Munich with more details next. This is Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Bringing you up-to-the-minute geoeconomic news whenever and wherever it happens. I'm Vonnie Quinn in Sao Paulo, Brazil, and this is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. UK Defence Secretary John Healey says allies have pledged as much as $35 billion in new military aid to Ukraine to strengthen its air defenses. That's after a series of Russian airstrikes on energy infrastructure and civilian targets. It comes ahead of the Munich Security Conference this weekend, where U.S. Secretary of State Marco Rubio says he expects to meet with Ukrainian President Volodymyr Zelensky.
I think so. I think he's going to be there, and there's a chance to see him. I believe it's on my schedule. I'm not 100% certain, but I'm sure we will. It's terrible. It's a war. That's why we want the war to end. People are suffering. It's the coldest time of year. It's unimaginable, the suffering. That's the problem with wars. That's why wars are bad, and that's why we've worked so hard for over a year now to try to bring this one to an end.
Let's go over to our chief European correspondent, Oliver Crook, who is in Munich. Ollie, so talk to us about this $35 billion commitment. Who is committing it, and why is it important for Ukraine right now?
Yeah, so apparently this is going to be new money that is going to be pledged in the form of $35 billion. It's going to be headed by the Germans. This was announced alongside, as you mentioned, the UK and, of course, NATO Secretary General Mark Rutte. And the ambition here, Jumana, and this is what the Ukrainians have been asking for a very long time, for the last few months, is air defense. Their air defenses are really sort of hollowed out at this point. They're not able to intercept nearly as much as they have been able to in the past. And the Russians, of course, have been absolutely devastating their entire energy infrastructure. We've been talking about it over the last few months, Jumana, but it bears, I think, repeating that you have hundreds of thousands of people across Ukraine, within Kyiv, who are without electricity, often without heat, and getting temperatures that reach as low as -20, -23 degrees throughout the day. So this is the sort of immediate concern that the Ukrainians are facing every single day. And this is in part because, of course, over the last year and the many changes that we've had since Trump has become president of the United States has not given any more sort of free support to the Ukrainians. They do sell some of these systems, but many of these sort of cruise missiles and the higher velocity munitions that the Russians send over can really only be stopped by American air defense and these Patriot systems. So we understand that from this package, it's not yet been fully okayed by the capitals. What they're looking to get is 35 of these Patriot batteries. 5 of them will be pledged by the Germans. The Germans say if they can get those extra 30 from elsewhere. So this is going to be a very welcome relief for the president of Ukraine, Volodymyr Zelensky. He'll be arriving here in Munich in due time over the next couple of days to have very important meetings with, potentially, as you say, Marco Rubio.
Well, I was going to say, in the introduction, we were talking about the presence of the U.S. Secretary of State. And, of course, the state of that transatlantic relationship is under big question mark. It got a bit testy during Davos this year. Surely that's got to be a focus of the conference. What else is on the agenda?
Yeah, Jumana, it's hard to sort of know where to begin with this, right? Because over the last sort of 12 months, let's just take us back to Munich security of last year. That is where basically the Trump administration, in their sort of large numbers, left the country for the first time and gave the world a dose of what MAGA foreign policy would look like. And that dose came in the form of a speech by Vice President J.D. Vance, in which he proclaimed in front of these sort of crowds over here that the greatest threat to Europe was not Russia, it was not China, it was the threat from within. He was saying that basically liberal kind of woke values are a bigger threat to Europe than any of these other adversaries. That, of course, when I was talking to people after that speech, a few world leaders included, they were pretty shocked and really didn't know what to say about that. And over the last 12 months, we've really seen that policy come into focus. So I think we could take a couple of things here. First of all, J.D. Vance will not be here this year. Potentially that is some kind of message. Marco Rubio is seen as a more sort of traditional ally of these sort of traditional values and the traditional sort of, shall we say, alliances and antagonisms that the United States has had through the years. So that is potentially an encouraging sign. But as you say, Jumana, at the end of the day, since the sort of Greenland incident earlier this year in Davos, the trust has been fundamentally broken here from the Europeans. So the conversations that I will be having with a number of people, including the German defense minister, is they need to reevaluate everything they thought they knew about the transatlantic relationship. And one of the questions that is most difficult on, Jumana, is the question of the nuclear umbrella. And that is one of the conversations we're going to have to advance. Can Germany really be the strongest defense force in Europe without a nuclear umbrella, for example? Those are going to be some of the conversations we're having with policymakers here.
Really looking forward to your coverage, Ollie. Thank you so much. Oliver Crook, our chief European correspondent in Munich. Well, coming up, Dubai's ultra-luxury property boom shows little sign of slowing. We'll bring you the story next. This is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Goldman Sachs' top lawyer, Kathy Rumler, is leaving the firm following the release of documents showing her links with sex offender Jeffrey Epstein. In a statement, CEO David Solomon says he respects her decision to resign, and Rumler was hired by Goldman in 2020 and later became its legal chief. The bank has said she disclosed to the firm's leadership at the time that she had previously dealt with Epstein. Citigroup has boosted the 2025 pay of its CEO, Jane Fraser, to $42 million. The 22% increase follows a year which saw the stock surge more than any other Wall Street bank. The pay bump also puts Fraser's total package for the year just $1 million behind that of JP Morgan's Jamie Dimon. And Dubai developers see the luxury property boom continuing in 2026. Developers like H&H Development are betting that global demand for high-end real estate will stay strong even as concerns about oversupply and geopolitical risk linger. For more, we're joined by Bloomberg's Zainab Fatah. So what is driving demand still at the ultra-luxury segment of the market? When we talk about ultra-luxury, define what that means, really.
It means homes that me and you can't afford, $10 million or above.
Speak for yourself. Exactly. I'm kidding. But tell us, what's driving this demand?
So Dubai is really have been for about the past 5 years setting the standards in luxury development. And this is a city that back in 2010, they barely had 3 transactions in that category. Last year, they had 500 transactions in that category. Wow. And it's been on skyrocketing. And that's because there is an influx of very wealthy people coming to Dubai.
Still.
Yes, exactly. Continuing since 2020 when we saw Russians and Ukrainians come to Dubai. And this has continued, and now we're seeing a different influx coming from basically the UK with the non-doms change there, and we see a lot of people coming from other European capitals because of, tax structure is really, really helpful.
And Zainab, what's the proportion of hotels versus residences at this segment of the market?
So the hotels are usually here operated by a lot of the owners and a lot of these brands. So we're talking Four Seasons, Aman is coming up, Janu, Baccarat, and others. But at the same time, there are serviced apartments that tend to come part of these hotels, and they have top-of-the-line amenities, and they're proving to be a very big draw for the millionaires and billionaires of this world who are coming here.
I remember last year we spoke to the analyst who put that UBS report out about the risk of oversupply in the Dubai market. What is the feeling amongst developers that, at some point the good times might come to an end?
Well, we've been there before. 2 years ago, we were talking about oversupply and the possible correction. It haven't happened yet. But what's happening in the market, it's a two-speed market. On the very top end, we still have an undersupply of the top-tier properties, and you're still seeing developers able to sell penthouses for $150 million. Some are, going to levels that we've never seen in years. Wow. At the same time, at the wider market, we see expectations that oversupply, we might be facing oversupply in 2027, 2028. But when you talk to developers, they say to you, this is not going to happen because the capacity constraints among a lot of the contractors, it's going to mean that a lot of the supply is going to be phased over several years from there. And if the influx continues and people keep moving to the city, you may not end up with a big correction, even though Fitch warned that a moderate correction could be happening in 2026. So far, what we see that rents in the overall market have stabilized, so landlords are not able to charge, they kind of feel they got to the limits of the market, and values are slowing down, so you're not seeing price increases like we did a few years ago.
So it's still growing, but at a slower rate, essentially. Exactly. It's growth moderation. Zainab, well, thank you for that. And عقبالنا to buy the 10 million plus house. Bloomberg, Zainab Fatah. All right, let's check out the equity boards as we head out for the final trading session of the week. CPI in focus for U.S. investors later today. It's going to be a market move. We had jobs reports on Wednesday, surprising to the upside. And of course, if we do get a hotter than expected CPI print, that just adds fuel to the fire that perhaps the Fed don't need to be cutting interest rates this year. But the big theme has been the AI sell-off this week, and not just among software stocks, but also other parts of the economy that are getting hit as well. Wealth management, logistics, trucking, all in focus. Red on the board, red handover from Asia Pacific. European markets look like they're going to open up in the green, and keep an eye out on geopolitics this weekend with the Munich Security Conference. Bloomberg Television is on the ground there, so we'll bring you some of those interviews on Monday. But that's it for our show. Have a lovely weekend. Daybreak Europe is coming up next.
A cidade estava sitiada.
Nisso eu começo, eu tremia, não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being a billion-dollar business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
bringing you up-to-the-minute global news whenever and wherever it happens. I'm Hazlida Amin in Davos, Switzerland, and this is Bloomberg.
Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. It's Friday the 13th and the AI scare trade frightens another sector, with logistics the latest to sell off. Stocks in Asia follow Wall Street lower. US Treasuries hold gains ahead of today's inflation report. Meanwhile, European allies pledged $35 billion in new aid for Ukraine as world leaders gather at the Munich Security Conference. We're there with top interviews throughout the morning. Plus, investors say not worth it. L'Oreal's ADRs slump after the beauty company's sales numbers disappoint. Well, a very good morning. Happy Friday. It is Friday the 13th, and the mood is characteristically dire in these markets. We saw that tech sell-off yesterday stateside, the mood carrying on into the Asia session. But if there is optimism, we find it in Europe. Now unchanged when it comes to Euro Stoxx 50 futures. These are the only futures that really have been showing signs of optimism, but not right now. Gold is being snapped up ahead of that US CPI print later on, but Brent on for the first back-to-back decline of the year because of this broader risk-off mood, also because of the oversupply concerns and also because of the prospect of protracted US-Iran talks. Let's turn over to the risk events for the day. I mentioned the CPI print coming out of the US at 1:30 p.m. London time. The expectation at the core level is for a read of 2.5%. Meanwhile, in geopolitics, we're watching the Munich Security Conference. Oliver Crook, our chief Europe correspondent, live on the ground for us. And earnings don't stop today. We get more from NatWest here in the UK later on, set to benefit from the growth of loan and deposits. But also, this is off the back of their Evelyn Partners deal, so we'll keep an eye on those earnings as we head into the European cash trade. Plenty on the agenda for today. Let's set you up for the day ahead. Wall Street suffered a fourth successive day of declines, with logistics the latest sector to fall victim to fears of AI disruption. Let's go now to Mark Cranfield, Bloomberg Markets Live cross-asset strategist, for more. Mark, looks like the AI scare trade continues.
It's a remarkable turnaround if you think what's happened in just the last few weeks. At one point, everything AI was good. Everybody loved anything that was touching AI, and it was very good for the markets. And gradually, we moved into a situation where anything with AI software seemed to be at risk, and people were putting that out of favor and just sticking to the AI hardware makers, the big guys like Taiwan Semiconductor, Samsung, these kind of people. And now it seems to be sector by sector that AI tools seem to be dismantling trust in anything. So the latest one is logistics. This week we've also had wealth management, and we've had other sectors as well getting decimated because people think the costs can come down dramatically because these AI tools can do the job much better and cheaper and probably dismantle some of the workforce as well. So it's a tremendous change in investor sentiment, and it's really separating the winners and losers across markets. But in the past couple of days, it simply turned into people just wanting to get rid of risk and to move to the sidelines. And of course, the flip side of that is that we've seen a strong bid has come back for the Treasury market in a way that we hadn't seen for some time.
Yeah, interesting that that's coming from tech. And yet we also have more macro data to bring today. That's the US CPI print. How could markets react to that, Mark?
Well, certainly the Treasury market will be at the forefront. It's been a very good week for Treasuries off the back of some soft data and a very, very strong 30-year Treasury auction, one of the best for several years. So there's big demand for long-dated securities in the United States, even with the US dollar being slightly on the weak side. So let's say we did get an unusually high print for CPI, certainly Treasury market would be likely to take a jolt. But on the flip side, if we get in a really soft CPI number, which gets people thinking that the Federal Reserve could cut interest rates by 3 times rather than 2 times this year, then there's even more extension for the Treasury trade we've seen this week, and probably negative for the equity market. We've probably reached a tipping point where bad news is just bad news for equities. People have known for some time that there's a possibility of the Federal Reserve lowering rates again, and it hasn't made much difference to equities this week. So if we get a CPI number which suggests that interest rates are still too high, that probably won't be taken very well by equities, but bonds will love it, and the dollar won't. It'll be another pretty bad day for the US dollar if it turns out that way.
Mark, thank you. Mark Cranfield there, Bloomberg Markets Live cross-asset strategist. Well, let's see how Asian markets are dealing with all this. We can go to Winnie Xu in Hong Kong. Winnie, it looks like that tech pessimism from the US has rippled into Asia markets where you are.
Yeah, morning, Lizzie. Exactly. We are seeing Asian markets pulling back a bit after having hit record highs every single day in the past 4 sessions. So yes, despite that near-term pullback, we are headed for our best week since September 2024, just because our region is actually a bit more insulated from this AI disruption that we're seeing in the U.S. because of our exposure to some of these upstream tech names in South Korea and Taiwan. And hence, you're seeing Samsung Electronics here actually up 0.7%. After having its best foreign buying yesterday, hitting the highest yesterday. And also just flip the board and take a look at what's going on in the Chinese market, because actually both onshore and offshore stocks under some pressure today ahead of the Lunar New Year, and also some ongoing price competition going on among the Chinese internet companies just to try to secure customers during the holiday. In terms of the Chinese yuan, actually still around that 690 level, which is around its highest, strongest since 2023. Now, worth noting that we are actually going to be entering a week, a long holiday for Chinese New Year for the mainland Chinese stocks. So off for the entire next week, and for Hong Kong, just 3 of those days. Now, flip the board and take a look at what's going on in the Japanese market, because also seeing a bit of an unwind when it comes to the Takaichi trade, and hence we're seeing both benchmarks under a bit of pressure, but worth noting that they are actually both in the overbought territory already. When it comes to the Japanese yen, weakening just a bit, but it is also headed for its strongest week since 2024, and that's coming as concerns continue to ease around fiscal policy. Hence, it's also pushing the 10-year yield here further down. Back to you, Lizzie.
Winnie, thank you. Let's keep an eye on that yen off the back of the CPI print. The dollar only a touch higher in anticipation. Winnie Xu in Hong Kong, we thank you. Now let's get to the geopolitics. The UK Defence Secretary John Healey says that allies have pledged as much as $35 billion in new military aid to Ukraine to strengthen its air defences. It comes after a series of massive Russian airstrikes on energy infrastructure as well as civilian targets. Meanwhile, the US Secretary of State Marco Rubio says he expects to meet with the Ukrainian President Volodymyr Zelensky at the Munich Security Conference.
I think so. I think he's going to be there, and there's a chance to see him. I believe it's on my schedule. I'm not 100% certain, but I'm sure we will. It's terrible. It's a war. That's why we want the war to end. People are suffering. It's the coldest time of year. It's unimaginable, the suffering. That's the problem with wars. That's why wars are bad, and that's why we've worked so hard for over a year now to try to bring this one to an end.
Let's go to our Chief Europe correspondent, Oliver Crook, who's on the ground for us at the Munich Security Conference. Ollie, what more do we know about the Allies' commitment to Ukraine?
Yeah, well, we know it's providing the Ukrainians with what they need most desperately at the moment. This is what they've been saying really for months and really for years. It's that crucial air defense systems to knock some of these munitions from the Russians that they've been sending over in much higher volume over the last few months out of the skies. And we should say that obviously the Russians have been targeting energy infrastructure at a much higher rate. We should say again and again, it bears repeating that, you have hundreds of thousands of people periodically across Ukraine without electricity, without heat, in a moment when you have temperatures that reach minus 20, minus 23 degrees Celsius. So again, it's a very desperate situation. It really shows a sort of shifting tactic for the Russians, really trying to prioritize destroying that energy infrastructure all over Ukraine. So what we understand is that $35 billion, that is as potentially new money that is being pledged, led by the Germans, the UK, and a number of other Europeans. And what that will also include, this has not yet been fully okayed by the capitals that have committed it, but are some of these Patriot systems, 35 in total. The Germans say they will contribute 5 if you can get an additional 30. And again, this is very key Lizzie, because for many of these things, these cruise missiles, the really fast-moving munitions that the Russians send over, nothing else can really take it out of the sky like the American-built Patriot systems. They're absolutely crucial as far as the Ukrainians are concerned. And of course, over the last 12 months, and a sort of administration in some way whose foreign policy was started right here 12 months ago by J.D. Vance, this is a Trump administration that is still, yes, selling some of these weapons to the Ukrainians, but donating them no longer. And that has, of course, been the major topic geopolitically here over the last year for the Europeans grappling with that.
Well, yeah, you remind us of the Vance comments last year. Of course, at Davos, the message was very much that we've got a new world order. So we're going to see European leaders surely trying to shore up the transatlantic order where you are in Munich. What else is on the agenda, Ollie?
So I think, Lizzie, there's two sides of this. There's, on the one hand, trying to salvage the transatlantic relationship because there is no alternative to a certain degree for the American security umbrella and all of that sort of thing. But I do think that something meaningful changed over that week in Davos that really severed the trust, I think, fundamentally, potentially irreparably during this administration between the Europeans and the United States. So there is the side of trying to build on that, trying to find areas of common ground. Potentially China could be one of those. We've been talking about potential aligned policy between the Europeans and the United States on raw materials, but there's another conversation here happening, Lizzie, and that is the fact that the United States may never be the same in the eyes of Europeans. So there's going to be, in my view, probably a lot of uncomfortable and a lot of quiet conversations in these corridors about what that actually means. Is, for example, the American commitment to NATO fully fledged? Again, this is a conversation we've been having for the last year. That turned into sort of a possible reality over the last couple of weeks. But another conversation, Lizzie, and this is something that I'll be talking to a number of people, including the German defense minister, is how secure is Europe under the American nuclear umbrella? This is a conversation that is apparently happening much more openly between European powers that would really only leave the French nuclear deterrent, because, as you know, the UK one is still fundamentally dependent on American technology. The Germans want to build the most powerful military within Europe. Can they have the most powerful military in Europe without a sovereign nuclear deterrent, for example? Those would be some of the conversations we're having here in Munich.
Ollie, appreciate the coverage. That's our Chief Europe correspondent, Oliver Crook. And as he says, we're going to have full coverage from the conference, speaking to many big names. Just a few from this morning include Kongsberg President Eric Lai, the European Commissioner for Defence and Space, Andrius Kubilius, Amundi's Head of Geopolitics, Anna Rosenberg, the PIMCO Vice Chair, John Sudzinski, and the Aspen Security Forum's Anya Manuel. So plenty to look forward to throughout the day. But still ahead on Daybreak Europe, we're going to dive deeper into how the AI-driven debt binge is threatening to disrupt passive credit funds. That conversation with Invesco's Alexandra Ivanova coming up at 6:30 a.m. First off, for the first time since the end of the Cold War, European capitalists are discussing how to develop their own nuclear deterrent. We'll tell you why next. This is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's the most fascinating time for the global economy in years, and our conversations are front and centre.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise.
With some fun along the way.
This is Bloomberg Surveillance.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
February 24th, as affordability, immigration, and national security dominate the headlines leading into the midterms, President Trump will deliver his State of the Union address. Balance of Power will bring you live global coverage starting at 8 p.m. Eastern.
Welcome back to Bloomberg Daybreak Europe, 6:15 a.m. here in London. Well, as we discussed the Munich Security Conference, concerns over the reliability of US military alliance have prompted European leaders to begin unprecedented discussions about developing an independent, continent-wide nuclear deterrent. While France and the UK currently possess limited arsenals, the transition away from the American nuclear umbrella faces massive hurdles. Bloomberg's EU defence and foreign policy reporter Andrea Palaciano joins me now, also in Munich. Good morning, Andrea. Just remind us what triggered this concern about the reliability of the US military alliance.
I think there was really a specific moment that triggered this, and it's in March of last year, where for a few weeks the Americans turned off their intelligence sharing with Ukraine and to a certain extent stopped military deliveries. And the ripple effect of this moment is being felt until today, because that is the real moment when Europeans realized that it could happen to them. And the intelligence sharing, the weapons, and ultimately what underlies the whole security architecture, the nuclear umbrella, which is the one thing that the Europeans are most dependent on the US for. Obviously, there are some nuclear arsenals in Europe, as you've said, the UK and France. And so what is really happening right now at very low levels, simmering under the surface, is the conversation about whether these arsenals could be applied to a wider Europe, how they could be shared, and the whole strategy behind that.
Yeah, in terms of Europe developing its own deterrent, how fast are these things moving and how far could they go? How realistic is this project?
Well, as you can imagine, they're moving really slow because we're talking about billions. There is no understating how expensive a nuclear program is. Obviously, there are also a lot of concerns about non-proliferation. So any country wanting to develop its own nuclear deterrent would be up against massive forces. Even just the upkeep of the French and the UK nuclear programs are extremely expensive. So we're talking about the beginning of a conversation, which in itself is a very massive shift. And we are expecting a bigger speech from French President Emmanuel Macron in the coming weeks, where he is expected to make a wider gesture to appeal to Europeans to get closer to the French nuclear umbrella and see what can be done.
Andrea, I appreciate the reporting. That's Bloomberg's Andrea Palaciano. Well, staying in Europe, but turning to tech now, quantum computing. Some see it as the next frontier in high-performance computing, built on a fundamentally different architecture that can, in theory, crunch data far faster than today's most powerful machines, with massive implications. Backers say the technology could transform entire industries, from drug discovery and cybersecurity to global finance and, as we've been discussing, national defence. Jan Gehr, CEO and co-founder of IQM Quantum Computers, says it's vital that Europe plays a leading role.
There are actually more quantum computers deployed in European data centers than in US data centers. We have sold more quantum computers into data centers than any other company out there. So there is a way to lead also from Europe. We just have to find it. So in the US, people have been betting a lot on the cloud business model, which is fine. And we're also driving the cloud adoption. But on the other side, there is also a way then to lead on the infrastructure part and going into data centers.
But it begs the question, can the technology live up to the hype? And can it supercharge the AI boom? Well, Bloomberg Tech Europe takes a deep dive into those topics later on this morning. That's at 8:30 a.m. London time. But coming up right here on Daybreak Europe, Goldman Sachs' top lawyer resigns over her links to Jeffrey Epstein. We'll get you all the details next. This is Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Welcome back to Bloomberg Daybreak Europe. Now, the president of the World Bank Group has told us that AI in emerging markets is far different from opportunities in the developed world. Speaking on Leaders with Francine Lacqua, AJ Banga shared his thoughts about how they stand apart.
Every day someone says multilateralism is dead.
Yes.
Do you agree with that?
No. Because during the last year or two, when things were really tough, IDA 21 happened. We got to raise money every 3 years for that part of the bank that goes to 78 poorest countries, because we give away 1/3 of the money every year without repayment. So it kind of runs out, even though we are profitable and the rest of the bank runs on its own. But this one requires recapitalization. During this entire period, we recapitalized IDA 21, that is the campaign, at a record level, higher than ever earlier. And that was during the time period that the Japanese government changed, the German government changed, the French government changed a couple of times, the British government changed, the American government changed, the Canadian government changed, the Korean government declared martial law on the day of our event in Seoul. So even with political turmoil, there is a role for multilateralism. The question is, what kind of multilateralism, aimed for what? And that, I think, is the issue.
And so how has it changed? This is what public money that gets married also with private money.
Yes, absolutely. So that's a really important point, that you will find that fiscal constraints exist everywhere in the world. The developed world has its own issues. Yep. And therefore, relying on handouts is not going to work. I really believe in any case that handouts have a low outcome probability, and that you have to find a way to incent people to use the money they're getting, to use it for better. It's not that you don't need some handouts, but you do need, that's grants, but you do need as well the incentive to use that money to make things happen. And I think the private sector and private capital mobilization, combined with the money you can get from the public sector, combined with philanthropy, that's a good combination to work with.
And you can watch the full interview with World Bank Group President AJ Banga on Leaders with Francine Lacqua, which premieres today at 5:30 p.m. in the UK. It's also going to be on the Bloomberg Original stream, the Bloomberg website, and, of course, on the terminal. Now, to some of the top stories we're following this morning. Goldman Sachs' top lawyer, Kathy Rumler, is leaving after documents released by the Department of Justice showed her links to the sex offender Jeffrey Epstein. The CEO, David Solomon, has said she'll be missed. Rumler moved to Goldman in 2020 and later became its legal chief. The bank says she had disclosed her dealings with Epstein when she was hired. Next, President Trump says negotiations with Iran could go on for a month as he seeks a diplomatic agreement that would roll back Tehran's nuclear ambitions. The US president also says it'll be very traumatic for Iran if there's no agreement. Trump's comments came a day after he hosted the Israeli Prime Minister at the White House.
It's ultimately up to me. If the deal isn't a very fair deal and a very good deal with Iran, then it's going to be, I think, a very difficult time for them. I'll talk to them as long as I like, and we'll see if we can get a deal with them. And if we can't, we'll have to go to phase two. Phase two will be very tough for them. I'm not looking for that.
Elsewhere in geopolitics, Bloomberg has learned that Venezuela plans to grant more oil production land to Chevron and Repsol. Sources say officials in Caracas are preparing to award the exploration and production blocks as soon as this week. The U.S. Energy Secretary has been touring a project operated by Chevron in Venezuela's Orinoco oil belt.
Now, with again a very groundbreaking approach, we have so much influence over Venezuela that we're able to nudge things in the right direction, maybe more than nudge. But I think we're aligned. What's in the best interest of interim President Rodriguez is to enhance the lives of Venezuelans. As society opens up and moves towards democracy, you got to be popular with the people.
The US and Taiwan, meanwhile, have finalised a trade deal to cut tariffs and boost market access for American products in Asia. Taiwan has also pledged to buy more than $44 billion worth of American LNG and crude. In return, tariffs will be cut from 20% to 15%, with exemptions for generic pharmaceuticals, chips and smartphones. Well, those are some of our top geopolitical stories this morning. Let's check in on these markets. Of course, it's been a really busy week when it comes to US economic data. We had payrolls earlier. Today, we're expecting CPI. We started the week with retail sales. And this is how markets are looking heading into that inflation print. The expectation is that we're going to get core CPI at 2.5%. Economists flagging that usually January prints higher, but this could be a bit more of a lukewarm number. And so what you're seeing is traders snapping up gold heading into this number. The Bloomberg Dollar Spot Index pretty range bound and Treasury yields higher across the curve heading into this number. Now, let's also take a look at the futures picture this morning. As I say, it's Friday the 13th and the mood has been pretty dour in these markets. We saw a sell-off in tech yesterday. Nasdaq down 2% yesterday. If we can show what's happening in the futures picture, we've seen Asian stocks selling off, so turning the fortunes that we'd seen earlier on in the week. US futures have been lower. Where are they right now? Still in the red this morning. We had seen a bit of optimism here in Europe as well, and sometimes this morning in the US, but really we're treading water as we head into the last session of the week. But coming up, we'll still be talking about tech, this time how the AI-driven debt binge is threatening to disrupt passive credit funds. We'll dive into that conversation with Invesco's Alexandra Ivanov next. Stay with us. This is Bloomberg.
Up-to-the-minute global news whenever and wherever it happens. I'm Jumana Bersetchi in Davos, Switzerland, and this is Bloomberg.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. It's Friday the 13th and the AI scare trade continues and frightens another sector, with logistics the latest to sell off. Stocks in Asia follow Wall Street lower. US Treasuries hold gains ahead of today's inflation report. Meanwhile, European allies pledged $35 billion in new aid for Ukraine as world leaders gather at the Munich Security Conference. We're there with top interviews throughout the morning. Plus, investors say not worth it. L'Oreal's ADRs slump after the beauty company's sale numbers disappoint. Well, a very good morning. Welcome to Friday the 13th, and the futures picture is appropriately dour this morning. We've already seen that tech sell-off stateside yesterday. That mood continuing in the Asian session. It's reflected in the US futures picture this morning, as it is here in Europe. But traders snapping up gold as we head towards the US CPI print. That comes at 1:30 p.m. London time. And meanwhile, oil set for its first back-to-back weekly drop of 2026. On this broader risk-off mood, but also because of those oversupply concerns and the prospect of protracted US-Iran nuclear talks. Let's take a look at the front pages this morning. We'll kick off with the Financial Times, shall we? They've got this story about Goldman Sachs' top lawyer. That, of course, is Kathy Roomler. She's set to resign this summer after documents released by the US Justice Department revealed the extent of her ties to the late paedophile financier Jeffrey Epstein. Now, you'll remember that Roomler was well known for her time as White House counsel in Barack Obama's administration before she was hired by Goldman in 2020. So that story on the front page of the Financial Times. Flipping over to France, and we have Les Echos this morning. They have the headline that competitiveness, Europeans commit to a strengthened single market. Well, French and German leaders are doing their best to project unity. They were at this leaders' one-day retreat in Belgium. But this paper saying behind the polite smiles, the cracks in the axis were obvious to all. Let's also turn over to the Wall Street Journal. They've got a story about the Trump administration covertly sending thousands of Starlink terminals to Iran. This is after, of course, the regime's crackdown on demonstrations last month, but the administration seemingly trying to keep dissidents online after Tehran stifled internet access. So this according to US officials who've been speaking to the Journal. But you can get a roundup of all these stories and everything you need to know to get your day going in today's edition of Daybreak, which, as ever, terminal subscribers can find by going to DAYB Go. Now, let's get back to tech. It's already becoming a larger slice of bond sales, with analysts expecting even more hyperscaler supply as capex surges. Joining me now for more on this and the wider bond market is Alexandra Ivanova, fund manager for the IFI Europe team over at Invesco. Lovely to have you this Friday morning. Let's start with tech then, because we are constantly talking about fears about AI capex. We've had this 100-year note coming from Alphabet this week. As tech makes up more of the high-grade issuance coming out of the US, at what point do you get worried about concentration risk?
Well, it is a good question, because this 100-year bond in UK sterling market has been one of the biggest in history. Yeah. But given the appetite and investors' readiness and waiting for this kind of issuance, the demand has been so strong, which surprised even ourselves. And we've seen books covered almost 10 times on that 100-year bond. And on the break, the bond has traded okay. I did not expect that it's going to rally that quickly. But at the same time, I would say that the amount of supply that's coming into the investment grade market does pose a question in terms of what kind of spreads over gilts, over treasuries we need to get to be paid properly for these kind of bonds. Yeah, we've got a great story on the terminal this morning about the rapidly growing pool of passive buyers and the potential disruption from that. Are you concerned about that? Well, the passives will be looking at the index. So if there is an index inclusion, there is going to be much broader support for these kind of issuers. And given the level of yields, and of course, we'll look at the long end, for example, this 100-year bond is over 6% in sterling. Historically, we haven't seen these high yields and for 100 years, if you say, nobody knows whether Google is going to be there in 100 years, but it is much more likely that we will get good types of returns, but it is very risky because you are exposed to a lot of underlying gilt volatility in that part of the curve.
It's like they always say, the church thinks in centuries, but now tech's thinking in centuries. Really significant moves. But I do wonder, are there other particular sectors where credit fundamentals are not holding up so well at the moment?
Well, there are sectors that are probably not necessarily related to AI. For example, chemicals have been quite in doldrums for the last couple of years. But what the credit market is starting to price is the AI losers, or the software, for example, is one of the areas that has been underperforming more recently. And if you look at the details of the companies that are actually suffering this kind of sell-off from investors, it's more about investors selling first and asking questions later, because in some of these companies, I would say, first of all, credit metrics do not necessarily look that bad, but you could question the business model, whether that's going to survive. Or it could be a company that is a conglomerate that has a lot of different parts of the business that you could argue some of the part of the businesses are actually going to benefit from AI, but it's very easy just to sell first, and also the technicals that have been so strong are starting to turn, in my view, because what we are seeing is that if for example, a company issued a lot of bonds in the recent months, all investors are already long. So then it becomes heavier and harder for them to outperform.
OK. I also want to turn to sovereigns because, of course, we've had a massive week for US economic data. Interesting warning from JP Morgan strategists recommending selling two-year treasuries as a tactical trade because they think all this data makes it harder for the Fed to cut rates. Would you agree with that?
I actually would agree with that, because I do worry about the market pricing imperfection in terms of the expectations for the rate cuts. Obviously, we are going to have the new Fed chair, and it's a Trump appointee. But by the way, Powell was also appointed by Trump.
Of course.
So, and we are reacting to data on a day-to-day basis. Let's see what the CPI is going to bring today. And I think benign CPI print probably will be positive for risk markets. However, if we surprise to the upside, I do worry that investors will start questioning whether we are too benign and we are expecting too many cuts. And I've seen some strategists calling for 4 cuts, and I just don't see it unless we actually go into a recession.
Is there a January CPI print that could put a June cut back on the table?
Well, I think so, if the CPI surprises to the downside. But we all know that most of the downside surprises are coming from, for example, very structural housing part of the CPI data. And more cyclical month-to-month data might actually surprise to the upside. And if you just think about how resilient the economy is and the demand side of the AI expansion and cyclical upward trend in industrials and consumer still holding up, and don't forget, we still are waiting for these checks in the mail or rebates that are coming in this side of the 2026. I do think that there is a surprise element that maybe demand is going to be strong, that will be underlying inflation that underpins it is going to stay stickier.
But of course, we're in a midterms year. I do wonder what happens to the US economy after 2026. But I also want to talk about the UK, because your latest note on gilts had a bit of a I told you so air about it. After the budget, you were expecting a bit of a bumpy ride, right? Yeah. And we've had it this week. Is it any part of the curve safe as we head towards the May elections, as we keep an eye on Keir Starmer's stability in Downing Street?
Well, actually, so I think the front end looks okay, and I do think that the Bank of England has room to cut, and they have kind of soft signal that March potentially could be where we see the cuts coming through. And the long end, I still feel like it's going to be quite volatile. But yeah, for diversification purposes, maybe you still can invest in it, but you just have to be careful and active. So we've used these opportunities where the gilts have actually rallied into year end and they outperformed. So that was a good opportunity to rotate out of it. And once we sell off, I think, at some point, good levels to get back in.
OK. Alexandra, great to see you. Thanks for coming in on a Friday morning. That's Alexandra Ivanova, fund manager for the IFI Europe team over at Invesco. Well, coming up on Daybreak Europe, investors say not worth it. L'Oreal's US ADRs selling off after sales at the world's largest beauty group missed estimates as its luxury division underperformed. We'll bring you all the details next. This is Bloomberg.
belief for climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are going to kill everybody. So we got to figure this out. And we're not going to do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Welcome back to Bloomberg Daybreak Europe, 6:43 a.m. here in London. Now to our top corporate news this morning. Citigroup has boosted the 2025 pay of its CEO, Jane Fraser, to $42 million. The 22% pay rise follows a year which saw the stock surge more than any other Wall Street bank. The pay bump also puts Fraser's total package for the year just $1 million shy of that of Jamie Dimon of JP Morgan. Elsewhere, Anthropic has completed a $30 billion fundraise led by sovereign wealth fund GIC of Singapore and Kautu Management. The deal values the AI company at $380 billion, making it one of the world's most valuable private firms. Anthropic also confirmed plans to let employees sell shares at the same valuation. In other news, Applied Materials surging in late trading after delivering a surprisingly upbeat sales forecast, signalling that demand for artificial intelligence and memory semiconductors is fueling equipment purchases. The largest US suppliers of chip-making gear expect revenue of approximately $7.65 billion in the fiscal second quarter. Applied Materials is bouncing back from a slowdown spurred by export restrictions on China, the biggest market, of course, for chips. And Coinbase has reported a 20% plunge in fourth quarter revenue as falling token prices sapped trading activity. That contributed to a net loss of $667 million compared with a $1.3 billion profit a year ago. The stock has fallen almost 40% this year alone, tumbling on the latest bout of selling in Bitcoin. So those are some of our top corporate news this morning. Meanwhile, staying with earnings, L'Oreal shares seen opening lower. This is after the French beauty maker's sales failed to meet analysts' expectations in the final months of last year. And we could go now to Angelina Rascouet, who joins us now from Paris. Angelina, good morning. These results seem to feed into the China and luxury narrative. So just walk us through what your key takeaways were from these earnings.
Hi there, Lizzie. Well, looking at the results last night, especially the reaction in the US, the ADRs, they fell, and it sounds like it's going to be a lower open today, this morning in Europe too. When it comes to the luxury division, L'Oréal missed estimates. That's the division that includes brands like Aesop, like Yves Saint Laurent, which is represented by Dua Lipa, and typically these are high-end fragrances where that unit should perform really well in the last quarter of the year because it's the Christmas shopping season, and they disappointed. They cited ongoing challenges in the travel retail segment in Asia, so that's been an issue for some time already. We're going to have more details in about an hour at the Analyst and Media Conference with the CEO and the rest of the executives of all the divisions, the main divisions. On the flip side, on the positive side, the dermatological beauty unit performed really well by 11.5%. So that's the one that includes brands like La Roche-Posay, which is the growth driver, they said, and CeraVe, which is a brand that is launched new products and it's in turnaround and it's doing better. So that's overall the outlook. But again, as I said, we're going to have more details.
OK, well, as we await those details, what do we know about what their strategy is likely to focus on in 2026, Angelina?
So I guess investors will be, first of all, they will expect Nicolas Hieronymus, the CEO, to tell us what's his growth outlook for the overall market. L'Oréal tends to give that number. And then they often tend to say, we expect to do better than that growth numbers. So we're going to expect that. But L'Oréal, M&A, they've been a very acquisitive company. Last year, they did a huge deal with Kering. They basically bought Kering's beauty unit. It was an emerging unit within Kering, but they also bought the perfume Creed. And eventually, the plan is for them to also manage the Gucci license. Right now, it's still with Coty, so a competitor, but eventually it'll be liberated from that license and L'Oréal will get it. They also bought, a few years ago, they bought Aesop. And there's going to be also the question when it comes to Armani. Mr. Armani died in September. In his will, he said he named 3 preferred bidders for his an initial stake of 15%. So that was EssilorLuxottica, LVMH, and L'Oréal. And so L'Oréal has had a beauty license with Armani for many, many years, and they have, in total, I think it's a 50-year license. So I think the market expects it will try to secure it eventually. We don't know by how much, but it's a very important license for L'Oréal inside the luxury unit. So, so that's what we expect from them.
OK. Bloomberg's Angelina Rascouet out of Paris. We thank you as we look, as you say, for L'Oréal shares to be lower at the European Open. Well, as the world focuses on Milan and the Winter Olympics, it turns out that the city has been attracting attention for a number of years. If you're anything like me, you've had one eye on the markets this week, the other on the Olympics. But I travelled to Milan for Wall Street Week to find out what's really drawing the ultra-wealthy and the big concern facing the city.
In the upscale Porta Venezia neighbourhood of Milan, Rich Ross is right at home. The former Hollywood executive bought this apartment with his partner in 2021, relocating from Los Angeles.
Well, every friend of ours, there are 2 words, why Milan? Like, why Milan? And then when we're here, they say, why here?
Ross is one of a number of wealthy foreign individuals now calling Milan home. Data from Henley and Partners estimated Italy added 3,600 millionaires last year, the third most in the world, while the UK, France and Germany all recorded net losses. Most of those going to Italy ended up in Milan, with many attracted by the country's flat tax regime, initially €100,000, but since raised to $300,000.
What brings you back to Italy?
The food, obviously.
Luigi De Vecchi is one of Europe's top deal makers. Educated in Rome, he had stints around the world at Goldman and Citi and was hired by Evercore to return to Italy to lead its expansion through Europe.
I think there are many places that have tax havens, but I think there is no doubt that people have taken that into consideration, as so many people moved out of London, but also out of Paris. I have friends that have come from all over Europe and actually the US, because unfortunately this time people, for different reasons, decide to move. And Milan, Italy in general, has become a very attractive place.
Yet Milan's rise has opened up problems. Housing prices have surged, up about 38% in the high-end sector between 2020 and 2025, according to real estate firm Knight Frank. And demonstrations broke out in the city ahead of the Olympics, with many fearing the Games will exacerbate cost of living concerns, even as the IOC says it'll repurpose the athlete village as student housing.
What could derail the momentum that we're seeing in Milan the fastest?
I don't think that I see a change of direction in terms of foreigners coming in, but what I think is changing, and this is dangerous, is the attitude of the Milanese that has always been an attitude that has been very welcoming. Milanese have something very special compared to other places in Italy. They're very reserved, they're very, the beauty of Milan is hidden, so most of the big palaces have gardens that you cannot see from the outside, and Milanese don't like to show off. So some of the wealthiest families in this town are not people that you would, they drive a Fiat 500, not a Ferrari. And so this influx of foreigners who are very wealthy,
flashy,
and sometimes flashy, could create some kind of backlash.
Prada, pizza, fashion, finance, what more could you want? Well, catch the full episode of Wall Street Week airing tonight at 11 p.m. London time. And you can also now watch Wall Street Week on our video hub. We've got live streaming news, all our interviews, all our Bloomberg TV shows, documentaries, reporter analysis and more, all in one place at bloomberg.com/videos. Plenty more coming up, though, right here on Daybreak Europe. So don't go anywhere. This is Bloomberg.
Bringing you up-to-the-minute geoeconomic news whenever and wherever it happens. I'm Bonnie Quinn in Sao Paulo, Brazil, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
Insight with Haslinda Amin, only on Bloomberg.
It's still slack in the economy, increased potential output that can be accommodated by looser monetary policy. And so the combination of these things leads me to think that monetary policy is tighter than it needs to be, and that we can afford to have lower interest rates.
Fed Governor Stephen Myron there, still determined that more rate cuts are needed. Let's see whether today's US CPI print changes his mind. It's the last instalment of data this week. We've had a raft of economic data already, but the expectation on the front of core CPI is that it's ticked down from 2.6% to 2.5% year on year, as you can see here. But flip the board over, and really the Treasury market's not just been impacted by the economic data this week, but also because of the tech sell-off. NASDAQ down 2% yesterday. You can see here the NASDAQ down days piling up so far this year. But flip the board over and I can show you the impact on the Treasury market, because it seems like perhaps President Trump's getting what he wants, reduced rate expectations. Treasuries rallying across the curve yesterday as a result of that tech sell-off. Let's see if it continues today, because we have seen a lot of negativity in the futures picture and Asian stocks already down in their session. Turning over to the risk events on the docket for today, as I say, we've got the CPI print that's coming out of the US at 1:30 p.m. London time. We're also keeping an eye on the geopolitics. The Munich Security Conference starting today. As ever, we have the future of NATO very much in focus, and the future of the war in Ukraine. So our Chief Europe correspondent, Oliver Crook, on the ground for us. And at the top of the hour, we'll bring you NatWest earnings, very much in focus, with loan deposit growth boosted here in the UK, so they're set to benefit from that. They've just had the Evelyn Partners deal, and we'll have an interview with the NatWest Group CEO, Paul Thwaite, in just a few minutes' time. That's on the opening trade. Anna and Guy and Tom will take you all the way to the cash open. This is Bloomberg.
We are in such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety, and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Good morning. It's Friday the 13th, which sounds ominous. This is what is on today's agenda. The AI scare, that trade hits logistics. Affordability in focus again in the United States. And the Munich Security Council puts nuclear deterrent centre stage.
Asian markets, it seems, not immune, at least for now, to that AI fear then. And currently across the benchmark, down 1.3%, snapping 6 days of gains. European futures pointing to very modest gains of 0.1% after ending lower by about 0.5 yesterday, with tech once again alongside basic resources a drag. Gold in focus after dropping at one point yesterday by about 4%. Today up 0.8%, but still below $5,000 per troy ounce. The countdown to the opening trade starts right now.
Morning, how you doing? If you know what's going on, please let me know, because I'm pretty sure this market doesn't know what's going on right now. We've got to the point with the AI scare where we're selling logistics companies. CrudeOil got absolutely whacked yesterday. Where's next? Like, what is going to be next on the list of things that get hit by this AI scare? This is a market that doesn't really have a handle on what is happening. That's scary in itself on Friday the 13th. By the way, stocks normally go up on Friday the 13th, which is kind of worth noting, just kind of to calm everybody down. But nobody knows what's going on.
A $6 million karaoke company, former karaoke company, now has an algorithm. But that is what created all of the latest scare in markets. It's only worth $6 million, or it was before this happened. It took way more than that off the logistics names that you talk about. And if we count the ways that we are concerned about AI right now, it's legal services, real estate, software, insurance brokerages, wealth management, financial analysis, the list goes on and on.
Keep going. The Russell 3000 trucking index, one of my favourite indexes, was down about 7% on the back of this news. This was a mic drop moment from Algorithm Holdings.
For them. Their CEO is very surprised.
It's another surprise CEO of a mini company.
How did we do that?
Company rocking in an entire sector with an update to some platform that could adjust logistics on the margins.
This market has no idea. We have no... We're now selling CRE companies, commercial real estate companies, because we're worried that actually, a bit like COVID, people won't be coming into the office because there won't be any jobs to come to in the office. So why do you need offices? You extend that thought... why do you need aeroplanes? Why do you need holidays? Why do you need... you go on and on.
Yeah, absolutely. I mean, I was looking at BI did a presentation on the SaaSpocalypse and the AI scare trade yesterday, and they were calling this a manic market. And there is actually a definition that goes behind that, but it involved 6 different inputs, so I won't go into it. But it's a manic market, they describe. And their takeaway from it being a manic market is that risk appetite tends to moderate in the few months afterwards, because it feels we're a little bit lost right now.
I was at a tech event, just briefly. I was at a tech event last night, quite late. And I spoke to a founder there, and I said, how are you doing? He just said, wow, things are moving so quickly. He is in this space, and he is surprised by how quickly the innovation was changing. He was glued to his phone, updates after updates in terms of what's coming through from some of these tech companies, the AI companies, the large language models. He's glued to his screen. He is discombobulated by the change that's coming through. I spoke to a founder investor, and he said, actually, we don't think the markets and society have fully understood the impacts of this. But I was getting different views. They don't know, and they are at the cutting edge of this technology. They are also being whipsawed by the changes, by the innovation.
Society's worried about inflation right now. How do you think it's going to feel when actually there are no jobs? At the moment, we're worried about how much groceries cost. But there are still jobs. How are we going to feel when groceries cost this and there are no jobs? Inflation's quite a big deal still.
Inflation is a big deal. It's OK, I'm off to become a plumber or something. That's my career backup plan.
So this is the Financial Times on the inflation concerns now in the White House. The Financial Times reporting that they are planning in the White House to scale back some tariffs on steel and aluminium. And again, quoting from the Financial Times, the People said that trade officials in the Commerce Department and US Trade Representative's Office believed the tariffs were hurting consumers by raising prices for goods such as pie tins and food and drink cans. If you put tariffs on aluminium and if you put tariffs on steel, guess what? It will end up impacting consumers at some point.
So that takes us to CPI a little bit later on. We're going to get inflation data out. Is this going to be the latest thing that kind of moves the market? Do I even care about economic data at this point when the AI story is moving in the way that it is and as fast as it is? But the inflation data, if we end up with... You would assume that if you have a solid jobs market, then... plus tariffs, you probably end up with inflation. Is the risk to an upside... Yeah. How does the market react to an upside surprise today? Because yields have been coming down, not up.
Absolutely, and I think that's the interesting point, isn't it? That bonds have been acting as a bit of a haven. Treasuries have been acting as a bit of a haven through this AI scare trade. And so is that at risk, given what we might see on inflation? Because you get an inflation shock and that might all turn around. I was drawn to some comments by David Einhorn, thinking about how many rate cuts we get this year, which ties in with that inflation story, in the face of that inflation expectation. David Einhorn, hedge fund manager, talking about how the Fed is going to cut substantially more than the market is currently pricing in. And there are those views in the market that aren't so worried about inflation or don't think the Fed will be.
Why? But the Fed could also be cutting because the equity market just keeps going down and you end up with a wealth effect, a negative wealth effect that impacts the top of the K, and that's something that will have a real kind of economic impact as well. So that's all. We have no idea what's going on in terms of AI, what's happening with the we're also facing, obviously, a huge security issue.
Yeah, absolutely. And so we've got the Munich Security Conference taking place. Now, clearly, oil markets have been hanging on all kinds of geopolitical tensions, including war in Ukraine, but others as well. We've also seen defence stocks really rally on the back of, well, since the last Munich Security Conference, defence stocks have done incredibly well because J.D. Vance was, quite frankly, very scary to European leaders and the message he brought. He's not there this time. This time we get Rubio, which European leaders might be relieved about. But in terms of what we're going to be discussing here, there are two sort of contrasting things. On the one hand, you hear the organisers still talking about the importance of the transatlantic relationship, leaning into the transatlantic relationship. Maybe Rubio brings a different tone this time around. But on the other hand, you have conversations amongst Europeans about how you extend the French nuclear security umbrella to other parts of Europe. So Europe having to do more of its own security.
And this is reporting from Bloomberg that these conversations are taking place in terms of how to think about the nuclear deterrent for Europe if they have less conviction in terms of the support from the US. And it brings back the question in terms of the priorities for governments, in terms of how they spend and where they cut. If they are to fund not just increased defence spending, but maybe increased deterrence when it comes to the nuclear capabilities.
They're really expensive, which is why the UK outsourced its delivery mechanism to the United States, which again raises questions about the viability of that. People have asked all kinds of questions about that. I don't think anybody's actually got a clear answer. But again, in some ways, this comes back as well to what is happening with the AI story. Where are the jobs going to be? Are they going to be in the military? Are they going to be... is this where kind of ultimately we end up with this kind of much more armed state with many more people employed by the military? You can kind of draw a line between one and the other and start to see maybe a future for it. Everything seems to be up in the air at the moment.
We may get some answers. Oliver Crick is on the ground for us at the Munich Security Conference starting today. Of course, we'll be getting interviews throughout our programme as well. And at 10 a.m. UK time, we're going to get Euro area GDP, so a pulse on the health of the Eurozone economy. 12 p.m. UK time, the BOE's chief economist, Hugh Pill, will be speaking after growth, of course, earlier this week for the UK disappointed. And at 1:30 p.m. UK time, we've touched on this US inflation data, of course, year-on-year expected to come in a little bit, 2.5% down from 2.6%.
There is a
to your point, do we get stronger inflation with a stronger jobs market?
There is a tendency also for the January numbers to be slightly punchier than you think, because people tend to raise prices at the beginning of the year, and the seasonality, maybe the seasonal models don't quite sort of take that into account. The other thing that's worth bearing in mind as well is that half the world's closed on Monday. Markets, financial markets. China's closed, Hong Kong's got a half day, the US is closed. So just in terms of the risk, how much risk do you want to take into a weekend, I think is another question that people will be asking.
Yes, often that weekend hanging over markets. Let's talk about a corporate news story this morning that has just been breaking across the Bloomberg terminal. And that is numbers from the bank here in the UK that is NatWest. Fourth quarter pre-tax operating profit coming in at 1.94 billion. That is nicely ahead of an estimate of 1.72 billion. So that looks good. They're giving some guidance on return on tangible equity as well out into 2028. So let's put all of this together and talk to Paul Thwaite, CEO of NatWest Group, who joins us now. Paul, very nice to have you with us. Let's start with this beat in the fourth quarter. So pre-tax operating profit, nicely ahead of the estimate. I wonder how sustainable that is and what's been going well for NatWest to deliver that beat.
Yeah, good morning, and delighted to announce a really strong set of results today. Income is up 12%, operating profit is up 24%. We've also announced that our dividend per share is up 51% on the year. So a really strong set of results. As you alluded to, we've also taken the opportunity to increase our ambition for targets out to 28. We've announced new targets today, return on equity of greater than 18%, which moves our medium-term target from 15% to 18%. In terms of what sits behind those results, what you can see is we're growing our three businesses really well. So our retail business, our commercial and institutional business, and our private bank. Lending is up 5%, assets under management are up 20%. So it's a really broad set of drivers which is driving it up, and our cost-income ratio has also come down, as you can see from the results today.
Can I ask you about the ambition around return on tangible equity? You say greater than 18% in 2028. I think that some in the market actually had a 2026 ROTE target of 18%. You've come out with 17 today. Do you think the market will be pleased with the level of ambition here, or maybe slightly disappointed, Paul?
I think the market, we've come out with two sets of targets. I think the market will be pleased around the ambition for 28. We've also come out with a target of greater than 17% for 26. So to me, that shows our confidence in the trajectory and the momentum that we have.
Paul, good morning. It's Guy. You made some news earlier on this week with the Evelyn acquisition, the wealth manager. I'm wondering how you think about the valuation of wealth management assets going forward in a world where the market is looking at this and saying this is ripe for disruption with AI. Are you confident in the money you paid for that business will be durable?
Morning, Guy. I was delighted to announce the acquisition of Evelyn Partners on Monday. It's a leading financial planner and wealth manager. The combination with our Coutts and Private Bank creates the #1 in the UK private banking and wealth manager. It's transformational for our wealth business. It brings scale, doubles the amount of assets under management we have, but it also builds a great set of capabilities, a direct-to-consumer platform, Best Invest, the largest employed financial advisor network in the UK. And that's why I'm confident that it positions us well for growth. I think it is a sector, as is banking, that is going to be transformed by AI and disrupted by AI. But we have strong conviction that the winning combination will be an AI-enabled wealth advice, but complemented by humans who can guide people through very complex financial decisions, inheritance planning, financial planning. All the research suggests that people want a hybrid combination, simple things digitally, supported by AI, but complex financial needs supported by humans. And I think the winners in this space are going to be those who have scale. And given we have 20 million customers across NatWest, we now complemented that with Evelyn Partners. We think it positions us really well for growth.
Paul, just staying with the theme. Last couple of days, we've seen commercial real estate stocks get absolutely hammered. Again, the market is kind of asking questions that it doesn't know the answer to at the moment. So let me come to you. Yeah. What's your exposure to CRE? Do you think CRE is vulnerable? Do you think the office market is vulnerable to the fact that maybe we won't need as many people in offices going forward?
Yeah. My personal view is I think there will always be demand for high-quality office accommodation. We've seen that over the course of the last couple of years. The quality demand has increased. We have a significant size commercial real estate book, so if we feel like we've got a good insight into that, it's less than 5% of our overall credit book, and actually it's performing really well. But what I think you'll see is a bifurcation. So there'll be demand for those really good city centre, high-quality offices, and maybe parts of the commercial real estate market will become a bit weaker over time. But net, I can't see a position where there isn't strong demand for good commercial real estate.
Paul, good morning. It's Tom alongside Guy and Anna. You talked about AI disrupting the banking space. What does that mean in terms of jobs? There's a lot of focus on this, a lot of interest, particularly graduates. Do you expect that NatWest will be hiring fewer graduates as you bed AI into the business?
Yeah, actually, this year we'll be hiring more graduates, Tom. Actually, the difference, though, is that the composition of the graduates that we're hiring has changed a lot. If you looked at the bank maybe 5 years ago and you look at about the type of graduates recruiting now, we're recruiting into software engineer roles, data scientist roles, prompt engineer roles. So what we're seeing is not less graduates, but just a very different mix. We've lent into AI, we're embracing it. Our 60,000 colleagues are using the tools, whether that's for summarization, whether that's for coding and engineering. And I can only see that increasing over time. It's difficult to predict exactly what it's going to mean for the workforce. The one thing I am confident about is the workforce is going to look very different in 2 or 3 years than it does look at the moment.
OK. And you talked about 5% loan growth. What does that tell us about the health of the UK economy? We had GDP that disappointed earlier this week. Yeah. Are you seeing green shoots? And how do you see that impacting demand for loans going forward?
Yeah, it's a complex situation, but I think both domestically and internationally. But I do think there are reasons for confidence around the UK. If you look at the macro picture, we're expecting 2 more 25 basis points rate cuts. We're expecting inflation to come down during the course of the year to its target level. As you say, GDP was a little bit soft, but we're still expecting growth next year. Unemployment, although it's ticked up, is still at absolutely low levels. So from my perspective, there are reasons for confidence. If you look at household and business balance sheets, they're actually on aggregate in quite good shape. Household savings have been high over the course of the last couple of years. Businesses have delevered over the course of 4 or 5 years. So they have the capacity to either spend or invest. And what they need is, I guess, is confidence around that in order to be able to make those decisions. So last year, we were cautiously optimistic and things played out well. We have reasons for confidence for this year.
OK. Paul, at the beginning of this week, things look very politically volatile here in the UK. They look a little calmer by Friday. But, you know, there's still room for plenty of change ahead, it would seem. What kind of message are you giving to the government? What would you like to see around the growth story in the UK?
Yeah, what businesses want, what financial services want. We want consistency, we want stability, and we want predictability. Why do we want those things? Because they're the conditions for growth. If we can drive growth, that's what raises living standards. So my ask, both privately and publicly, is to create those conditions. I spend a lot of time around the country talking to small businesses, big businesses, and it's those themes that come through: consistency, stability, certainty, because that will give everybody the confidence to invest for the future, whether it's hiring more people, whether it's investing in new machinery, whether it's exploring export markets. So my message is stability, consistency, predictability. That's what the country needs.
Paul, thank you very much. Paul Thwaite, the NatWest Group CEO. Thank you so much for joining us this morning. Coming up on the programme later, we'll check in on more European earnings, including L'Oreal, after the company's US ADRs posted their biggest daily drop since 2020, following a fourth quarter earnings miss. So the stage is set for weakness in Paris today. Plus, later this hour, we will take a look at how today's US CPI data could affect the Federal Reserve's next move. That conversation ahead with Ella Good, Head of Fixed Income at BNY Investments Newton. Up next on this programme, we check back in on the logistics trade. It was getting dragged into the AI scare trade, of course, and weighing on markets from the US to Asia. If you have questions, if you want to get involved in any of these conversations, please do reach out to us. IB plus BBTV Go is the function on the Bloomberg terminal. This is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Hazlida Amin in Davos, Switzerland, and this is Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time,
helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise,
with some fun along the way.
This is Bloomberg Surveillance.
Welcome back. This is the opening trade. Friday the 13th, 7:21 here in London. A little bit later than that over in Singapore, of course, which is where we find our executive editor for Asia Markets, Paul Dobson, who's with us this morning. Paul, good morning to you. Well, we have the latest iteration of the AI trade scare, don't we? It seems to be rolling from one sector to another. Before everybody in a white-collar job decides to go off and retrain as an electrician or a plumber, what can you tell us about the latest instalment?
It does sound like a good idea, doesn't it? If you become a person who's good at installing data centers, then you're going to be minted for the next few years, Anna. But, you know, as far as investments are concerned and what the stock market is doing, this latest event is kind of interesting because it's sort of come from nowhere. This company that used to be like a karaoke company reinvented itself as a logistics firm instead. And people are looking at the business model that it has and how it's using AI to allow for scalability at reduced costs, and thinking, well, this is one more area where AI can excel and can therefore do the job that other companies are doing at much more expensive levels, much more cheaply, and undercut them. I think there's a really good quote in the story, which is about this idea, the level of paranoia is category 5. So basically, people are looking at what is AI going to be able to do sometime soon? Which companies are vulnerable? Which ones are the ones with the high costs, high human kind of work hours, labor intensive, those kinds of things? Those are the models that are under pressure at the moment. And so that's where we're seeing that sort of, you know, series of selling efforts coming in right across the market.
It imported karaoke machines. So it was tangentially in the logistics business. Bad for America, good for Asia. Is that the trade?
It's definitely one thing that we've been seeing playing out. I've been really interested in this, just how much the US market has underperformed this year, Guy. So the S&P went negative year to date yesterday. In trading in Asia, we're still up despite a setback today, you know, more than 10% for the year to date. And part of that is this idea that you know, Asia is at the top of the sort of supply chain when it comes to all of the AI infrastructure, equipment, chips. And some of the companies are doing extremely well as a result of that, not just the memory chip makers in South Korea, but also in Taiwan, TSMC, and the Japanese firms as well. And so that's leading to this big outperformance. But I think that there's more than that, because it's not just Asia, right? Over in Latin America, the market's up 20% this year. So it's more this idea that the rest of the world is outperforming the US quite considerably at the moment.
Paul, when I think chips now, I think inflation. We have CPI out of the US later today. How vulnerable are the markets to a higher print?
Yeah, so the Fed pricing has been wobbling around quite a lot at the moment, hasn't it? And the payrolls that we got earlier in the week, confusing us enough just because it was on a Wednesday, not a Friday, sort of had everybody pushing back again their forecast for when the Fed would begin cutting interest rates. If we get high inflation on top of that, then, you know, people are going to be thinking, well, how on earth is Walsh going to be able to convince the FOMC to do those cuts that we decided to price in? And that could be bad news, not just for the bond market, but also for the stock market, for people who've been counting on the idea that the Fed is going to be lowering interest rates through the course of this year, based on the fact that we're going to have a new Fed chair that would lead the rest of the board to that decision.
Great stuff, Paul. Thanks very much indeed. Paul Dobson joining us out of Asia. MLIV Go is the function you need to know there. What else do you need to know this Friday morning? Goldman Sachs' top lawyer, Kathy Rumler, is leaving after documents released by the US Department of Justice showed her links to the sex offender Jeffrey Epstein. The CEO, David Solomon, says she will be, quote, missed. Rumler moved to Goldman Sachs in 2020, later becoming its legal chief. The bank says she had disclosed her dealing with Epstein's when she was hired. AMAT, Applied Materials, surging in late trading after delivering a surprisingly upbeat sales forecast, signalling the demand for AI and memory chips is fueling chip-making equipment purchases. The largest US supplier of chip-making gear expects revenue of approximately $7.65 billion in the fiscal second quarter. Applied Materials is bouncing back from a slowdown spurred by export restrictions on China, the biggest market for chips. Keep an eye on its European rival, ASML, at the open. And Anthropic has completed a $30 billion fundraise led by Singapore's sovereign wealth fund GIC and Coatue Management. The deal values the AI company at $380 billion, making it one of the world's most valuable private firms. Anthropic also confirmed plans to let employees sell shares at the same valuation, which is interesting when you think about the IPO prospect.
Yeah. By the way, that's more valuable than Disney, Netflix and Goldman Sachs.
Put together or just...
Not combined.
Right.
Not
just wondering how far we've gone.
But more valuable than Netflix, more valuable than Disney, more valuable than Goldman Sachs.
Does that, well, when you were talking about entertainment, I was wondering if that tells us where the new entertainment is.
I had to add Goldman Sachs in there.
Yeah.
I was trying to work out... So, as you're saying that, I'm thinking, is the price of production of TV going to go down dramatically because of AI? I would have thought the answer would have to be yes. We're not going to have jobs, so we're going to need things to watch. So actually, I do wonder whether Netflix and Disney might become a little bit more valuable in society.
Yeah,
because we're going to need things to do.
Expansion as the cost of creation is reduced, but demand increases.
Yeah.
We need good things to watch.
Are you suggesting... No, I'm not
no,
going to go down
comment.
that road.
Coming up, Ella Good from BNY Investments. Newton breaks down what we're seeing in the market. We'll focus on fixed income. Stay with us. This is Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
That later. The rest of the European equity markets, though, pointing a little higher, Guy.
US yields are going up, European yields are going down. We are waiting for CPI out of the United States. We saw a big drop down yesterday in yields, i.e. prices bid. This morning we're seeing a little bit of a follow-on trade, so yields are going down in Europe. So that's kind of the trade, but we're waiting for CPI, basically.
Yeah. On the tenterhooks, in terms of 2.5% could be the number. That is the forecast for CPI, which will break for you, of course. Let's bring in a market analysis and perspective on this right now. Bloomberg understanding that the Trump administration is planning, before we do that, we're going to get the tariff story, planning to scale back some tariffs on steel and aluminium goods. President Trump imposed tariffs of up to 50% last summer, but now officials fear higher prices are hurting consumers. Let's bring in our Washington Deputy Bureau Chief, Laura Davison. Laura, what do we know about this? How serious are they about rowing back on some of these tariffs, and how much of this is about angst leading up to the midterm elections in the US?
A lot of this is about angst. The White House and the trade teams are still working at exactly what these details are going to look like, but they're looking at rolling back, what was really a sweeping tariff plan on steel and aluminum, as well as component goods, so anything that had those metals in it, so things like appliances, electronics, food packaging. And the recognition here is that these are really, these tariffs are being passed on to consumers, and this is really starting to hurt voters, particularly as we're headed into a midterm election in the U.S. in November, where it's all about affordability and cost of living. We saw the administration do a similar move last summer when it came to different food products that can't be grown in the U.S., things like coffee and bananas, as a way to at least, pull back some of these tariffs. And it's an acknowledgement from the White House that perhaps some of these tariffs at least are passing on the cost to the consumers and raising prices for households.
OK, we'll see to what extent they wrote back some of those tariffs. Bloomberg Washington Deputy Bureau Chief Laura Davison. Laura, thank you very much indeed for that update. Treasury's pairing some of yesterday's gains, as Guy mentioned, as investors look forward to, or not, to US CPI data later today. Fed Governor Stephen Miron says monetary policy is still too tight.
It's still slack in the economy, increased potential output that can be accommodated by looser monetary policy. And so the combination of these things leads me to think that monetary policy is tighter than it needs to be, and that we can afford to have lower interest rates.
I'm still not clear if this is a Stephen Miron speaking to President Trump or a Stephen Miron speaking to some fundamental and counterintuitive economic analysis. But that is his view. Rates need to be lower. Let's bring in Ella Good right now, Head of Fixed Income at BNY Investments Newton. Ella, good morning.
Good morning.
The Trump administration seems to be worried about inflation. Should the markets be worried about inflation?
The risk is there. I mean, it's very difficult to know from the moving parts on, will we get productivity because of the implementation of this AI boom story? Or are we going to get the inflation coming through commodities? We just talked about precious metals and industrial metals. Everything's been going up quite a lot last year and this year. So which force wins? Plus, if you add tariffs from last year onto that, there's definitely a risk. So we're probably siding more with the risk is high that we get some inflation coming through. But of course, it's quite an uncertain backdrop, something we've never had to navigate before in markets.
Risks are high that some inflation comes through. How does that percolate through the Treasury curve then? How do you see... I mean, they are seeing to play something of a safe haven role right now,
right.
So that's a factor. But then there's the inflation risk.
Yes, I mean, I like to think in asymmetry. So I'm thinking, OK, so if inflation continues to be benign, that's more or less baked in the cake, if you like, in terms of pricing, because we still have a couple of cuts on the table. If it comes a little bit lower, sure, maybe we can price in a little bit more cuts. But when you look at where 5s and 10s are, certainly if we get a surprise on the upside, the move could be nastier. And so I think the asymmetry is there. Sorry?
How much price could 10s be? We're at 4.1 now. How close to 5 could we get if inflation comes back?
Pretty rapidly, I would say. I mean, it's not priced in markets right now. You don't see it in a lot of vectors.
Yeah.
But at the beginning of this year, we started to see it in inflation expectations, the shorter term stuff. And so that's probably worth watching. We'll see. I mean, I don't know if we're going to get that after today's data. I cannot, foresee exactly where the number comes. But, if you think down the line, asymmetry-wise, the risk is for higher, right? Because we have quite conducive policy, monetarily, fiscally. The economy is booming. I mean, you have pockets of weakness. But broadly speaking, things look good for now. So, yeah, definitely more risk that I think we get a skew to the upside.
What's the AI effect going to be in the credit markets? We're looking at it in the equity markets, and we're kind of seeing stocks all over the place at the moment. And people, it's logistics, it's CRE,
right.
It's kind of, how does that manifest itself in credit?
Well, we're seeing some of those soft spots in private markets. So private credit, where you have 20% of lending down to software, and we've obviously seen what's happened to software the last couple of months. So difficult to see that pressure alleviate. In public markets, we've seen a bit of a follow through, but everything seems to be okay. So I mean, I would argue more inflation. Obviously, if it pushes rates higher, it filters a little bit into credit, but not in the initial phases. Remember that particularly high yield tends to like a little bit of inflation, right? Because it's that nominal growth component. Later on, depends how much inflation we get and whether that actually features into a disruptive move in rates.
So the risk,
then you can see credit suffer on the back of that.
The risk to credit is on that side, the inflation side, rather than the AI taking some of these business models away.
Yeah, I mean, we're seeing some of that, absolutely, as I said, in the private market side. That can continue, and we're watching that because it is a tail risk, but it's a tail risk that can morph into something bigger. For now, it seems isolated to private markets, but it can always morph into public, of course.
Thinking about the Treasury market, Ella, I wanted to ask you about China. And, I mean, we've seen this interesting guidance come out beginning of this week, very recently. We seem to be aimed at the banks. It wasn't necessarily reflecting the sort of sovereign stance of China wanting to reduce Treasury holdings. But China has been reducing Treasury holdings over the last decade, hasn't it? I mean, how are you interpreting the signals from China as to the role they want to play in treasuries, and does that matter to the extent it used to?
I mean, it's a long-standing trend. I don't think it matters for the next quarters, but perhaps for the longer term. And the biggest trend that I've taken away from that is what it means for precious metals, right? So that's been in our radar, and we've owned it in our multi-asset portfolios for a good couple of years. I think that trend remains in place because there is diversification away from treasuries, and I think there's plenty of supply to come. So you will see a transition from your traditional buyers, your reserve managers, into perhaps more of a public market, potentially more in the U.S. So that's the transition that we're seeing, and I think that probably will continue to play out.
So even though we saw jitters in gold and precious metals yesterday as people sold it, reportedly to cover margin calls on stocks, but hard to say, that you could kind of see that coming because it's very liquid, the gold market, but you still think the fundamentals mean that gold goes higher from here?
Structurally, yes. I think we can get over the short-term correction, potentially even as low as 4,000. But I think on a structural basis, the demand is there. And there's a lot of uncertainty, as we said, right, in terms of what the future holds. Quite big geopolitical winds happening at the same time. So for a lot of investors, it's something that they don't own enough of, right, if you think about high net worth individuals, et cetera. So it is something that has a place in a portfolio, we think. I mean, it's not going to be your core component of your portfolio, but that should probably override some of the shorter-term dislocations that we see.
Thinking of gold, I saw 4 states in the US now. Well, 2 of them have already decided, and 2 are about to decide to accept gold as legal tender. I mean, I'm not quite sure how that exactly works.
Are we going back to the gold standard?
Well, but maybe. I mean, it's got echoes, hasn't it? But I mean, the Bank of England has less gold than it used to, but it still has a lot.
Thanks, Gordon.
Yeah, and central banks have been buying a lot of it. Thank you, Gordon Brown, for that. Ella, on the UK then, we've been talking about the election risk in the US, the midterms in November. Do we need to start to price in an additional risk premium to UK gilts in the lead up to May and local elections and the potential fate of the Prime Minister?
I mean, the funny thing is that gilts have quite a bit of premium to them if you compare them to other G10 markets. So the curve is very steep. Your premium over and above inflation, particularly the rolling 2-year inflation, is pretty high. So you would argue, should they have more? I mean, we are, as Mark Carney said, reliant on the kindness of strangers. So, of course, the bar is that much higher for gilt in that sense. But there is some political premium to them.
How much of a blowout do we get if there is a challenge after May
I mean, I wouldn't call it a blow up. I mean, actually, I think for us, they represent value, particularly relative to treasuries, because, treasuries are pricing quite a bit of good news in our view, and, gilts are pricing.
You buy gilts?
We like owning some gilts here, yes. And that's because the expression is that there's a lot of premium priced into the curve. But, of course, we are cognizant that you can have more nervousness leading into May. I mean, Bank of England spoke overnight, right, in terms of... Yep. The rate cuts probably are underpriced. I think that's a fair assessment. So hopefully the markets will give the leeway for those cuts to come through.
Nice to see you. Thanks for stopping by to see us. We always appreciate it. Ella Gooder, the head of fixed income at BNY Investments Newsom. Thank you very much indeed. Coming up, we're going to go to Munich. Security conference is on. Ollie Crook is there. Kongsberg Defence and Aerospace President is going to be joining him shortly. That conversation coming up. This is Bloomberg.
Some people would say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers. And it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns. And a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later at over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just, it's hard to call it because the technology trend and the investment is real.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
Welcome back. UK Defence Secretary John Healey says allies have pledged as much as $35 billion in new military aid to Ukraine to strengthen its air defences. That's after a series of Russian airstrikes on energy infrastructure and civilian targets. It comes ahead of the Munich Security Conference, which starts today. Let's bring in our chief European correspondent, Oliver Crook, who is on the ground for us in Munich. Ollie.
Yeah, that's right, Tom. We're here in Munich, which we remember really kicked off the sort of MAGA foreign diplomacy 12 months ago when we had that speech from J.D. Vance. This has really reordered many things in Europe, particularly in the defense sector. So I'm very pleased to be joined by the CEO of one of the majors in that sector, Erik Lai, who is the CEO of Kongsberg Defense, soon to be CEO of Kongsberg Group. Thank you very much for joining us today. I'd like to just get there's been such an active year, but I really want to have an understanding from you over the last sort of month or so since the so-called Greenland moment here. There's been a lot of concern about European countries having sovereign capabilities. Have you seen that sort of translated into your order books? What kind of conversations have you had in the last few weeks? Have you felt a sort of shift in the tone?
Well, if I take one step back, I think it's important to realize that last year we focused on two major items. One is to win the Ukraine war, and the other is to rebuild or build up even more in Europe. And I think those two elements still are there. So we focused on that Ukraine needs to be helped, be supported to win the war. At the same time, Europe needs to continue the build-up of the capacity. And I think that is our focus.
And so the build-up in capacity, we talk a lot about the gaps in capacities, but also wanting to buy European, right? This is a very active discussion within Europe. Do you see that there are certain gaps within the market? Obviously there are, that you as Kongsberg could fill. What are those? What are those going to be in the next couple of months and years?
You know, our company is very important. It's very important for us to be both in Europe and also in US and other places in the world. And we see that trend that there is some more European content that fits us very well. At the same time, we will leverage what we are doing in the US to build up more capacity there. So we are building up capacity and other technologies, both in the US and also in Europe, and that fits our business model very well.
And then when we think about the kinds of hardware and the kinds of things that people are showing demand for, obviously you're involved in the JSMs and the sort of key missiles for the F-35s and things like that. Where is most of the demand coming in the last couple of months?
Well, I would say that we still see a high demand for air defense and our strike missile capacity. That will still be relevant for many years. At the same time, also in the counter-US, anti-drone systems, we get quite an important contract in Poland just a couple of weeks ago, which is paving the way forward for the counter-US segment. At the same time, you'll see also the space segment and also the underwater domain segment as the new two frontiers.
So I want to drill down into a few of those. So obviously you're market leaders in the sort of mid-range air defense systems, short-to-air defense system. We talk a lot about in Europe the sort of absence of being able to really match the Patriot system that the United States has for those long-range missiles. That is, of course, what Ukraine needs critically. Are you going to move into that space? Is there a timeline, do you think, that you'd be able to bring something to market that really competes at that level?
So currently we are working on expanding NASAMS. Yes, you're right. It's in the medium range, and we have the counter-US capacity. We want to expand NASAMS to be a full-spectrum air defense system. That means we need the longer-range capacity as well. So the technology in NASAMS and the architecture, which is open, is to embed and include other missiles to really be an anti-TBM system as well.
Mm-hmm. And then the other one of the main issues, I think, that for Europeans and thinking about the sort of gaps that they have in their systems, there's a way in which the United States may have something close to a sort of monopoly on space. You have SpaceX and all of these sort of companies within the U.S. You're also involved in that space. What do you want your role to be in space?
I think we cover the whole full chain delivery of space activities. We are Europe's leading provider of satellite platforms on the small satellite segment. At the same time, we have KSAT, which is the world leader of taking down data from all satellites. And this combination is quite unique. So we see Kongsberg in a role taking a leading position for this new space segment, also for military purposes.
And I think that we've also learned that basically your defense is only as secure as your supply chains are. I spoke to the Rheinmetall CEO. He has a meeting every single week about rare earth metals to make sure they have the supply. I'd like you to sort of describe for us kind of where we are on these sort of memory chips, rare earths, how concerning that is to you, and sort of how much runway you have in terms of stockpile and how you think about that issue.
Yeah, this is very important for us, obviously, for all companies.
Yeah.
So we are concentrated on our supply chain to secure that we have the capacity, and we are building up what we call a buffer strategy, so that we have months to so we can support our own production. And that is what we are discussing with all the different suppliers we have in our supply chain.
And are you, for example, Rheinmetall said that they have 12 months of supply. Is that the kind of window that you guys have, the runway you have?
Yeah, we look at the year window, but it depends on what systems we are talking about.
And I'd like to also get, because you're also reshaping the business, splitting off the maritime unit, also then focusing, doubling down on defense and civilian. Thinking more broadly about the structure of Kongsberg going forward and the possibility for M&A. What sort of sectors are you looking to make acquisitions in? Where would you like to see that sort of bouquet of sort of companies and capacities expanded?
Yeah. You're correct. So Kongsberg Group is demerging Kongsberg Maritime as a new listed company, and then the existing Kongsberg Group will be a more focused defense company with civilian technology included. So that's our main aim with the new direction we take. At the same time, we see that, if you look at our order backlog, our priority number one is to deliver on our promises. At the same time, we want to continue the innovation path we are on. We need to accelerate what we are doing, and that also includes M&A more actively.
And then, so obviously you mentioned the backlog there. Something that's connected to that would be how much demand there is, the sort of margin. So I was looking back at your margins in the fourth quarter back in 2020. It was about 13%, now almost at 21%. Obviously very good news for you, but potentially concerning to some governments who are spending basically taxpayer money to buy all of this equipment. How do you sort of balance that, the need to sort of obviously continue to be profitable, to reinvest, but also be able to spend that money sort of responsibly and not have that sort of pressure from governments?
This is very important for us as well. We as a company, we like to do investments to build up capacity, to do R&D in order to support the customers around the world. And I think this is what we have done. We have invested in factories and build up capacity in the US. We are doing currently the same in Europe. And we are also building up factories in Australia, as an example. So I think this is what we will continue to be active in investments that will help also the governments around.
Well, Erik Lie, thank you so much for your time today. We're kicking off really our coverage here at the Munich Security Conference. That is the CEO of Kongsberg Defence and the incoming CEO of Kongsberg Group after that demerger of the maritime unit.
Ollie, thank you very much. Bloomberg's Oliver Crook on the ground for us at the Munich Security Conference. Let's take a look at some of the stocks we're watching this morning. Just 10 minutes until the start of cash equities trading. Louise Moon has a preview of some of the sectors and stocks that could be on the move. Good morning, Louise.
Good morning, Anna. First up, we are looking at miners, a key sector in focus today. This is after a report that Donald Trump is weighing up whether to pull back on some of the tariffs surrounding aluminium and steel. He imposed 50% tariffs last summer, potentially might pull back on some of those. So we're looking at miners that are likely to be impacted from this. They've had a strong year. So far, the likes of Glencore, Rio Tinto, the usual suspects. So you would expect this to kind of boost their share price again this morning. I mean, this is all to do with concerns from Trump over raising costs on consumers. There's also a bit there to do with his approval rating. So potentially pulling back on some of those tariffs, and we'll be watching those miners in focus today. The other sector we're looking at is also logistics across Europe. Logistics companies, the likes of DSV and others. There's fears here over a bit of a disruption from AI, kind of the latest sector to get embroiled in these AI disruptions. This is all because of a company in the US, a very small company, actually used to be a karaoke company, now an AI firm. They're fueling concerns that this could really disrupt logistics. So we're looking at DHL, DSV and others. Their stock was hit a bit last night, late in trading. This is on this news. US peers then tumbled, so it's a bit of a day two story. Some analysts are saying, worries could be a bit overstated, but so we'll be keeping an eye on how they do at open. And then finally, the last one we're focusing on is just one company, Capgemini, the French IT firm. Also, they've had a bit of a rough year, down over 46%. Also to do with AI worries, a pullback in spending. They had fourth quarter results mostly in line, but the key thing people are really focusing on is comments by their CEO saying that going forward, AI is really going to be their focus, and that's going to fuel sales. So some glimmers of light, a bit of hope, so you'd expect the stock to rise into the green.
OK, Louise, thank you very much. Louise Moon with some of those stocks that could be on the move. And I was taken by, there are actually parallels between what we were hearing about the Munich Security Conference and what we heard from Capgemini. Because both of them are sovereignty stories, at least in part, for Capgemini, because they're citing, there's lots more AI work for them to do, and part of that. And then there's also the sovereignty piece, and the more countries want sovereignty, the more work there is for IT companies such as Capgemini. And obviously sovereignty is very much part of the agenda in Munich.
Yeah, maybe AI does it, though, rather than Software companies doing it. I don't know. It's going to be interesting to watch. We don't know. That's the problem, and how long it takes for some of this AI technology, and they talk very much about it in their statement. How long can they incorporate it faster than somebody else can disrupt them, I guess is the question.
And on the sovereignty piece, they've paired and partnered with companies like Mistral, which is essentially Europe's best bet at large language models to kind of try to rival the likes of OpenAI and Anthropic, which very much is focused on the sovereignty story. ASML's an investor in Mistral. Capgemini is working with them as well, and they're building out their own infrastructure and data centres.
I'm really interested in the way that the market is putting a positive take on Capgemini this morning, because there were things about organic free cash flow you could have focused on for the full year and taken away a negative message. But no, that's not the mood the market's in. But they are in a negative mood around L'Oreal. Those shares look as if they will the
question seems to be North Asia, and analysts looking for the details there. It's very competitive, increasingly competitive in China, but also a lack of travel, it seems. The restrictions on Chinese travel to Japan may be an impact as well. So that seems to be the focus.
Keep an eye on DraftKings and the ripple effect into Europe, the prediction market. The outlook from DraftKings was weak. Keep an eye on Flutter. That could be a trade you want to watch out for this morning. 5 minutes to go. Friday session coming up. This is Bloomberg.
Up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersecci in Davos, Switzerland, and this is Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Okay, good morning. It's Friday. The karaoke trade, the karaoke crash, maybe we should call it, happened quite early in the session yesterday in the United States. This is the S&P. That's the move we saw earlier on. So Europe's priced that because basically we went pretty flat for the rest of the session as we've come down, but there wasn't a bounce at the end of the day. There wasn't a kind of buying at the dip, and it doesn't feel like, looking at US futures this morning, that is going to be something that happens as well. CPI is coming up. So basically we've priced this. We drifted sideways yesterday, so we're kind of even Stevens with the States, though the States looks a little bit more negative this morning, Tom.
Yeah, the S&P 500 is now negative year to date, and maybe that mic drop moment from Algorithm and its logistics platform leading to that concern across that particular sector was a factor. Certainly that fed in, to your point, to the significant sell-off we saw yesterday. Nasdaq 100 closed lower by around 2%. European futures are pointing up by 0.2% after closing lower by 0.5% yesterday. FTSE 100 futures points to gains of 34 points. We look at the banking sector with NatWest coming through with an earnings beat. Basic resources and focus as well, maybe to the downside. Iron ore under pressure in the session. DAX futures pointed to gains of 0.2%, just up 0.1%. L'Oreal over in France, Capgemini as well. Anna, Guy, what are you thinking about?
I'll have a look at some of the individual stocks because there are a few of them. A couple of them in Paris to keep an eye on then, Tom. L'Oreal is certainly one of those. The ADRs over in the States really under pressure, down 7% on the back of the numbers coming through. Concern about their sales in partly in the Asian space. That seems to be a focus of the negativity. Capgemini in focus. This could be taken pretty well by the market. They're talking about pivoting to AI and the sovereignty push helping their business. And keep an eye on tech names, ASML, for example, because Applied Materials surged 10% in late trading after delivering a surprisingly upbeat sales forecast, Guy.
OK, here we go. Friday the 13th. This is the session we're looking at. Looks fairly flat at the get-go. US futures are a little bit more negative. Big drawdown yesterday. Are we going to bounce? Are we going to buy any kind of a dip in Europe this morning? Can't see all the markets, can see some of them. FTSE 100 is up by 0.1%. The Stoxx 600 is expected to push a little bit higher. There you go, flat. That's what we're looking at right now. So wait and see what other markets are doing. DAX and the SMI, we won't see for a moment. Tom, what do you got? Sectors?
Yeah, there's not a lot reflecting as we wait for those major indexes to open. They're up now. FTSE Mid is opening now a little flat. The IBEX over in Spain down 0.2%. Tech is your top performing sector, at least for now, having been one of the big laggards yesterday, up 1.1% on the tech sector. Financial services gaining 0.4%. Most of your sectors in negative territory. Biggest losses coming through for food and beverage right now, down 0.7%. Travel and leisure also softer by 0.6%. Four sectors, Anna, so far in positive territory. We'll see how this adjusts, but tech is up right now 1.2%. Again, Applied Materials was positive yesterday.
Yeah, absolutely. So it's that pushing up ASML up by 1.3%, but it's also the Capgemini story, and that stock is up by 3%. So we don't have the overall CAC 40, but certainly the Capgemini story will add some positivity to the French market. But having said that, we don't have an opening price on L'Oreal yet, and that one is certainly expected to go weaker given what we saw in the numbers and what we saw in the ADRs yesterday. So that one is halted, and so we'll wait to see what downside that adds to the French market. So technology is by far and away the best performing sector. There are a few others in positive territory to the downside, and it takes us to the point you were making, Guy. We've got travel and leisure, emphasis on the leisure, to the downside, because that's where you find companies like Entain, for example.
So this is DraftKings. DraftKings out with a really weak outlook yesterday. It fed through to a certain extent, but you're still seeing an impact coming through from that. That's, again, a market that has been completely disrupted at the moment, less by AI and more by the prediction market, but huge shifts underway and really hard to price. But the outlook from DraftKings really weak, and that's certainly rippling across to this side of the Atlantic.
Keep an eye on defence stocks as well, given what's happening in the Munich Security Conference. Safran is up 5.4%, so we'll keep an eye on them. Oliver Crook's on the ground for us, speaking to some of those executives in the defence space, of course. Back to the tech space, BE Semiconductor, which, of course, is over in the Netherlands as well, also up 2% on the back of the upside. The picks and shovels story, at least when it comes to Applied Materials, positive. Really interesting in terms of Applied Materials was what they had to say about memory chips and the fact that Samsung, SK Hynix, are having to build out these production facilities, which means there's more demand for Applied Materials and their kind of kit.
OK, more demand for kit. That takes us also to the ASML story, doesn't it? So let's talk about technology. Fabiana Fedeli, CIO of Equities, Multi-Asset and Sustainability at M&G Investment Management, with us on set this Friday. Morning. Good to see you, Fabiana. Help us make sense of the technology sector right now, because you've got some tech stocks doing pretty well out of the AI trade right now. Applied Materials, ASML is up this morning. Capgemini says it's pivoting to AI, and the market takes that well and in its stride. On the other hand, the market thinks it can start to pick losers from AI as well. How much clarity do you have on the way ahead here?
Good morning, Anna. So the market is clearly not ending the AI trade, but it's rethinking how it invests in AI. And it is asking all the right questions. It's not necessarily drawing the right conclusions. If you look at the three key areas of AI, the enablers, the service providers, and the beneficiaries, on the enablers side, there is clearly a lot of CapEx. Some of that will probably be misallocated. But some of that is looking at a total addressable market that we can't even think about right now because there is so much more than AI can do. And so there is a lot of still opportunity in that area. And then there are the service providers, the software companies that obviously we've all seen crashing in their share prices. And some of them are very justified in that share price decline because their software is not strong enough. Think about companies only do user interface. But companies that have strong systems of records where clients, such as ourselves, actually trust them, entrust them with our data, and it would be a big risk for us to move that data elsewhere, those have a much stronger position.
Okay, and is that how we discern the real losers from the companies that have been sold off as losers but might not be? Is it about data? Is it about those companies that hold the data? Because a couple of weeks ago when this started, one guest said it's all about the data. Those are the ones that are going to be okay.
Data, trust from your clients, the ability to work with your clients on regulatory compliance, the ability to make sure that there is safety in that data, cybersecurity, those are all key elements.
Is this moving faster than we thought it would?
This is moving faster than we thought it would maybe 2-3 years ago. But if you remember, we have been talking about the fact that the market has become so much faster. You know, whether it's technology and trading, whether it's a lot more participation by retail investors, this market is giving you much wider movements. And so the difficulty that we have is that in the past, we would think of a wide market movement as a signal. But now it could just be noise.
So what we've gone over during this week, we've gone from worrying about commercial real estate companies, we've worried about software companies, we're worried about logistics companies. The list goes on and on and on. How do I deal with this in a portfolio? Because normally you kind of build portfolios top down and you kind of think about all the factors. But these are single stock effects, tiny companies that are upending potentially. And how do I build a portfolio that can cope with that kind of bottom up single stock story?
You stick to fundamentals. And you said it yesterday on the program. I heard you when you said that we are all going to become stock-picking investors. And that is what is happening.
But that's really hard.
It is hard. It is very hard. It is a more difficult market to invest in. It's a market where the big trades, the macro-driven trades, are just, especially in equities, are just not working anymore.
Maybe we've got AI to help us, Guy.
Hopefully.
Yes. It knows the answers. It can tell us who it's going to kill.
Maybe, but the history of stock picking is really difficult. And at the moment, what you've got is this kind of mechanical market that just pulls money into ETFs, like kind of month after month after month. But does that still work in a world where we're trying to pick stocks because it's a bottom-up market, and that's really hard?
So we've seen two things happen. We've actually seen many of our clients saying we still keep our passive exposure, but we want to add to our active exposure.
Okay.
So we've seen that shift. And then you're seeing a lot more granular ETFs, right? ETFs are not only passives. You have a lot of active ETFs coming up now. There is a lot more detail in those ETFs, and hopefully that's going to help.
So something I'm thinking about this year as well is we've got the story around Anthropic raising additional capital. Anthropic and OpenAI reported to be looking at IPOs later this year. And whether or not you get a significant rotation of capital out of some of the legacy names, the publicly listed names, into some of those. So do you want to be, there's going to be an allocation of capital into the disruptors, the Anthropics and the OpenAIs, and away from those that are going to be disrupted, where the earnings picture is just so much more challenging now. I don't know if that's a factor for you, but if it's not, where are the clearest hedges right now, Fabiana, if you want to put some ballast into that very uncertain portfolio?
So first and foremost, you said something very important. The market has been polarized on just a few names. So you should expect the market to start to broaden. And you've already seen the broadening of that trade. And it's going to be broadening in technology, but it's also going to be broadening outside of technology to companies that are benefiting from AI. If you remember, one of the best investments after the dot-com bubble was to invest in companies that benefited from the capex that had been spent by someone else. And then the ballast is still differentiation, diversification in your portfolios. And I know it sounds boring, but it has worked until now.
No, we hear that from a lot of guests as well. Do you want to diverse into Asia? How secure is the Asia trade? I mean, it's outperformed clearly significantly versus its US index on the index level, and we've seen the strength for the SK Hynix, the Samsungs, and the Kospis of the world. But what are the linkages between what happens in Asia? At what point does the concerns in the US start to pull things lower in Asia as well? How secure is that moat around the Asian story?
It will be all about supply, ability to continue to deliver on that supply. It will all be about what kind of technology will take, if you want, the position of the current AI technology, which is very power intense. So at some point, something will shift in the market, but it's really too early to tell. And it looks like a lot of those companies that are still making the hardware for AI still have the ability to continue to deliver.
So it's about diversifying. Is it also a bit of a buying opportunity, Fabiana, or is that just too difficult to say at this point?
It is a very selective buying opportunity, but it is a buying opportunity. So we have been looking at companies where we thought there was a lot of strength in the IP, in the intellectual property. For example, those areas with data, with proprietary data that is entrusted by your clients. And some of those ones have been the baby that has been thrown out with the bathwater. And so, yes, we've gone back in.
Is diversifying, I just want to come back to this diversifying conversation. There seems to be this view increasingly, and I don't know whether it's real or not, that if I diversify out of the United States, what I'm diversifying into is uncorrelated from the United States. So if US indexes go down, these indexes won't go down or will go sideways. Is that true? Is that going to happen? Because if the US goes down, it feels like everything else is going to go down with it.
That is what we used to think.
Yeah.
But that is not happening now, right? We're seeing a lot of turbulence on the U.S. market, and we're seeing emerging markets outperforming.
Yeah.
Asian being very strong. It feels like the market is going back to fundamentals, and it's not considering anymore the U.S. as the one market and everything else as kind of the beta trade on the U.S., but it's starting to make some really clear diversification and differentiation between those ones.
On that diversification trade, what assumptions are you making about US growth and whether or not the cyclical rotation has further to go?
So one of the things that we have learned over the years is that actually the equity market performance doesn't necessarily match with the GDP growth. It's more about earnings and where those earnings come from. And innovation is going to be unstoppable at this moment, and it's very, very fast. So just focus on those areas.
Okay. Very nice to see you. Thank you, Steve, for coming, A, watching yesterday, and B, coming on and pointing out what I said yesterday. Fabiana, very nice. Thank you very much indeed. Fabiana Fideli, CIO of Equities, Multi-Assets and Sustainability at M&G Investment Management. Let's take a quick look at what the Core 6 looks like this morning and figure out what is going on here, if we can. This is the picture we have at the moment. Defence stocks are on the front foot. ASML is definitely on the front foot. The hits are coming this morning from the gambling sector and also from L'Oreal, which is under significant pressure. That's not showing up here. But we'll get on to some of the other stocks that we do need to be watching because Louise Moon has all the details.
Indeed, yes, L'Oreal under a lot of pressure today, down over 6%. That's after their results this morning. A lot of weakness in spending, weakness in China, luxury really getting hit. Not just L'Oreal, but kind of across the board, but really weighing on L'Oreal stock today. That's after their fourth quarter results. Next up, we're looking at Capgemini. They will have a look at their shares up into the green. That's also after their results today. Now, results beat estimates just about, and then there's some positive comments from their CEO around AI. So AI to fuel sales going forward. Alleviating worries about a bit of disruption there from AI, so boosting their stock today. Next up, we're looking at Norsk Hydro. They will take a look at their results. Their shares down into the red, over 3%. That's after their fourth quarter. They did beat estimates, but aluminium prices are pulling back a bit today, so that's weighing on their stock. And then gambling is another key focus. That's after DraftKings results overnight in the US. A lot of softness there, and this is really impacting Flutter today, down almost 8% today for Flutter. That's after DraftKings results. A lot of worries around prediction markets potentially disrupting the space. And finally, on to Ubisoft. Now, Ubisoft shares soaring at open, up 15%, beating estimates. So great results there and being welcomed by investors.
Louise Moo, thank you very much indeed, with some of the stocks on the move this Friday morning. Coming up, we're going to be speaking to the European Commissioner for Defence and Space live from the Munich Security Conference. That is next. This is Bloomberg.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Bringing you up-to-the-minute geoeconomic news whenever and wherever it happens. I'm Vonnie Quinn in Sao Paulo, Brazil, and this is Bloomberg.
Munich Security Conference is on. Defence stocks are up. Concerns over the reliability of the US military alliance have prompted European leaders to begin unprecedented discussions about developing independent continent-wide nuclear deterrence. Leaders are gathering in the Munich Security Conference this weekend to discuss what some see as the breakdown in the post-war global order. Let's put that all together. Oliver Crook's got that job. Let's hand things over to him.
Yeah, that's right, Guy. And really, it was 12 months ago in this very hotel that we got the first dose of MAGA sort of foreign policy, what that would look like in the form of the speech of J.D. Vance. And in those 12 months, we've obviously had a litany of different things that have materialized that have drastically changed the European defense landscape. Who better to speak to about that landscape than the EU Commissioner for Defense, Andreas Kubilius. Thank you so much for joining us today here. I'm speaking here. So we sort of mark 1 year since that J.D. Vance speech. We're here expecting to hear from Marco Rubio here as well. What do you expect to hear from the United States at this Munich Security Conference?
Well,
I would not be surprised if Mark Rubio will be more calm, and respectful. And we need perhaps really to see clearly some kind of different, languages, sometimes from President Trump, when something unexpected, can be announced. We're finding how to mitigate that, Mark Rutte is doing a great job here, or Alex Stubb and so on. But from another side, we need to see also very clear, deep strategic shift in American understanding of new geopolitical developments worldwide, when they are saying that they need to shift more towards Indo-Pacific to mitigate rising Chinese military powers. They need to move closer to Western Hemisphere. And they're asking us to take responsibility on conventional European defense, and this is a fair request.
And that is the one request that has been consistent. This is something that the Trump administration is very clear on. Over the last year, you've had the job of appraising where the gaps exist in European sovereign capabilities to try to shoulder more of that defense responsibility within Europe. In the last year, where do you see those gaps? Where have they closed? Where has Europe been able to close that? And where are they still problematic? And what is your focus in closing them?
Well, the biggest gap was, of course, on financial side. So we started to close that gap with all the different instruments and pledges from member states. For example, again, big achievement, historical achievement was made during NATO summit to increase defense spending up to 3.5% till 2035. That will, if to calculate that and to take into account that if all the member states will fulfill their pledges, it will bring during the next 10 years 6.8 trillion euros for defense. Also, we are very successful with safe loans. Now we are pushing forward 60 billion for Ukrainian defense. So on financial side, we are moving ahead. Definitely, very clear priority among what we need to develop is so-called priority of strategic enablers, where we're quite dependent on what Americans now are providing. And those, first of all, things are related with space possibilities, secure satellite communication, intelligence data, and that is what we also are very, very quickly are trying to ramp up and to develop our system.
And so I want to get into all of those, but I want to ask you first a very simple question that's a very difficult question. Without the U.S. support, if there were, for example, you're from Lithuania, an invasion on a Baltic nation now, would Europe be able to repel Russia?
Well, definitely we are dependent on collective defense, as Lithuania, as a Baltic state. And all European countries very much depend on collective defense. And I do not know any country which could be able to defend itself for a long period of time being alone. So definitely we want NATO to stay as a trustful and strengthened organization. And that also depends on how much we can, as Europeans, bring with development of so-called European pillar of NATO, additional strengths to NATO. From another side, we need to remember that also European Union, in its treaty, has very specific article, so-called Article 42.7, on mutual assistance in the case of war aggression, that other countries need to come with all the means which are available to help the country which is a victim of aggression, and we need to develop also that possibility.
And so thinking in ways that the EU can support that sort of that ambition to have more sovereignty and more sort of a stronger defense within Europe, the SAFE program, it was described to me by the Rheinmetall CEO as the perfect program. Those loans have begun to be dispersed. Do you think that we could get a SAFE 2 program by the end of this year? It's been very popular, certainly among defense companies.
Well, we are proud with that program. Really, it was achieved, and now it's final stages of implementation. Money will reach member states somewhere in April. So that's really effective and brings a lot of not only investments into defense production, but also solutions for structural problems. For example, a lot of contracts are done with a joint procurement, which is very important for us. I would not be surprised if we shall come with another one. As Commission President said, she has a lot of interest in having so-called SAFE 2.0. But for the time being, we are not discussing that. Now we are coming with special, really very important program on Ukraine, 60 billion for Ukrainian defense, strengthening defense preparedness, and those money also will be very important for European defense industry.
And we talk about a European NATO pillar. You also talk about a European army. Do you think, what would that sort of look like? That's not something that has gotten a lot of traction widely. And also, what do you think militarily the EU's role should be in the build-up of sort of the Arctic and defending the Arctic?
Well, I don't, I'm trying to avoid this terminology, European army, because it's a little bit misleading. With European historical, how to say, legacy, European army was discussed back in 1950s. At that time it failed. But what we need to talk really, again, looking into what Americans are providing us, what kind of capabilities, besides all those material ones like strategic enablers, also very important role is played by 100,000 troops, American troops, standing army, very cohesive, and which, according to experts, is playing the role of backbone military force in Europe. We need to think, if Americans really would start to diminish also that assistance, how we shall replace that. And that is where comes the question about what we call a rapid reaction force of Europeans of similar size with the same capabilities and quality. So that's what should be among our discussions, and I am simply trying to initiate, and to what I call intellectual big bang on our defense developments, because there are plenty of big issues which we need to start to discuss and to decide.
Well, thank you very much for your insight on how the Europeans are looking to deal with those issues. That's the European Defense Commissioner, Andreas Kubilius, there speaking on his expectations about what to expect here at the Munich Security Conference, potentially a more polite tone for Marco Rubio this time around.
Okay. We'll see if that tone comes through. Bloomberg's chief Europe correspondent Oliver Crook on the ground for us at the Munich Security Conference. Staying on security, the engine maker with a focus as well on defence. Safran stock is up 5.6% right now, lifting its guidance for 2026 and its outlook for 2028. JP Morgan analysts saying and reminding us that traditionally this is a business that puts out pretty conservative guidance. So it's pretty notable that they have lifted it.
The parts business is incredible. All these engine manufacturers, it's the after-sales business which is doing incredibly well. Rolls-Royce is up on the back of the same story.
Yeah.
That's what ultimately drives the margin story.
Yeah, and the more you fly, the more you service. L'Oreal, that one is a negative story this morning, down by 6%. And Tom, you were hinting at this in the break, actually, I think. But K-beauty and C-beauty brands, so this is Korean beauty and Chinese beauty brands, seen taking away some of the business of L'Oreal in some of those parts of Asia. Which, I mean, you see that in London now. You see it in other places, not just Asia. But an interesting development.
ASML is up. That's the AMAT story. That's fairly logical. I think AMAT doing well in the States yesterday, feeding through. We're almost done. In fact, we're done. You're not.
Yes, Tom
Weekend
has to stay.
is here.
Tom has more work to do.
Should we talk about your weekend plans?
Yes, let's
curling,
do that.
Lots of curling. The main one is the Calcutta Cup, obviously England versus Scotland rugby. But the Olympics are good.
4 o'clock tomorrow, approximately.
That sounds very Valentine's appropriate, all of that rugby. Excellent.
I'm sure Guy is already prepped on Valentine's Day.
I have a card ready.
I'm expecting some chocolate hearts from Guy Johnson at some point.
I put them on your desk.
Right, yes.
That
of course
was me.
you did. Of course you did. I think we buried the lead, though, here. You know, I noticed this morning that it's not going to rain tomorrow in London.
Sunday, it's going to rain.
Yeah, I know. But if you're in London tomorrow, I think this is the big news that you need to know.
Yeah, take advantage of that. Don't be plumped in front of the TV then, watching the Winter Olympics. The scoreboard is pretty unpleasant for the UK, by the way, for Great Britain. 0-0-0-0. We have no medals.
No.
Norway's top of the list.
But doing better, perhaps, on quantum computing.
Which is coming up on Bloomberg Tech Europe. We're going to look at the ways in which quantum computing, often cited as the tech of the future, is already changing the world. Some really fascinating conversations coming up. We'll give you a deep dive on that evolving technology. Stay with us. This is Bloomberg.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question. I mean,
I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you good at your job, bro. Like, this is actually the first time anybody's ever asked me that. I'm not here to say what I would and wouldn't do in the future. But the theatrical experience is one that means a great deal to me. It means a great deal to us. Mm-hmm. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. But that's where I'm at today.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
You are watching Bloomberg Tech Europe. Coming up, today we step into the world of quantum computing. Machines many believe will redefine how high-performance processing and the speed at which we crunch data. Backers say the technology could transform entire industries, from drug discovery and cybersecurity to global finance and national defence. A leading quantum entrepreneur tells us Europe could actually win in the frontier tech if the ambition is backed.
You only create this position of strength if you actually have something that you control. And I think in this way, controlling the quantum supply chain, Europe is very strong. As said, we have many companies in Europe, and now we just need to scale it.
So, can quantum deliver on its extraordinary promise? In this episode, we spotlight the progress that's been made and the path ahead with insights from key industry leaders. Welcome to Bloomberg Tech Europe. Quantum computing. Some see it as the next frontier in high-performance computing. It's built on a fundamentally different architecture that can, at least in theory, crunch data far faster than today's most powerful machines, with massive potential implications. So we ask, can the tech live up to the hype? And can it supercharge the AI boom? This processor, built by Alphabet, took 5 minutes to solve a problem that one of the world's fastest existing supercomputers would take 10 septillion years to answer. That's right, longer than the age of the universe.
The experimental Google machine used what's known as quantum computing, technology at the heart of the next great race from Washington to Beijing for commercial and military supremacy. It could mean accelerated progress in areas like drug research, artificial intelligence, defence and finance. Today's computers use binary units called bits and perform their tasks sequentially. Quantum computers use transistors called quantum bits or qubits. They handle data in parallel and can consider many different possible outcomes simultaneously, narrowing them down until the correct answer is worked out. in a fraction of the time. Google, IBM and others predict there could be a quantum computer solving real-world problems by the end of the decade. That's the hope. The challenges include providing massive power supplies, ultra-cold temperatures, and slashing error rates.
But with each breakthrough, the time frame narrows. Late last year, Google said an algorithm running on its Willow quantum computing chip could be repeated on similar quantum platforms. Another major leap.
And just like the AI race, the battle to dominate quantum computing is shaping up as a fight between the US and China. But Jan Goetz, the co-founder and CEO of IQM Quantum Computers, says it is vital that Europe plays a leading role. His company, headquartered in Finland, specialises in building superconducting full-stack quantum computers. IQM has raised $600 million to date and is working with the likes of NVIDIA to integrate quantum into existing computing hardware. Goetz says Europe must compete or risk weakening its global standing and losing its seat at the table.
If you look just at the number of startups in quantum, for example, there are more in Europe than we have in the US, for example. So this is really not the issue. We have the fundamental science, we have the research, we have the early stage venture. What is missing is two things. It's those companies that scale to become global leaders, and it is the industry engagement. There are no tech companies in Europe that invest heavily like you have big names in the US, the likes of Google, IBM, Amazon. So I think these are the two components that are missing in Europe, and this is the gap we have to fill, and this is what, of course, we try quite actively as IQM, really growing into this role, stepping up, taking a global leadership position, and then activating ecosystems that include corporates to support this journey.
Are you seeing that urgency from Brussels and other governments in Europe to support this technology?
Yes, so I think on the political level, the understanding is there, the will is there to support. I think many countries and also the European Commission have been announcing quite strong quantum strategies on what they want to do. Where we are often missing out in Europe then is the execution part.
Is quantum computing critical for European sovereignty?
Yes. Quantum computing on the use case side, it has a lot of, let's say, very beneficial use cases for humanity. If you think about drug discovery, better materials or fertilizers. But then it also has a dual use aspect, in particular on the code breaking part. So with a large enough quantum computer, you can break our current encryption scheme. But of course, as every technology, also you find other dual use applications in quantum computing. And I think it's very much a sovereign technology where Europe needs to make sure that we have a grip on it and we don't fall into dependencies that maybe we see at the moment in AI.
On that point, you could make the argument, there are those who make the argument that Europe has already lost when it comes to the AI race, particularly when it comes to the hardware, when it comes to the chips, when it comes to the large language models. If we lose this race, what are the consequences?
Well, I think AI also is still a, let's say, relatively young technology. And I think where Europe is strong at still is the industrial part and the adoption. And this is both true for AI and quantum. And if industries find out that there's different ways to use AI, maybe smaller models, more streamlined models, I think this could be a way to go. And similar actually is true for quantum. We just need to find our way. There are actually more quantum computers deployed in European data centers than in US data centers. We have sold more quantum computers into data centers than any other company out there. So there is a way to lead also from Europe. We just have to find it. So in the US, people have been betting a lot on the cloud business model, which is fine. And we're also driving the cloud adoption. But on the other side, there is also a way then to lead on the infrastructure part and going into data centers. So I think we should not always try to just copy the US and try to make it better or faster. We have to find the European way and then make sure that the European way is better.
Well, can we commercialize as quickly as the US? Is that another avenue in which the US could take a lead, is commercializing this research?
I think so. I think there's a good example. For example, in Denmark, you have Novo Nordisk, one of the big pharma companies. They have been investing larger amounts into quantum, which shows that actually industry is chipping in. On the infrastructure side, in our last funding round that you mentioned, we had the Schwarz Group, so an IT data center provider from Germany, investing into us. So I think the industry is getting there, and this is now what we need to do as a quantum community, is to activate the decision makers in these European companies to really adopt the technology. But then ultimately it's a global business. I mean, we are selling also in the US and we are selling in Asia. So I think also we should not be so narrow-minded and think we need to build like the supply chain and everything only just from Europe, because then we are missing out, again, big part. I think the mindset that we need for Europe and in European companies is that this is where we come from, but we go global and we go big. And this kind of ambition level and going big, this is what's often missing, I think, in European startups.
I know you get asked this all the time, but in terms of timelines around commercializing your quantum computing solutions, what are you currently targeting?
So from a product perspective, actually we are selling actively quantum computers, and we are selling on the one hand side into the educational market, which is actually very important and very strategic, because there is a shortage of talent already today. And our goal is that each university around the planet has one of our quantum computers to train their students, so that later on when they're in their jobs, they remember from which technology they learned on. So this is one thing, and the educational market is there and growing. Then we sell into the supercomputing market, which is also a growing market, and these are the big computing centers, and what they do is they integrate the hardware into the computers that they already have. So quantum computing is not a standalone technology. It will work hand in hand with GPUs and CPUs. For example, we are working actively with NVIDIA and other partners to integrate on the hardware level. So this is the level of commercialization today, and of course the next step, and this is really where the big potential comes, is then unlocking the applications. And the first ones will probably still be a few years away, and then is, I think, when the industry will really pick up.
What are the consequences if Europe does not play a leading role in quantum computing?
Well, I think we will fall into dependencies again, and this just weakens our standing, not only on the business side when it comes to access to the technology. I think also ultimately on a political level, Europe will lose its seat around the table when the big questions are being discussed. So I think it's very important that Europe can argue from a position of strength. And you only create this position of strength if you actually have something that you control. And I think in this way, controlling the quantum supply chain, Europe is very strong. As said, we have many, many companies in Europe, and now we just need to scale it.
Well, that was Jan Goetz, CEO and co-founder of IQM Quantum Computers. IonQ, meanwhile, is a US-listed quantum computing hardware and software company, one of several players hoping to take the tech mainstream. We spoke to the CEO of that company about how Europe stacks up against the US and the progress being made in China.
Well, I fancy IonQ's chances, most and first of all. I think that beyond IonQ, there's a very vibrant ecosystem in the US, and of course there is in Europe. The geopolitical race is, I think, very much between the US and our allies and what's going on in China, to be honest. And this is, of course, of paramount strategic importance, not just on the computing side, but also on the quantum security side.
Well, coming up, where does quantum computing go from here then? We're going to discuss with some of Europe's top quantum contenders, the CEOs of New Quantum, Phasecraft and Riverland. Join us for a roundtable in the studio. That is next. This is Bloomberg.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the US, or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Welcome back to Bloomberg Tech Europe. Now, in the long journey to realise quantum's full potential, one date stands out. December the 9th, 2024. It was on this day that Google unveiled its Willow quantum computing chip. That announcement spurred a rush from investors seeking to get exposure to the burgeoning technology, with publicly traded quantum firms soaring in the US. But more than a year on, are we getting closer to quantum going mainstream? Very pleased to say, joining me now around the desk are some of the top names in Europe working towards that very goal. Carmen Palacios Beracuero, founder and CEO of New Quantum, a British startup that builds networking infrastructure to link and scale quantum computers. Last year it raised $60 million in one of the largest quantum Series A rounds in the UK. Also here's Ashley Montanaro, co-founder and CEO of Phasecraft. It's a quantum algorithms company which has raised more than $50 million and works with the likes of Google and IBM. And Steve Brearley, founder and CEO of Riverlane, a startup that builds tools and technology to help reduce quantum computing errors. Really important within this space. The company raising $75 million in its Series C funding round in 2024. Thank you all for coming in, all really well positioned to talk about this from different angles. I want to start with a broad question about where this technology is right now. A lot of progress has been made, a lot of funds flowing into the sector in 2025. Over the last 2 decades, 25 years, there has been this gap between the hope and the promise and the reality, particularly when it comes to hardware. Where are we in this journey? When do we start to see the material benefits of quantum computing? And Carmen, maybe I'll start with you on that question.
Absolutely. Thank you, Tom. From my perspective, in 2025, the industry turned a corner where now we have better qubits than ever before. And we've demonstrated that these qubits are reaching the sort of performance that will allow them to be error correct them and really reach the performance that they need to. And the main challenge left is scaling them up. So we have good, robust quantum computers, but they're just small. We need to scale them up so that they're big enough to deliver commercial value. And I think we're seeing that in what's happening with the financial and commercial aspect, right? There's been, last year was 50% increase in investment into quantum. We started to see M&A. So I think we're entering this new phase where it's all about scaling up, consolidation, and racing towards commercial advantage.
Scaling, consolidation, and working towards that commercial value. Ashley, do you agree with that take? Was 2025 a pivotal year for quantum?
I think it is a really exciting time for quantum, and I think there's multiple reasons for that. One is that there have been really significant advances on the hardware side across multiple different technologies. And you mentioned Google's Willow chip, which is one great example of this. And I'd say also there have been breakthroughs on the algorithm side as well. I mean, there are algorithms that are achieving million-fold reductions in cost of certain problems compared with what was known previously. And I think it's because of the combination of these two things that we think that we're really on the cusp of this practical quantum advantage milestone that everyone's
And you sit
towards.
in the algorithm space, in the software space. I just want to actually, how dependent are you on that hardware progressing for you and the business to progress as well?
So in the end, having really good hardware is really important. But we believe that the hardware that we have now, or maybe a little bit beyond that, is already at the stage where we can achieve really exciting results. So the better the hardware gets, the better it is. But that's not something that we're just waiting for.
And Steve, error correction. This doesn't progress without error correction. Qubits are error prone. It's highly complex technology. But for the audience, you need the error rate to come down significantly. And that's where you guys sit. When do you agree with these assessments? When do you think we start to see real material impact, real world applications of this technology?
Yeah, so you're absolutely right that error correction is essential. The best quantum computers today, they can perform about 1,000 operations before errors overwhelm the device. But to get to large-scale commercial applications, we need trillions of error-free operations. And so that gap is bridged by a technology called quantum error correction. So it sits just on top of the physical qubits. And what's happening is we're correcting errors as the computer is running. It's essentially a real-time inference problem. We get some data from the quantum computer, and then we have to infer what's the most likely error and make a correction. And so this loop defines the clock cycle of the quantum computer.
So is this... I'm just trying to put a time frame to this as well. And I know it's difficult, but are we talking kind of early 2030s when we start to get real-world commercial impact? I know it's in universities, it's in research settings right now. When do we get real kind of commercial impact from this technology? Cameron, I've asked you this before. Have you changed your time frame on this?
No, I remain with a similar opinion. I think towards the end of this decade is when that switch will happen, and that will depend on our ability to continue to make robust and high-quality quantum processors, coupled with our ability to network those processors together so that we can start to scale in a horizontal, modular way, which is how all large computing systems scale, right? All data centers, AI data centers, cloud data centers are based on us being able to network processors together to get to machines that are big enough and powerful enough to solve commercial problems. First of all, to be able to host quantum error correction, and then to host the kind of algorithms.
Am I right in thinking your new quantum is hardware agnostic? Is that right? I mean, there's superconducting, there's trapped ions. Do you have a clear view on which approach ultimately wins on the qubit and the hardware side?
At the moment, there's very credible approaches that are making fantastic progress. Trapped ions, neutral atoms, superconducting qubits.
Yeah.
They're all delivering on their roadmaps. They will all struggle to scale monolithically, but all of them can be networked in the way that we propose. And so we will be able to work with whichever leading quantum processor we need to.
Ashley, when you speak to investors, what number do you put on the potential value of this industry?
I mean, if you're looking across the whole industry, it is incredibly difficult, actually, to put a number on this, because there are individual applications of quantum computing where that one application is well into the billions, right? So, I mean, what is the value of developing the next lithium-ion battery? What's the value of developing high-temperature superconductors that enable low-loss power transmission, or a host of other applications? And, I think it's basically the dawn of an entirely new technology, the telescope of the 21st century, as we often say. And so, the opportunities are really gigantic.
Which industries, Steve, are best positioned to benefit the most? Where do we expect to see the most impact on an industry level from this technology?
I think the earliest industries will be those that are trying to develop new medicines or new materials, as Ashley alluded to. I mean, what quantum computers can do is solve chemistry, solve material sciences in a radically new way. So we've been trying to do this for 100 years now. Traditional computers struggle to scale with these systems. And so what quantum computers enable is for people to design on computers new medicines or new materials in a way that currently happens in laboratories.
You are all examples of European talent in the quantum space. You're all creating intellectual property. You all have incredibly talented team. You're all doing amazing research that will have value. Does that all ultimately end up being commercialized by the US? Ashley, do you have a take on this?
I don't think it's not inevitable. I mean, so we are a company that was born in the UK. We now have a US office on the East Coast. The US is also a fantastic place to be. There are amazing opportunities. But I don't think it is axiomatic that companies that are founded in the UK end up needing to eventually end up in the US. And essentially what I think Europe needs to do in order to compete and to enable companies like ours and the others around the table to stay within Europe is enable things like the financing that's needed at later stage investments, to make sure that the talent pipeline's there, so that the amazing sort of academic excellence that we rely on is continuing to come through, and also just making sure that governments support the market and provide that signal that this is a really exciting technology that's pivotal for these different.
Carmen, do governments need to be more proactive in this space, and if so, what could they do to support your sector?
Governments need to be proactive, and government funding continues to be very important, maybe critical for quantum computing for the next few years. The UK just announced over Christmas £1 billion that are committed to quantum computing during the spending review timescale. We're waiting to see how that's going to be deployed, and that's going to be really critical that it's deployed as soon as possible. But I think that the UK, so a lot of the quantum science has come from Cambridge, for example, where Steve and I are based, and it's been really smart in how it's been commercialized, because essentially what the UK has done is that it's creating leaders, global leaders, in essential pieces of the quantum computing puzzle, right? So if you ask an expert, who are the leading companies in quantum error correction or in quantum algorithms, they will mention Riverlane and Phasecraft. And if you ask who are the global leaders in network quantum computer, they will mention New Quantum.
Do you worry about being M&A targets? There was a lot of M&A activity in the space last year. Are you having US investors tapping on the shoulder, US companies tapping on the shoulders? Could you become M&A targets? Is that a concern?
I mean, I think this is a good problem to have. So I think that there has been a lot of M&A activity in the sector recently, which I think is a sign of firstly the huge amount of excitement, but also the fact this is a huge challenge. In some cases, people are feeling, for example, doing software is very hard. We can't do it on our own. We want to get someone in. But I think, I mean, for us, it's far more exciting to do this sort of thing independently. We
have a question from a viewer asking about what quantum and encryption cracking could do. If you get quantum computing, it can crack encryption coding, and what it could do to the crypto space. If you have a view on that, Steve. I mean, there's potentially certainly an encryption shock that comes about as a result of the application of quantum computing.
Yes, that's right. I mean, at trillion error-free operations, quantum computers will be able to solve number theory, math-type problems that could break current public key encryption. And so it's really essential that standards bodies and the industry transition to what's called quantum-safe encryption. That's a process that's been running for over a decade now. NIST has produced new standards for schemes that would be secure against future quantum computers as they are built. So that's absolutely a critical challenge right now, because we can see that coming in the time frame of kind of early 2030s.
Carmen, just very briefly, should we brace for an encryption shock?
Well, absolutely, but how much depends on the longevity, or how long you need to keep your data safe. So if you care about a time scale of 10 years, then you're already probably late. If you care about a time scale of seconds or minutes, you have a little bit more time. So it really depends on the industry.
Okay, fantastic. Really fascinating conversation. We could keep this going for a long time, but we've run short of time. That is our panel. Carmen Palacios Perecuero, CEO of New Quantum, Ashley Montanaro, CEO of Phasecraft, and Steve Brearley, Chief Executive of Riverlane. On the next episode of Bloomberg Tech Europe, we're going to focus on Sweden and why the country has been called the Silicon Valhalla. Catch that episode March the 13th here on Bloomberg TV. That is it for Bloomberg Tech Europe. The Pulse is up next. This is Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Haslida Amin in Davos, Switzerland, and this is Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time,
helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise,
with some fun along the way.
This is Bloomberg Surveillance.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua, live at the Munich Security Conference, and this year's meeting takes place amid the backdrop of mounting instability and escalating conflicts, with leaders navigating a new world order. Delegates here, including dozens of heads of state and government, will discuss topics ranging from the future of the transatlantic relationship to the security implications of AI and technology. Now, our guests this hour include the Polish Foreign Minister, the PIMCO Vice Chair, Amundi's Head of Geopolitics, and the Executive Director of the Aspen Security Forum. Now, modern militaries are increasingly leveraging big data and artificial intelligence to gain a tactical edge over adversaries. Palantir sits at the center of this shift, maintaining expansive defense contracts with the U.S. and allied governments. But it's not without its controversies. It has faced criticism for its role in President Trump's deportation of immigrants through its contracts with ICE. Well, Sean Manasco, Palantir's international defense lead, joins us now. Sean, thank you so much for joining us. I want to get onto the ICE contracts and whether this has an impact of negotiations. Do other customers around the world ask you about it?
Really, they don't ask us too much about that, and certainly it's been in the news. But as it turns out, we've had a long-standing relationship through multiple administrations with the Department of Homeland Security. And I don't want to get ahead of them, but I would say that that work is, I know, important to many people, and we're excited to continue to do what we can and work with democratically elected leaders and administrations. And I foresee that happening into the future.
Can you talk specifically about the UK when, some lawmakers actually say, we're worried about using Palantir technology in some of our NHS drives or actually government drives. Do you go and speak to them, and what do you tell them to reassure them that it can be used as a force for good?
Yeah, they don't talk to us directly about that, although I wish sometimes that they would. I would say that the work that we are doing in the U.S. And the technologies that are being employed, much like they're being employed on the modern battlefield, like in, say, for instance, Ukraine, is really important. And that's where I spend most of my time is with militaries around the Western world and trying to employ our software to help them.
What do you see actually then on the battlefield? Again, we often talk about some of these contracts, in AI, in defense being used at scale, but they're not yet. We're just at the beginning.
Yeah, we are just at the beginning, but the Ukraine crisis has taught us a lot. And there have been a lot of lessons that we've been able to glean from our work in that conflict. And as it turns out, I think many nations are struggling with this idea of can we internalize those lessons and deploy them to our forces? Some are further along in that journey than others, but as it turns out, in the modern battlefield, if you don't leverage the right and very best technology, leverage data at scale, and bring it to bear for your men and women who are in uniform, you're destined to be not in a advantageous position. And so I'm excited about the strength of our conversations with many countries. But I would say I would love for that to be even more. And our work with NATO is an example of an affirmation of the technology actually works, and we can deploy it very quickly.
Sean, I mean, when you speak to people in government, they say they want the best technology, but they're worried about confidentiality. They're worried about giving out some of the data. So again, is there a way of getting encrypted data so that you analyze it without, for example, the Department of Defense giving away everything to a tech company?
Absolutely, and we've done this for many, many years in Europe. And this idea of sovereignty, I know, means different things to different people. But if the data, the software is deployed in your data centers, you control it, it's administered by those sovereign entities, really those conversations don't go anywhere other than to say, I understand that I maintain the sovereignty. So you can move data safely and securely and seamlessly leveraging the software itself.
Is there a barrier to, not terror, but is there a barrier that would actually be much easier to scale up? So is it encryption or is it something else?
It's not really that. It's really more about compute. And so having access to the very best chips and the very best servers so that you can actually keep up with the modern pace of warfare is really what is the most important thing. And the limitation for some countries as they try to actually posture themselves and the alliance, right, to provide the maximum amount of deterrence that they can.
I mean, some of your values are, and you say this openly, I think one of your logos is pro-democracy. How do you marry that with also working for governments that maybe don't uphold democratic standards that we see in our eyes?
Yeah, it's a great question. We made the decision very early on that we would only work with democratic and Western type allies who really share the same common view of the world that we do in the Western hemisphere, so to speak. And so what I would say is that that particular stance that we have taken prevents us from ever doing business with countries that don't share the same values as Western nations. And so we have never done business in Russia. We've never done business in China, as an example, nor will we in the future.
But is there, I mean, not a danger, but actually the worlds and alliances are changing. So it's a bit of a fuzzy concept these days.
That's why it's really, I think, interesting that we're here in Munich at this conference, because these are like-minded nations that come together and really work to strengthen partnerships and alliances such that we can provide the best level of deterrence that we possibly can. And that's where our energy is, and that's where our focus is, and that's where these countries are asking us to spend time with them to understand how they can employ the technology so that they can be contributors to the overall NATO alliance. And so I'm encouraged by that. I hope that this conference will be a reinvigoration of the collective good that we can do by working together.
Jean, I mean, warfare on the battlefield is changing quite a lot. So again, you're giving the ability to computers then to decide, or to robots or drones to decide whether to kill or not. Like, how ethically do you think about that?
Well, it's a topic that we spend a lot of time with nations discussing. But the reality is we think there has to be a human in the loop. That is, in stark contrast, though, some of those countries that wish to do us harm, who are more than willing to let an AI agent talk to an AI agent to actually deliver a kinetic strike. And that's not what we do with our software. That's not what we encourage the nations that we work with to do. But I do think that that's going to begin to change over the course of time. And who knows, having a person in the loop may, in fact, just be the person who's actually entering in the prompts to, for instance, a large language model or some other type of AI agent.
So you don't see it going agent to agent? Because it feels like that's the direction that we're looking at.
Yeah, I think it's really important that there is a human involved and in the loop as those agents work together before, in fact, there is some type of kinetic strike. And so that's what we believe is the case. But again, the adversary, though, that we are up against will actually try to let those agents just deliver the kinetic action themselves. And so what we have to figure out is how can we make sure that our decision cycles are so quick to compete with that reality.
Right. And you have to be on the field. I mean, even as a foreign correspondent, I was always told that you have to also trust the team on the ground to make the decision. So if you have someone at central command making that call, it may not be the right one.
Yeah, it could be that I wore a uniform at one point in my life, and so I appreciate the person on the ground who's got the best perspective. But also there are things that are happening at different echelons that they may or may not know. And so the idea is, how can you take what's happening at the strategic and operational level and bring that down to the tactical level so that they can make the very best decisions to defend themselves in the territory that they're looking to try to defend.
Sean, are you surprised how fast this technology is advancing, or is it actually slower than you thought 5 years ago?
Given the threat, I would say that it needs to be moving even faster, although it is moving at quite an aggressive pace. And I really credit NATO and SHAPE for taking the technology and deploying it. We've been doing that for the last year. And so it is beginning to build momentum. The question, I think, for us collectively is it fast enough in light of the threats that we all face, especially here in Europe?
But how do you stop bad actors from actually engaging, like some of your software?
So our software is very, very secure, and there's a reason why we've had such a long-standing relationship with many countries here in Europe. And so they understand and they can control, again, back to sovereignty. Yeah. If they can control who has access to it, who administers the systems themselves, which they do, then they can sleep well at night knowing that there are no bad actors in the systems themselves.
What are you expecting at Munich Security Conference? I imagine you're also meeting with clients. Do you think a lot of the conversations will be around, well, you're an American tech company, can we trust you?
Right. Well, what I hope to be engaging in conversations about is how can we deploy a set of tools today that helps our men and women who wear a uniform do what they need to do to defend themselves. And so this idea of needing to be able to fight tonight is very, very an important concept. And so those men and women deserve the very best hardware and software so that they can do the jobs that they have signed up to do.
I mean, has the war in Ukraine actually, again, changed your perspective as a former military?
Very much so. It's certainly a lot more deadly and lethal and faster than I ever had experienced when I wore a uniform. And so that speed is what really drives the need for you to have the very best software so that you can actually make the most of the individual weapon systems that you employ, because you have to be able to do that in time and space so that you can actually deliver the outcome that you're looking for. So, like I said, we've been there from the very beginning. We've learned countless lessons that we're then beginning to take to other countries that we partner with. Not only countries, but also companies that we partner with, both here in Europe and abroad.
Yeah. I mean, you see you see more stuff than most of us when it comes to modern warfare. What keeps you up at night?
Well, we should all be very concerned about swarming drones. We should all be concerned about the ability for our adversaries to produce these munitions very quickly and at low cost. And so this idea of having affordable munitions that you can manufacture very quickly and actually deploy is so important. And that's where I would say the more countries actually take advantage of dual-use type technologies like ours, the better they're going to be able to actually push capabilities forward to the tactical edge to defend themselves.
Sean, thank you so much for joining us. That was Sean Monasco, Palantir's International Defense Lead. Now, coming up, we'll talk to John Stadinsky, Vice Chair of PIMCO, also Senior Advisor to MSC, and Anna Rosenberg from the Amundi Investment Institute. We'll talk about the impact of geopolitical events on global markets, but also, of course, on world affairs. That's next, and this is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Earnings season is here.
Let's get back to the earnings story.
Get all the details that you're going to need to start the trade.
Bloomberg is first to break the numbers.
A bunch of earnings.
Pretty agricole.
Earnings from Heineken, ABN AMRO reporting as well.
Fantastic reporting from you and the team.
With the smartest insights.
You've delivered again record results.
If we take a step back and look at the yearly results, the income is stable.
Our earnings interviews continue. Lots of really contrasting conversations.
Continuing coverage on Bloomberg.
The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacroix, here live at the Munich Security Conference. Now, beyond world leaders, of course, the Munich Security Conference draws finance executives seeking a front row seat to how geopolitical shifts will disrupt global markets. Well, John Studinsky, vice chairman of PIMCO, is no exception, except he's also a senior advisor at MSC, and he joins me alongside Anna Rosenberg, head of geopolitics at the Amundi Investment Institute. So thank you both for joining us. Anna and John. John, let me start with you. When you look at MSC, I mean, last year was a bit of a shell shock for a lot of leaders, where we had the vice president, J.D. Vance, showing up saying, look, Europe is not doing enough. Are we expecting anything different from the U.S. administration this year?
Well, Munich Security Conference is celebrating its 62nd anniversary. And, you know, it's one of the original creations of Henry Kissinger. And I think it's really come into its own in terms of becoming a global focal point. We're expecting a very powerful speech from Chancellor Merz later today. I know he's expected, the Security Council wanted him to give a short speech, and he's in fact going to give a long speech. So I think he's going to try to cover a lot of the ground. The whole focal point certainly in the last 2 or 3 days has been Europe trying to reassess its role in the world. And that was obviously triggered by the Mark Carney very, very clever speech. Mark's not here, sadly, but I think his presence, he's the elephant in the room here. He's here more than ever. So I think this year, in fact, is going to be a year where Europe is going to be ready to talk about how it's going to re-engage and actually reestablish its legitimacy in the world.
And it's true, Anna. I mean, that Mark Carney speech in Davos was almost, you know, it was a real call to middle powers to come together and kind of be like a force for good. I don't know if the middle powers of Europe were actually listening or listened or stepping up to the challenge.
Well, I think I've been coming to the MSC now for about 4 years. And what you can tell is that I think the first year there was the Russia-Ukraine war had just started, and there was still the feeling that Ukraine could win this. So there was a lot of enthusiasm about that. The next year, there was a realization that that wasn't going to be the case. The third year, we had the Vance speech. And I think now we're in this position where, okay, we have to kind of go this alone to some degree. And to me, the question is, how good is Europe going to be at that? Are we going to hear more optimism this year? Ability to kind of implement some of the reforms that we had in the Draghi report, etc. The security, the defense issues. The challenge that we have is that Europe is one of the middle powers that is completely dependent on its security from the US. And I do not think that that's going to change, because it is not in the US geostrategic interest to really let us loose and do our own thing. We will always remain dependent on US security.
I mean, this is, you hear a lot of leaders trying to get away from that or actually strengthen the European powers. This is complicated by U.S. and China. What is the right way for Europe to look at China, John? How do you see? I mean, there's so many global forces that could come all at once that make the situation very complicated.
You couldn't have two countries more different than America and China. And right now, the Chinese know where America's coming from. They don't really know where America's going. And I think what's happening is, remember, China functions on a 5-year model, and they've had 15 5-year plans. They look at long-term investing, they look at long-term infrastructure, long-term strategy. They've been ahead of the game on power, ahead of the game on data and digital infrastructure. They are hanging back and quietly developing transactional relationships across the globe and strengthening their relationships, not just in the global south, which they talk about, but strengthening those relationships in Europe.
Anna, do you worry about, something that we haven't thought about, the biggest risk that is unpredictable? Because we talk about Taiwan, we talk about U.S. foreign policy. There's so much concern about everything. I wonder whether we're focusing on the wrong things in time.
Well, I think the risks are clear most of the time. The one thing that I worry about and that we don't really know the answer to is how is the AI race really going to develop? Where is it going to leave middle powers? Are we going to be fully exposed to the US, totally exposed to China? What's the position we're finding ourselves in, especially in Europe? Because right now we do not have much leverage in that space. And to me, that is something I worry about, because if this new world order and however the AI revolution is going to play out, we haven't found our footing. And we need to find a space as Europeans to have companies that can also create leverage in this geopolitical new normal that we are in.
What do you think the new world order looks like? Are we already in it, John?
No, I think you're in an incredible state of transition. And, I've spent a lot of time where, given my PIMCO role, I spend a lot of time with the biggest pools of capital. The pools of capital in the world are, the major ones, many of them are decoupling. They're not decoupling. We talk about decoupling, but they're not decoupling from America. They're de-risking from America. And de-risking isn't about anti-Americanism, it's about pro-resilience. And it really is about pro-resilience. And I think when we look at Europe, we look at I've had fascinating conversations with Europe, and I think you might see out of the 27 countries, Francine, you're going to see a group of them becoming very nimble, very fast-footed. The Nordic region is particularly impressive. You've seen the Danes and the Swedes. They want to play at the global lead in quantum. You just had a panel a few minutes ago on Bloomberg on quantum. Yeah. You see them being much more on the front foot on NATO and defense. We have a lot of capital raising initiatives right now for defense funds, defense infrastructure. The German government is setting aside a lot of money for this. So Europe is, ironically, it has the whole European defense budget is half the U.S. defense budget. The U.S. defense budget this year is going to be approximately $1 trillion. The European defense budget at the moment is about $500 billion. But actually, when you look at the size of the armies, the manpower, the European army manpower, arguably they may not be as well trained, according to the Americans, but they almost double in size. So Europe is going to try to reestablish its legitimacy. And remember, as Henry Kissinger always said, to function in the world, you have to have legitimacy and power. And Europe now has to get the power side in the respect mode. And that's what they're going to work on in the next 5 years. But it's going to take 5 years or 10 years before they actually do that. And that's the period of this interregnum where the relationship with America, the security relationship with America, is going to be very, very important.
But I mean, to your point, it can be much more difficult if you don't have big tech companies in Europe. It's much more difficult if you also need to work on competitiveness in European economies.
Yeah, absolutely. I mean, there are a lot of political constraints that we still have. And I think there is now political momentum. There is an understanding that things need to change. The question is, how much space is there for change? Because we have, ultimately quite a lot of struggling political leaders in many countries. And usually, geopolitics depends on local politics. Yeah. Everything moves up from there. So if someone is constrained by local politics, that limits their ability to act on the global stage. And the challenge that is that Europe has limited geopolitical power because we do not currently have the power in this world, in this new world that we are in. You have power if you have nuclear weapons, strong militaries, and if others depend on you, basically natural resources. And Europe has one big advantage, which is we have a lot of soft power. And I think that's something that you have seen come to fruition now with the EU-India trade deal, the EU-Mercosur trade deal. Europe is diversifying, as you were saying. It's de-risking from the US. And I think we're going to see it muddle through. But I agree with John that a real paradigm shift will take a few years.
John, what have we learned about U.S. foreign policy since, the beginning of the year? There's been Venezuela. We're waiting for something maybe in Iran. But the underlying, thread is what?
Transactionalism. And it's funny because I use a couple of words of transaction, which sounds economic driven, with ism, which sounds like it's a foreign policy. And it's not just, I know Ian Bremmer talks about the Don Roe Doctrine, but I think this American foreign policy, and there's an emerging discussion, and I think you have a panel here, we have a panel here, about the new American exceptionalism. People talked about American exceptionalism dying. The new American exceptionalism is, what is its role going to be in the world on the foreign policy side? Trying to actually not be a policeman, but probably play a role in trying to bridge economic interests with political stability.
I mean, I guess the concern is that if it's always about transactions, then you don't have an unwavering ally.
Well, I mean, that shouldn't be taken for granted anyway. But I think we have seen one remarkable consistency in U.S. foreign policy over the last year, which may seem contradictory, but it is that American presidents come and go, but U.S. core interests always stay. And when you want to look at one constraining factor for this current administration, it is those core U.S. interests. So talk about walking away from NATO, walking away from Ukraine, walking away from Europe, even not really supporting Taiwan. That is not what we see in the real actions. If you look at the national security strategy, if you look at the new defense law that was passed, there is still a lot of support for allies. It's clear that the U.S. needs Europe, needs NATO as an ally, because it's a key advantage compared to Russia and China. So I think, and as a result also, by the way, we see the U.S. has to continue to be interventionist, because it is part of the U.S. core interest to be. So if you want to look at foreign policy moving forward, look at U.S. foreign policy in the back.
So we have a number of speeches here. John, what are you most looking forward to? So the Chancellor, the German Chancellor, Friedrich Merz, kicks us off, and then is it the Chinese foreign minister or someone else?
Well, I think you're going to hear a lot of very articulating views from the President of Finland, the Prime Minister of Denmark, Mette Frederiksen. I think I'm looking forward to hearing a lot of the middle power voices emerge, because I think they are going to take a bigger and bigger leadership role in Europe. And I think those voices are going to be driving some of the themes about the future in terms of, and remember, capital chases credibility. And if these voices sound clear and strong, that's going to strengthen the capital flows into the European model.
So interesting. John and Anna, thank you both for joining us. Anna Rosenberg, Head of Geopolitics at the Amundi Investment Institute, and John Studinsky, Vice Chair of PIMCO. Coming up, as Russia's war on Ukraine heads towards its fifth year, world leaders gather here in Munich, and we'll be speaking to Radoslaw Sikorski, the Polish Minister of Foreign Affairs and Deputy PM. That's next on Bloomberg.
Peru is maybe first country inspired to me to how can I use the different ingredients. First time I went to Peru, trying to culture food. I never had this ingredients never used in Japan. Kind of like a wow, you know, and cilantros, chili, garlic, and olive oils. It's a lot of good seafood, complete a different way. Example, they have the fresh fish, but Japan, the fresh fish uses sashimi, but Peru use fresh fish, make the called ceviche, cooked with the lemon juice. You know, never use the soy sauce. First time I eat this, kind of wow. So then after this one, my open eye more, my cooking style that change, combine to Japanese style and another country food, then make novel style.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here at the Munich Security Conference. Now, this year's Munich Security Report has described the current era as one of a wrecking ball politics. It says sweeping destruction is the order of the day, and as a result, more than 80 years after construction began, the U.S.-led post-1945 international order is now under destruction. With us now, Chad Thomas, Bloomberg's executive editor for Europe, and Jennifer Welch, chief geoeconomics analyst at Bloomberg Economics. So thank you both for joining us. I'll get into your fantastic report that you're basically, showing the world here at Munich Security Conference. Chad, you always have the best and hardest job of getting everyone together to work to try and break some news here at Munich Security Conference. Like, what are we watching out for? What are you looking out for?
Well, I think, as we always are at these big events like this, Francine, when we're there together, we're looking for that moment, that thing that comes as a big surprise. Last year, of course, we had J.D. Vance here, and he dropped a bombshell speech that people just weren't expecting because it wasn't really about the security conference ultimately. And so we'll be watching to see what does Marco Rubio, he's giving the speech for the U.S. this year. What does he have to say? We hear from sources that's probably going to be more traditional, more in sort of the defense space, but it's really at this moment as we're kicking off, waiting to see, is there going to be a moment that everybody's talking about later in the day?
Jennifer, I love this is what Bloomberg does best, is basically you put numbers and analysis into what people are afraid of, right, which is conflicts, new conflicts, old conflicts, current conflicts. So talk to us about this report and actually what you found the most surprising in putting it together.
Well, keeping in line with the theme of the destruction of the international order, we tried to put a cost on what that destruction would look like by estimating the cost of conflict across these 7 hotspots, from the Taiwan Strait to NATO's eastern flank. And the highlight is it's much bigger than most would imagine. A conflict over Taiwan, we estimate, would cost about $10 trillion to the global economy. That's almost 10% of global GDP, more than the cost of the pandemic or the COVID. And I think when you take a look at just the economic cost, it really rounds out the consequences for the global economy. Really, no major economy will be unscathed by this. And that really is in part of the conversation here in Europe, not just about Russia, not just about the transatlantic relationship, but also Asia.
It's a great report that we're also pushing out on social media. Chad, I mean, there's this idea that, middle powers kind of rallied by that Mark Carney speech in Davos will come together. Is that what we're going to hear today? Are we going to hear fighting talk? Or is Europe kind of just going to lay low and see what the Americans say?
Well, I think, we have the German Chancellor, of course, we're in Germany, speaking this afternoon, and we hear that he will really lay out his vision for Europe today and sort of the defense of Europe. So that will be something we'll be watching for closely. Of course, there are many meetings today regarding Ukraine, and we have the Ukrainian President Zelensky here. So we'll be watching to see, is there any movement on that front. We're not honestly expecting there to be big movement, but there was one person saying today, these things happen in drips and drips and drips until you have a waterfall.
Yeah, but thank you both. I know you'll both be very busy, so good luck for the rest of the conference. Chad Thomas, Bloomberg's executive editor for Europe, Jennifer Welch, chief geoeconomics analyst at Bloomberg Economics. So under President Donald Trump, the world's largest economy has retreated from global initiatives amid a backlash against globalization. Ajay Banga, the World Bank president, says multilateralism still has a role to play despite the pressure on many international organizations that were established after the Second World War.
Every day someone says multilateralism is dead.
Yes.
Do you agree with that?
No. Because during the last year or two, when things were really tough, IDA 21 happened. We got to raise money every 3 years for that part of the bank that goes to 78 poorest countries. Because we give away 1/3 of the money every year without repayment. So it kind of runs out, even though we are profitable and the rest of the bank runs on its own. But this one requires recapitalization. During this entire period, we recapitalized IDA 21, that is the campaign, at a record level, higher than ever earlier. And that was during the time period that the Japanese government changed, the German government changed, the French government changed a couple of times, the British government changed, the American government changed, the Canadian government changed, the Korean government declared martial law on the day of our event in Seoul. So even with political turmoil, there is a role for multilateralism. The question is, what kind of multilateralism aimed for what? And that, I think, is the issue.
And so how has it changed? This is what public money that gets married also with private money.
Yes, absolutely. So that's a really important point, that you will find that fiscal constraints exist everywhere in the world. The developed world has its own issues.
Yep.
And therefore, relying on handouts is not going to work. I really believe in any case that handouts have a low outcome probability, and that you have to find a way to incent people to use the money they're getting, to use it for better. It's not that you don't need some handouts, but you do need, that's grants, but you do need as well the incentive to use that money to make things happen. And I think the private sector and private capital mobilization combined with the money you can get from the public sector, combined with philanthropy, that's a good combination to work with.
Well, you can watch the full interview with the World Bank Group President Ajay Banga on Leaders with Francine Lacqua. That's today at 5:30 p.m. in the UK, 7 p.m. Eastern in the US. You can also stream it on Bloomberg Originals, and you can watch it on the Bloomberg website. Now, we're here at the Munich Security Conference. It's, of course, been a big day and a big year when it comes to foreign policy. Ukraine set to receive as much as $35 billion in new military aid from allies to strengthen its air defenses. Now, this comes after a series of massive Russian airstrikes on Ukraine's energy infrastructure and civilian targets. Russian aggression remains one of the biggest topics here at MSC as U.S.-led negotiations on peace continue without a breakthrough. Well, I'm delighted to now be joined by Radoslaw Sikorski, Poland's Minister of Foreign Affairs and Deputy Prime Minister. Minister, thank you so much for joining us. Mark Carney was talking about these middle powers. What does that mean for Poland? How is Poland organizing itself in this new world order?
Well, we think that Western Europe spent too long consuming the peace dividend after the end of the Cold War. We've been spending 2% for 20 years. We're now at 4.8% because even though Russian capabilities are not what we thought, they can't win in Donbass, but their intentions are much worse. So we need to modernize by the end of the decade, and then I think we'll be ready to deter Putin.
I mean, how do you see the relationship with the U.S.? Do you think this transatlantic partnership is broken to a point of no return?
It's going to be different. I just met Secretary Colby from the Pentagon. The U.S. presence in Europe will remain, but in a more limited, more strategically focused way. And we Europeans need to stand up land forces. Germany changed its constitution in order to do that. I told you about Poland. Others need to just to do what they have pledged to do at successive NATO summits.
Minister, when you say the relationship is different, I mean, is it transactional? Is it based on business instead of allyship?
was always based somewhat on business. Just read the Washington Treaty. It's about economic collaboration, cross-investment, and all that. Look, in the past, when you've been in these jobs for almost 20 years, you've seen a lot. On the European side, promises were made to the United States that were not always kept. And so there is now greater frankness in telling us that we need to do more. And I think we should get serious.
What are you expecting as the main message from the Secretary of State, Marco Rubio, when he shows up? I mean, last year was a bit of a cold shower, frankly, hearing the Vice President, J.D. Vance, talk about Europe.
And it wasn't about defense. This is a security conference. It was more ideological. I would like the conference to firm up our resolve to sustain Ukraine in the fight. If Putin managed to conquer Ukraine, Europe's strategic position would worsen, and we would have to spend more on defense. It's cheaper to sustain Ukraine in the fight.
Do you think there's as much resolve as 6 months ago in supporting Ukraine?
The U.S. is no longer paying for its deliveries to Ukraine. We Europeans are. That gives us the right to have a voice in the arrangements and the outcomes. We've pledged, we've already spent over 200 billion euros. We've pledged another 90, which should be enough for Ukraine for 2 years. But if we chipped in some more, Ukraine has capacities unused in their own defense sector. We could then change Putin's calculus so that he recognizes his criminal mistake.
But, is Europe actually involved enough? I mean, we also hear about negotiations that don't involve Europe in ending the war in Ukraine. Like, how does that make you feel, and how does Europe get something at the table?
That it's getting a little strange, that we pay for the war and yet we don't even always have the full information. So this is where the US, on the other hand, could recalibrate.
Thanks to what? European resolve? Does Europe need to be more forceful?
We are spending real money, whereas the US is actually making money on this war. We are buying US weapons for Ukraine.
Yeah, there's been sanctions packages under sanctions packages against Russia. Are they really making a difference?
Yes, they are. Russia lost the most lucrative markets for its oil and gas. This clunker fleet is increasingly expensive, and India is ceasing to buy Russian oil. They're having to overpay for components and give discounts for gas that they send to China. The Russian National Reserve Fund is almost empty. They're beginning to sell their oil reserves, gold reserves, which is their last reserve.
But does that make Russia more desperate, or does it make the conflict shorter?
Well, wars end in all kinds of ways. World War I ended when Germany ran out of resources. Yeah. And Russia is beginning to run out of resources of all kinds.
You've known Secretary Rubio for years. Will you meet with him?
Yes, it's planned. I mean, it's a moving feast, as you know. But, of course. But we're planning to talk here.
Will he give you reassurances of the role that the U.S., at least from a moral perspective, can help in Ukraine?
Our president was in the White House last year, and President Trump promised that there would be no reductions in Poland, and the Pentagon confirms that. So we think that U.S. presence in Poland, at least, which means that we're protecting the Western Europe, that will continue.
Minister, how do you look at technology? So we had a good conversation with, the defense lead at Palantir. It seems that Europe just also doesn't have really, technological AI defense capabilities. Do you think that's coming? Are they going to be organized? Is there sovereign concerns?
Well, the SAFE mechanism, 150 billion euros, certainly in the Polish allocation will be favoring cyber security and those kind of capabilities. But yes, I mean, 300 billion of Europeans' pensioners' money goes every year to the United States to feed their entrepreneurial economy. We need to complete the single market. We need a banking union. We need a capital markets union. We need to spend more of our money in Europe.
But what do you think the problem is? That heads of states in Europe are weak, that they don't have the right mandate, that is too short term?
It's constitutional. We are a confederation. The United States started as a confederation, and then they went on to constitution, and they became a federal state. So our problem is that which is desirable is politically difficult because we are so fragmented.
But so will anything change? And actually, if Europe says we need to wake up, we need to be stronger. You talk about capital markets union. I mean, we've been waiting that for like most of my lifetime.
Organizations and countries reform themselves only when it's almost too late. And it is almost too late now.
Minister, what are you expecting at Munich Security Conference? What would make a good Munich Security Conference from your perspective?
What I want to hear is from our American friends and allies is where we want to be in this relationship in 5 or 10 years' time.
And where do you want that relationship to be?
Well, we'll hear from Marco Rubio.
From Secretary Rubio. Just a final question on Ukraine. How do you expect? I know it's a very difficult and impossible question, but what do you think the steps in terms of time frame will be this year to bringing peace? Does it just drag on, or
despite Russia's cognitive warfare on us, Ukraine is not losing this war, is imposing huge costs on Russia. And Putin should make a deal before it's too late. But of course, when you're a dictator, people lie to you. You have rose-tinted glasses, and so he thinks he can still conquer Ukraine. He cannot.
Minister, thank you so much. Radoslaw Sikorski, their Polish Minister of Foreign Affairs and Deputy Prime Minister. Now, coming up, we'll have plenty more, of course, from the Munich Security Conference, how policies favoring destruction over reform are gathering momentum across Western societies. We'll discuss the new era of so-called bulldozer politics. More on that next, and this is Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time,
helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise,
with some fun along the way.
This is Bloomberg Surveillance.
The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua, live at the Munich Security Conference. Now, we've heard from data giant Palantir on the tech outlook. We've just spoken to the Polish foreign minister. Now, let's explore where U.S. foreign policy might go from here. With us now, Anya Manuel, executive director of the Aspen Strategy Group and a former official at the U.S. State Department. And, of course, you all know John Micklethwaite, Bloomberg's editor-in-chief. So thank you both for joining us. John, let's start with you. I mean, this is a kind of an odd Munich Security Conference, because last year we had J.D. Vance basically telling ideologically the Europeans that they were doing things wrong. Are we going to hear from Marco Rubio in a more friendly or ally-like way?
It's all odd for me because it's the first time I've been. But in general, I think that Yeah, I think Rubio will probably do it in a slightly kinder, nicer way. But the underlying message will be the same. You know, we want you to arm up. Rubio's also a big apostle of focusing quite hard on the Americas. And we have an interesting piece this morning, looking at the voyage that Rubio has been on from this sort of neoconservative past towards which, and neoconservatives believe very firmly in the idea that America is there to defend freedom, to project the West, and it's not about cozying up to dictators like Vladimir Putin. But he has managed to find an accommodation with Donald Trump, and that's been an interesting voyage to watch.
Anya, what's your take on some of the biggest risks out there? There are many. Is there something that we're not seeing?
Well, I think we're seeing them all. The Munich Security Conference always covers the waterfront. I'm surprised. I've been here for a day and a half, and there's been very little discussion so far of China, because I think there's so much about the U.S.-European relationship that isn't as close, as you just mentioned, as it was. There's a lot of focus on the Western Hemisphere, great. But I still see China as one of the biggest problems. I mean, when you see what's happening in the Taiwan Strait, what's seen with the increasing exercises around Taiwan and in the South China Sea, it's relentless, and it's not getting any better.
I agree, but in a slightly different way. I think that there's this sort of subtext going on with the Europeans. Mark Carney was due to come here as well. You had Starmer going to see Xi Jinping. You've had Carney going there. You've had this element of the Europeans sort of slightly reaching out to China, and there's a very interesting sort of backstory to that I think at the moment Americans in a post-Trump world will probably forgive them a bit. They'll say, well, that Trump was pushing you in that direction. But at some point, I don't see, very much like Anya says, I think America's main focus will always be China. And the more that the Europeans cozy up to the Chinese, the more they run the risk of causing problems like that. And I think there is a sort of subtext there. It's not on the main stages, but behind the scenes, you see people arguing about that.
Well, and you just wonder how much of it is for show and how much of it is real realignment with China. And I tend to think that it's mostly window dressing at this point to say we have alternatives.
But Anya, I mean, I guess from a defense point of view, there's now question marks on whether if China were to invade Taiwan, whether the U.S. would do anything about them, if there was some kind of commercial deal on the side.
Yeah.
I mean, could this be a reality?
Well, it's interesting. Actually, when you read the national security strategy and the national defense strategy of the United States, they're very clear. And on China, it's sort of right down the line. It sounds very little different from what you've had in previous administrations. Now, there were a lot of China hawks who were in this current Trump administration, and they've been managed out. But I don't see from the Pentagon things really looking much different. Certainly from Indo-PACOM, when you talk to our commanders in the field, they see things like they've seen things for the past decade. I think that's positive.
Does Europe, John, have to choose between China and the U.S., or can they play both fields?
I still think in the end it's a very simple choice that they have to stick with the U.S., but I think they're flirting rather obviously in order to get things. I think the most interesting bit really possibly is tech. I think the one bit where the U.S. defense establishment are worried, and you can certainly see the technology people are worried, was the decision to give these much quicker chips to China. Back in Davos, I interviewed the head of Anthropic, who said that was the equivalent to giving nuclear weapons to North Korea. It is, it will help the Chinese that much, and so you have this problem where, on the one hand, Trump is at least manifestly taking on China, but behind the scenes, he's always willing to do these transactional deals. And you suspect that in the meeting between him and Xi Jinping, it's probably going to be Xi Jinping who's going to come out of it with the bigger gains again.
It does feel like U.S. foreign policy is just very transactional. And so I don't know whether, again, the Venn diagram of things that could happen has gotten much wider.
With the Chinese, I mean, you do have this moment. This happens always in the lead up to a presidential summit, but you have this moment now where both the Chinese and the Americans are trying to keep a lid on it. Yeah. And Scott Bessent is in charge of this upcoming summit between Xi and President Trump, and there is kind of an instruction to not upset the apple cart. Yeah. Now, I don't know if that means more chips, fewer chips. I have to tell you, I was in China just before the holidays, and the AI diffusion is unbelievable. The robotics are unbelievable. I was in a southern province where you just have mountain and mountain and mountain covered with solar panels that are powering all the data centers. So this tech competition is real, and I don't think we should let up.
John, there's a lot of noise about Europe decoupling from the U.S. you know, or rechanging that relationship? Like, how do you see it going forward?
I think the answer is it is happening in a small way. You look even at a country like Britain, you know, as I said, Starmer went to China. Britain is discussing sort of more nuclear tie-ups with the French. It's more obviously trying to do things with the Europeans, not so much to abandon the Americans, but to give itself options. And if again on the subject of tech, if you're running kind of big parts of the British defence industry or intelligence or any of those sort of areas, you are now in a situation where Trump has pushed it so far that you have at least in principle to look a bit at other tech sources. In the same way as Britain, you know, famously got into bed with Huawei and then got out very quickly. I think it's not quite the same with America, but there's definitely an element of looking at different options. And the reason why is people are having to think about this thing strategically. And these are decisions that last for a very long time.
What do you think is the way forward for Europe?
Well, it's funny, as someone who lives in Silicon Valley, who works with our tech companies all the time, this makes me really sad because, of course, the companies think they're reliable partners, they're good partners, they want Europe to they want everyone to build what their competitive edge is. They don't want to take over everything. Yeah. But the idea that you're now going to have a European sovereign cloud, that you're going to have home-built things, it'll just create inefficiencies that nobody needs.
There's this problem with the tech companies, I think, throughout politics, that people in different countries are getting cross with the tech companies, but in Europe you've got this added sort of anti-American thing because for the simple reason the Americans are leading that part, although I completely agree with Anya. All the evidence is that yes, the Americans are winning kind of white-collar AI, they're winning ChatGPT, Anthropic, Gemini coming up very, very quickly against ChatGPT. But when you look at things like robotics, manufacturing, everything to do with energy, exactly, the Chinese are winning that.
But so what does that mean? I mean, it's also the first time, I think, in human history where you have this huge technological change in the hands of private companies.
You do.
How does that make you think of this differently?
It makes me think that our government needs to, all our governments, U.S. and European, can no longer abdicate the responsibility to regulate. I mean, if you look at the Chinese, they have some things that are draconian, but some of their AI regulation is just common sense. How do you not displace people? How do you not have deep fakes? And we're not seeing any of the real discussion, certainly in the U.S., and I see in Europe sometimes overreach and sometimes not enough. It's just time to have a real societal conversation about this.
My guess is that the way into it will be through children, weirdly. I think you look at the debates about phones and schools and all those things, and the fact that the tech companies in some places are overstepping. We have a film called Can't Look Away that details in quite horrible graphic detail children who commit suicide because of the way that algorithms lead them. That I think politically, that is the underbelly of these otherwise very, very powerful people, and I think you're going to see a backlash in America. But outside America, it's going to be fueled also by nationalism because people are not happy about the fact that all these big companies are American.
Right. And in 20 seconds, do you see actually MSC changing to, it's defense and AI that really has to be part of the conversation on security?
I think it's done a great job. They're doing a lot more on tech. We had a great conversation just now about the agents are out. I mean, as of last week, OpenClaw is all anyone can talk about where I live, and you're already seeing these enormous attacks, agentic attacks on banking systems, on crypto, and so we have entered the brave new world, and I'm glad we're talking about it here.
Thank you both for joining us. I know it's just the start. We have like another 3 days of conversations. John Micklethwaite, Bloomberg's editor-in-chief, Anya Manuel, executive director of the Aspen Strategy Group. Now, our coverage from the Munich Security Conference, of course, continues throughout the day. We're just getting started here on Bloomberg. The U.S. Senator Tom Tillis joins surveillance at 1:15 p.m. London time. That's 2:15 Munich time. Up next, Bloomberg Brief, and this is Bloomberg.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
A cidade estava sitiada.
Nisso eu começo, eu tremia, não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
people back home there, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being a billion-dollar business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's 5 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Stocks wavering after a heavy sell-off on continued AI disruption fears. This in time for this sell-off in logistics stocks. Markets now shifting their focus to the latest inflation print, wrapping up a busy week of economic data. And aluminum falling as President Trump is said to be working to narrow the scope of tariffs on some metals products. So let's take a look at these markets. As you can see, wavering now, the S&P 500 showing futures pointed lower. NASDAQ perhaps not so much, but we have erased our gains for the year for these indices. We were down 1.6% in the S&P yesterday, more than 2% on the NASDAQ 100. It's this rolling AI concern, right? Yesterday it hit logistics companies. Let's take a look at the bond universe because we're waiting CPI later, and the consensus is for a 2.5% gain in core year over year. We have that 10-year yield. It actually dipped below 4.10 earlier on. Right now, just a little above that, and the 2-year yield back down to well below 3.50. And take a look at these metals prices because the FT reporting that President Trump is considering rolling back some of that 50% tariff on aluminum, for example, and steel. And as you can see, that's bringing down prices, although we do likely still have a shortage in some of these metals with China limiting its production since last year. All right, let's get a look at some individual movers this interesting Friday the 13th. Let's get across to London and Abir Abu Omar. Abir.
Good morning, Vonnie. Let's start with the upside in the market. Applied Materials is doing pretty well in the pre-market today. The semiconductor manufacturer is up almost 12%, and it's gotten some upward revisions by analysts this morning in London, and that is primarily on surprising upbeat results that it posted yesterday. Vonnie, two things that I want to mention here when it comes to Applied Materials is demand for memory chips and AI computing. So when we speak about the crunch in memory chips and the negative impact that it's left on some of the market, some of the stocks in the market, Applied Materials is on the positive side of that trend. Next up, we've got Rivian, and it's another uncanny winner in today's pre-market. The EV manufacturer is up almost 19% this morning, and it's almost a contrast to a trend that we've seen with other car manufacturers, including Ford, General Motors, that have posted write-offs when it comes to EVs, especially with everything that is happening in the Trump administration when it comes to environmental challenges. And then finally, we've got DraftKings, the online betting platform, is suffering this morning, down almost 15%. And one thing that they brought up is the competition that they've gotten from prediction markets, and that is what is happening with DraftKings. Those are the stocks we're keeping an eye on, Vani.
Fantastic stuff, Abir. Thank you so much. Abir will be back with us later in the hour. And also coming up this hour, we're going to count you down to that CPI data with Max Kettner of HSBC. Plus, we go live to the Munich Security Conference. We'll be speaking with the chair of the Ukrainian Parliament's Anti-Corruption Committee, Anastasia Radin. So, futures lower for the most part now after the Nasdaq 100 closed down more than 2%. Investors awaiting January CPI data coming at 8:30 Eastern. Let's bring in Bloomberg's Morwenna Coniam and also Jamie Rush of Bloomberg Economics. Thanks to you both. Morwenna, let me start with you because 30% of S&P 500 companies yesterday hit an 8-week high. Many of them also hit an 8-week low, right? But it was fewer than half that. So this is being spun perhaps as more of a rotation trade than just a broad-based sell-off. Is that a good interpretation?
Well, I think there is definitely some rotation there, but we're seeing things looking fairly flat this morning, and also it comes after, exponential gains in the tech sector. And yesterday we saw a sell-off there. I think what was particularly interesting was that it's this AI fear trade, as it's being called, that's hitting different sectors when you get this spark of anxiety about an AI disruption. So, yesterday it was a firm which had developed an AI logistics model, but previously had been a karaoke company. It's not a huge company. Whether that's actually a disruptor for the logistics sector, I think the jury's still out on that. But it stemmed a sort of panic amongst those stocks, which really saw them make quite heavy losses. Today, we're seeing a steadier picture for US futures. We've seen the stock 600 in Europe be fairly mixed with technology shares gaining. So I think it is a sort of reactive trade at the moment that we keep seeing unwinding, and it's a case of where to look next.
Yeah, it's terrifying for those trying to pick a sector, I guess, right? Or do you just wait it out? Jamie, let me ask you why the 10-year yield went below 410. Is this purely CPI, or is this also the AI scare trade?
Yeah, I mean, it's a classic move to safer assets, right? So if you get a big sell-off in equities, you should be expecting some correlation, some negative correlation with bonds. So I suppose that for me explains it. I don't think you can relate it to the macro data. On the macro data, though, of course, a lot is changing. We're getting a lot of more information about the labour market, a lot of information about inflation, and that is shaping people's bets on the Fed, of course.
All right, guys, thank you so much. Setting us up for the day, that's Morwenna Coniam and Jamie Rush. Now, to other top stories trending on the terminal this morning. Europe discussing how to develop its own nuclear deterrent due to concerns that the US is no longer a reliable military partner. Sources say French President Emmanuel Macron is expected to offer nuclear deterrence to the rest of Europe in a speech this month. At the moment, only the UK and France have atomic weapons. L'Oréal shares declining after the French beauty group posted disappointing sales growth in the fourth quarter. Results at the Luxe division, which includes brands like Lancôme and Yves Saint Laurent, were hurt by a persistent slowdown in the travel retail business in Asia. Sales growth at the unit was well short of estimates. And Citigroup boosted the pay of CEO Jane Fraser to $42 million for 2025, putting her among the highest paid U.S. banking heads. The compensation includes $1.5 million of a base salary, $6.1 million in cash incentive awards, and the rest in stock awards. The pay bump puts Fraser's total package for the year just $1 million behind that of J.P. Morgan Chase's Jamie Dimon. Venezuela planning to grant more oil production land to Chevron, and Spain's Repsol as the Trump administration pushes for private companies to rebuild the nation's energy sector. In an interview with Bloomberg TV, U.S. Energy Secretary Chris Wright said companies like Chevron will be seeing benefits from an increase in production.
I think in the first year, we'll see pretty significant 30-40% growth in Venezuelan oil production this year. You can continue production growth rate at a pretty good clip. Venezuela does have the largest proved oil reserves, which is a technical concept, much larger than the U.S.
Bloomberg oil strategist Julian Lee joins now with the latest. Julian, how realistic is this? Is it just going to be Chevron and Repsol that takes advantage of what the US is trying to offer these big companies?
Well, I think Chevron and Repsol are sort of in a pole position because they have existing projects there, and they can build on those. They can restore some of the above ground infrastructure that I think is severely degraded in Venezuela. And I think that's probably where the easy wins are for production. Looking beyond that, we're seeing companies expressing an interest in new acreage in Venezuela. There's certainly huge areas that are ripe for exploration, but I think that is a much longer term proposition. And there are still huge issues, I think, that the industry is going to have to come to terms with. Not least is the money that companies are owed for previous nationalizations of their assets in Venezuela, uncertainty over the political stability in the country and what sort of guarantees of security and safety for their staff companies will get from the US. Yes, there are some short-term gains to be had. Whether this growth of 30 to 40% in production is realistic, and that's sort of 250, 350,000 barrels a day, that remains to be seen, and whether that will continue year after year, I think at the moment at least, is questionable.
So, Julian, the US is obviously trying to help out, but what can Venezuela do? Does Venezuela have the wherewithal to help companies?
Well, I think what Venezuela has done already is to change the investment law to give a much more opportunity for foreign companies to invest under the model that Chevron has been using. That hasn't been open to other companies until very recently. That, I think, will help. But I think there are huge underlying social, economic, and political problems in Venezuela that still have to be overcome. Now, oil companies are very used to investing in politically troubled parts of the world, and we've just seen companies taking up new exploration acreage in Libya, in North Africa, another very troubled country. So that won't necessarily push them away entirely. But this is not like investing in Texas or investing in some of the other sort of, if you like, baseload production provinces for these companies.
All right, Julian, thank you so much. Great context there from Bloomberg's Julian Lee. Coming up, a potential metal tariff rollback. Aluminum prices down this morning as reports say the Trump administration is planning to readjust its policy. This is Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersecci in Davos, Switzerland, and this is Bloomberg.
The
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Loading wraps in 2 steps. The first stage finishes around T-minus 3 minutes. We'll hear that call out here any second.
All right, we are about 3 minutes away from this launch. SpaceX and NASA carrying 4 astronauts. They hail from the US, Europe and Russia, and they'll be going to the International Space Station. Let's bring in Bloomberg's Benedict Kamel, as we're just literally minutes away now from Crew 12 liftoff. So, Benny, this crew is partially to replace some of the crew that had to come off the ISS due to medical reasons back in January, right?
Yes, that's right. So this is in some ways a normal mission, but there's also some anomalies in this. As you said, Crew 11 came back earlier than expected for an undisclosed medical situation with one of the astronauts on board. So normally what happens in this sort of sequence is that one crew is up there, the other one comes up to the space station. There's sort of an orderly handoff. You know, they get to know each other, they do a bit of a walk-through and so on, or a float-through rather. And in this case, the Crew 11 was already on the ground. So some sort of, as I said, anomalies in this case.
Now, in terms of the equipment itself, this is Falcon 9's launch of Dragon's 12th operational human spaceflight mission. But Falcon 9 has been having a few problems, Benny, and is already on its 12th mission at this point. What kind of lifespan are we to expect from these types of craft?
I mean, the Falcon 9, you're right, it has had some issues. Generally, it's considered a fairly reliable piece of kit. You know, it's had a bunch of these missions now. So it is the sort of go-to rocket launcher at this point. The special thing about this particular rocket, obviously, is that it is reusable. So we will see in the sequence that it will have it's about a 10-minute sequence from start to re-entry and then landing again. So this is what makes this particular rocket special. This reusability, which is obviously a huge leap from, you know, the old rockets that you and I might have been used to as kids, where, you know, it's one up and then that's it. So the reusability here is the big factor.
And the FAA did give it the all clear to fly today. Now, if everything goes according to plan, all of that happens, but then it takes about 10 hours for the capsule to actually get to the ISS. So I guess our crew should be landing Saturday around 3:15 Eastern, Benny.
That's right, and they so while the Crew 11 did leave earlier, the station itself is not abandoned as such. There are 3 astronauts on board, 1 US astronaut, 2 cosmonauts, so there will be a handoff there. Those astronauts will eventually then come off that station, and 3 others will join. So this is somewhat of a handover, but it's different than what was initially planned.
All right, Benedict Kamel, thank you so much. He's going to stay with us while we watch this launch. Don't forget, this is the launch of a new crew, a fresh set of members to the ISS to replace those that had to come off due to a medical leave. And I think we're just going to tune in now to the countdown to liftoff.
8, 7, 6, 5, 4, 3, 2, 1, ignition. And liftoff. Go Falcon, go Dragon, and Godspeed Crew 12.
And liftoff. Freedom flies bound for the International Space Station. 1.7 million pounds of thrust now propelling Falcon 9 and Crew 12. Vehicle is pitching downrange, and all 9 Merlin vehicles have lit. We're getting good call-outs on the first stage performance and propulsion so far.
Plus 30 seconds into the Crew 12 mission on board Dragon and Falcon 9. The vehicle is going to throttle down in preparation for max Q. That's the largest structural load that the vehicle will see on ascent.
Power and telemetry nominal.
Good call outs there.
Stage 1 throttle down.
There's that call out for stage 1 throttle down. Pass through max Q in a few seconds here.
Max Q.
Great news. We have passed through max Q.
Vehicle is supersonic.
That call out note that the vehicle is supersonic, means it's traveling faster than the speed of sound.
Stage 1 throttle up.
Stage 1 now throttling up.
1 Bravo.
That call out for 1 Bravo
Copy, 1
means
Bravo.
we're in the second and final abort mode for the first stage, continuing to get good performance. The crew is now already pulling over 2 Gs. Next up, we'll have a couple events happening in rapid succession. First is that engine chill on the second stage MVAC engine, and then we'll have MECO, or main engine cutoff, where the 9 engines on the first stage will cut off ahead of the first and second stages.
We reached max Q just a few seconds ago. That's where the peak mechanical stress is on the rocket, and it's probably the most sensitive time. Looks like we've had a fantastically successful launch. So those 4 astronauts, 1 from the European Space Station, 1 from Russia, and 2 US who have been quarantining actually in Houston and Florida's Kennedy Space Center, are firmly on their way now to the International Space Station. A successful launch with the rocket liftoff, the first stage booster landing, the Dragon capsule Freedom separating from the upper stage and now on its way. Let's get back to Benedict Kamel to give us a little bit more context about what happens next, Benny. So is that basically all of the dangerous stuff out of the way, and the crew are very successfully on their way now, and the Falcon 9 just needs to re-enter orbit and dock at some point?
Yes, you make it sound very simple, but that's essentially how it works. And so we will see these separations of these different stages, and then eventually we'll have the Dragon capsule actually make its way to the space station. So the actual sequence, the separation sequence, and the re-entry of the rocket, that's a fairly short event. It's only about 10 minutes, so that's one thing to watch. That rocket, always an awe-inspiring sight to see that rocket land again at Cape Canaveral. So as you said, 4 astronauts on board, 2 men, 2 women. A novel case in the European participant. This is her, I should say. Sophie is her name. Her first space flight. Jessica Meyer, who's one of the pilots. It's her second flight on board. Her second mission. So we have a good mix of people that are on board this spacecraft, and as you said, several hours for them to sort of reach velocity and then make their way to the ISS.
Well, they have time and they need to relax, right? In fact, that's one of the things they're going to be doing up there. They're going to be studying things like how the human body relaxes in space, and it's a long duration expedition. This is a 9-month expedition for these astronauts and cosmonauts. But when you think about it in the context of the ISS, it's been up there for 25 years, so perhaps not that long.
Yes, I mean, this is obviously something that takes a huge toll on the human body, these long space flights or these long sojourns on the ISS. And they will be studying, as you said, medical experiments, things around pneumonia, blood flow and so on. They will probably also do some tests to the actual space station. Remember, this is, as you said, a device that's been up there for 25 years and is slowly but surely reaching the end of its lifespan. Around 2030 is probably when it will be decommissioned. At this point, unclear what will replace the space station. There is no real concept out there yet. NASA is exploring several options. They're in talks with 3 major companies to look at what might follow the ISS, but this has obviously been a very important part of space exploration and experimentation in space, and it'll be very difficult to replicate this kind of a very complex station, and also something that is truly international. I mean, it's in the name, but you can see in the makeup of the people now flying to the station. As I said, we have 1 European participant, a Russian participant, 2 from the US. So it's always had that sort of international, very sort of makeup. So that's also something to note.
Benny, thank you so much, and we wish them well, that international crew that will be joining the 3 others that have been skeleton manning the ISS since January. I'm sure they'll be very happy to see them and have them join. That's Bloomberg's Benedict Kamel. All right, back in Washington, aluminum dropping now following a report the US is planning to reduce some import tariffs on steel and aluminum. This comes as President Trump doubled import tariffs on steel and aluminum to 50% in June of last year. Joining us now is Jonathan Tamari of Bloomberg Government. What's prompting this, assuming that this report is true and that President Trump will actually take down these tariffs to some extent, Jonathan?
Yeah, and we don't have a lot of detail. There hasn't been an official announcement, but we do know the White House is on a major push to try to address concerns about the cost of living here in the United States. It's a major issue heading into the elections this November that are going to decide control of Congress. And we've seen that there are even some Republicans who are really concerned about the cost of living. 6 of them in the House voted against the president's tariffs on Canada this week. So there's a lot of concern among Republicans about how this is playing electorally, and you would have to think that that's a driver of this change.
At what point will it make President Trump look weak if he needs to reverse course on some of these policies, which he's already been doing? And, you know, particularly as tariff policies, they were the cornerstone of his administration.
They are, but we've also seen that the president, as you pointed out, has reversed course many times. He's made a lot of deals. He's reduced tariffs as a result of lobbying from business executives who've come to the White House. So there has not been an emphasis on consistency in these things. It's more kind of the threat and showing the willingness to do it and bringing people to the table that has really been the focus of the president very often.
Jonathan, can I ask you about the DHS? Because we avoided the partial shutdown, but that didn't include the DHS. There was no agreement on that, and now the Senate has failed to cut a deal as it heads to recess. What happens next?
So the two sides are trading discussions. The White House and Senate Democrats are trading proposals right now, but it sounds like they're still pretty far apart. Democrats are pretty dug in here. They think the public is with them on the reforms that they're calling for to ICE. So Department of Homeland Security is going to shut down on Saturday. The Senate and House are both out for next week, so there's not a really prospects of a quick return. I will say that much of the department is funded from some previous bills, so it might be a long time before we see any practical effects on the ground of this.
And Jonathan, I just want to point out that that booster has now successfully landed. So it was basically a 100% successful launch here for the Falcon 9. A combination of NASA and SpaceX equipment, and those astronauts have headed now to the ISS. Again, that booster has landed back into orbit and back on Earth, and there doesn't seem to have been any damage done. Jonathan, what about internationally? The president is facing, several sort of self-imposed deadlines, really, when it comes to talks. But the latest one is obviously Iran, and he seems to be, maybe annoying is too much of a word, but he seems to be at least motivating Israel to visit the United States to try and get him to back off any kind of a deal with Iran.
Yeah, it's a rare kind of split between President Trump and Bibi Netanyahu. Netanyahu was here in the U.S. this week. He expressed concerns about a possible bad deal, and foreign leaders know they've got to tread carefully when it comes to President Trump and his negotiations. He takes a lot of pride in those things. But it was some pushback. We did not see the two men in public, which is kind of a rare thing when you have a foreign leader here. So it suggests there is some rare tension here. But the president says that he's pushing forward and he thinks that a deal is possible. We'll see what happens. But yeah, clearly there's some small, at least some level of tension between the president and Bibi Netanyahu on this.
All right, meantime, there's another carrier strike group headed to the Middle East. Our thanks to Jonathan Tamari of Bloomberg Government. Coming up, we're going to look ahead to CPI with Max Kettner of HSBC.
You don't think the court was hurt by the perception that it was a political decision?
The court's always hurt, it seems to me, if we look political
one of my concerns, my present-day concerns, is there's too much partisanship. It's true historically that most presidents have appointed justices to the Supreme Court who are members of their own party. The partisanship should not be an overriding factor. What you look at is temperament, learning, background, reputation, whether or not you have those qualities of independence and caution that make for a good judge.
Increasingly, you see dissenting opinions in the Supreme Court that aren't quite as civil as maybe you might prefer. And is that of concern to you?
Yes, it's of great concern to me that our civil discourse, our civic discourse, is not civil enough. Aristotle said that a democracy depends on an open debate where you respect the dignity of those with whom you disagree. He said democracies only live if they are sustained over a period of time by a thoughtful, rational discourse, a discourse in which you respect the dignity of those with whom you disagree.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
It's 5:30 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Stocks wavering after a heavy sell-off on continued AI disruption fears, this time driven by logistics stocks. Markets now shifting focus to the latest inflation print, wrapping up a busy week of economic data. And aluminum drops as President Trump said to be working to narrow the scope of some tariffs on some metals products. So let's take a look at those futures then. As we can see, they are wavering between gains and losses, trying to decide on what direction to take after we've now erased all of our gains for the year. Yesterday saw the S&P down 1.6%, the Nasdaq down more than 2%, and it could be the third straight weekly loss now for the Nasdaq 100. Much commentary about this being more of a rotation trade than maybe a broad-based sell-off, but no doubt we are looking at definitely cyclical sort of AI fears rolling through this market. Now look at the 10-year yield. It's at 412.11 as we await CPI data, but we did dip below 410. We were closer to the 420 mark yesterday, so that's been quite the move in the curve. We're down across the board with the 2-year yield at 347 change, the 30-year at 474.90. As one person put it earlier, a classic flight to safety trade. Some of it might be turned around today because the president might be looking at lowering tariffs on some metals. If you look at the primary aluminum contract, down about 1.75%, hot rolled steel down 0.4%, and zinc down 1.6% on the possibility that these tariffs mightn't be so high in the future. But look, we have our supply demand concerns for some of these metals anyway. China really cutting back on production since last year, putting limits on production, and that had been sending those prices on aluminum higher anyway, and steel as well. All right, let's get to some stocks to watch. With that, we'll go over to London and Abir Abu Omar. Abir.
Good morning, Vonnie. Let's start with Applied Materials, which is up quite a bit this morning, 12% in the pre-market. Now, that is on some fundamentals, right? Earnings yesterday showed a pretty upbeat sales forecast for the year. And 2 things that the CEO had brought up was AI, computing investments, but also this is one of the stocks that is benefiting from the memory chip demand. Other stocks in the S&P have, as we mentioned earlier this week, not benefited from this crunch in memory chips, but Applied Materials is one of those stocks that is up this morning. Moving on to Coinbase, and Vonnie, quite frankly, when I was prepping for stocks this morning in the pre-market, I expected Coinbase to be down, but it's up more than 7% this morning. Now, some of those reasons could be because the stock has faced some challenges over the past 4 sessions. It is up in the pre-market this morning. Bitcoin has recouped some of those losses that it registered since October. It's still at below $67,000. But Coinbase is up in the pre-market. And then finally, DraftKings, it is a stock that is suffering in the pre-market this morning. And that is primarily because of this competition from prediction markets. It's gone into prediction markets, the company, but obviously that has an impact on its margins. And so it's down nearly 15% in the pre-market session this morning, Vonnie.
Yeah, lots to watch out for with this tail end of earnings, right, Abir? Thank you so much, Abir Abu Omar there. So we're just more than 3 hours now from the delayed CPI numbers. Let's get to Max Kettner, Chief Multi-Asset Strategist at HSBC, who joins us now and is actually looking for a little bit of a stronger core CPI reading than the consensus. Max, why is that?
Yeah, look, perhaps we get a little bit more on the services inflation side. That really will be probably marginal. And I don't think the market probably today, after the last couple of days of reaction, will really react too hawkish on that, because, you know, we've got that narrative for the January and February CPI that perhaps it's driven by a little bit of residual seasonality in the January and the February data, right? We've got these annual price resettings, the annual insurance resettings. So I think for today, it's probably pretty asymmetric. If CPI is in line or below expectations, probably duration will rally again. If it's above expectations, I do think after that reaction from the last few days, those wobbles in equity markets, you know, there's concerns that we had around the labor market with last week's Tier 2 data and the revisions from this week, that probably, you know, people or duration will rally again. Overall, however, I think we're still underweight treasuries. We've actually cut the underweight in treasuries. We've halved that, so we're not as underweight anymore. I do think once we get closer to the 4% level, once we get beyond 60 basis points of cuts priced in for this year, that's a proper time then to go short duration again in treasuries.
Okay, Max, I do want to ask you a little bit more about that, though, because if we do see a hotter inflation print than the market's anticipating, and then we had that hotter than expected jobs report, why wouldn't the market, you know, really quickly start pricing out those cuts and maybe even considering a potential rate hike?
I think for that, it's a long way to go. Perhaps 2 weeks ago, Vonnie, I probably would have agreed with you because we were going towards 40 basis points of cuts priced in by December this year. And then it wasn't a long way off until we were at 25 basis points. Then, you know, the margin for error, the margin to price at least a tail risk of the next move being a hike was much, much lower. Now, of course, we're almost at 58 basis points of cuts being priced. And quite frankly, if we go, let's say today on a potentially hotter than expected print, if we go from 58 basis points of cuts down to 50, for example, who cares? That's not the big move, right? You price out a little bit on the front end, but it's not hot enough really for particularly that to weigh on risk assets, on spreads, on equities, on EM, on FX, you know, because you're still going basically from a little bit more than 2 cuts down to 2 cuts. That's not hot enough.
Max, we've erased our gains for the year now on the major indices here, at least the Nasdaq 100, the S&P and so on. Why should it be consoling to us that this might be a rotation trade? It certainly looks like a sell-off and it doesn't really matter who's benefiting.
Yeah, to be fair, though, I mean, I find it amazing. We talk about sell-off. This morning I checked my inbox, and my inbox is full of, do you think the sell-off is going to continue? And I go 24 hours back, and we've almost been hitting an all-time high. Again, another fresh all-time high. So we're sort of wavering, you know, 1 or 2% from the all-time high, and then in the last 2.5 months. So it's not like there's an awful lot of having been happen. I think it's mostly a rotation. Yes, number one. So it's mostly really about people being long the wrong stuff. That's number one. Number two is when we look at those rotations, particularly the worst sort of drawdowns from high beta names, from long momentum names, which is what we've done this week. We really looked at what do the 5% of the worst daily returns of those big unwinds mean when we see those big rotations. Is that a signal for poor forward returns overall from a market perspective, for equities, for EM rates, for EM debt, for credit spreads, whether it's IG or high yield, for FX? And the finding is that's not really any signal at all, not even concurrently, but also not going forward. When we look at a week forward, we're not getting any informational value out of that sort of rotation. So what it really is, at least empirically, what counts to me the most, is actually it's just people being long the wrong stuff, they rotate around. Once that's done, then, it's probably over, and it doesn't really have an awful lot of impact on the overall market. The third thing, very quickly, is on sentiment and positioning. Clearly, what we've had in the last 3 weeks with that rotation and with really some stocks getting heavily beaten up, some sectors getting heavily beaten up, what we see in our framework is that overall sentiment and positioning has gone a lot lighter now.
Okay. Curious if policy is a little bit less to the forefront in recent days. I mean, it certainly seemed like it was policy that was moving markets just for the first part of the year, but now we're getting reports that the president is, going to reverse potentially some tariffs, or at least take down some tariffs on steel and aluminum. And it doesn't seem like that's really going to cheer up this market today.
Yeah, not today, but I think, we are getting now, of course, the first round of tax reimbursements in the US in February, and then in April. We are already starting to see some signs when you look at the distribution of consumption, of private consumption in the US and household consumption. We are already seeing some signs that the lower end of the K, the weaker households are already spending some more money, are already ramping up consumption a little bit. So actually, I think in terms of policy, what's now important is that those tax reimbursements are coming through. That should be helping the lower end of the K-shaped economy, those weaker households, and that should ramp up consumption overall. That leaves actually some of that lower end of the K-shaped sectors like transportation, like the home builders, like US retail in a really, really good spot now.
Max, would you be comfortable advising people to sort of stay away from AI at this point and get into some of those sectors you mentioned, utilities, staples, real estate, healthcare? Has the time come?
No, I don't think so. I think it's not a question of either or. I don't think it's a question of, I want to go along the cyclical stuff, because we are seeing globally definitely a pickup in some of the leading indicators. When you look at things like new orders over inventories in the open economies, in Sweden, in Taiwan, right, in the Netherlands, in all those manufacturing and open economies, you are definitely seeing a pickup in activity and in those leading indicators in the last 2 months. So that is leaning into the cyclicals. But when you look at some of the AI names, look at the Mag 7, we're trading at almost 26.5 times forward earnings now. Compare that with something like the Russell, we're trading at 24 times. So from a valuation standpoint, simply because the Mag 7 have just been trading largely flat in the last 4 months, that's already been enough to make them look way, way cheaper. So I do think in the next few weeks, actually, given the earnings strength, that will be a pretty good moment to buy into those AI stocks, and particularly into the Mag 7 and into the hyperscalers again.
Okay, well, we'll wait for that time to come. Max, thank you so much for joining us this morning. That is Max Kettner of HSBC. Now to other top stories trending on the terminal this morning. The Trump administration is working to narrow its broad tariffs on steel and aluminum products. According to reports, the White House has communicated to companies that adjustments are in the works, but details and timing remain unclear. President Trump last year imposed a 50% levy on foreign steel and aluminum in a measure aimed at Chinese overcapacity. The US and Japan remain far apart over which projects should be funded first under a $550 billion investment vehicle. Japan's trade minister met with US Commerce Secretary Howard Lutnick in Washington to discuss establishing the initial projects. Blackstone is leading the race to tap into $7 trillion of cash parked in Japanese households. In a rare media blitz, Blackstone has rolled out a 30-second TV commercial starring its co-founder Steve Schwarzman, promoting the firm's services to Japanese millionaires. The pitch is backed by newspaper ads and social media videos, along with a reprint of his biography. Coming up, we're going to the Munich Security Conference. The chair of the Ukraine Anti-Corruption Committee joins next. This is Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Technology is embedded in every aspect of our lives
and laying the foundation for the future.
From finance to defense, AI to entertainment,
and from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers
and the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. The Munich Security Conference kicking off, where discussions continue on NATO's future and the war in Ukraine. Bloomberg's Oliver Cook is there, and he's standing by with a top voice from Ukraine. Ollie.
Yeah, that's right, Bonnie. And obviously front and center for the last 4 years has been the conversation around European defense, but of course critically Ukraine and the future for that war as these negotiations take place between the United States, Ukraine, and Russia. And I'd like to bring into this conversation an important voice on this, Anastasia Radina, who is a member of Ukrainian parliament and also the chair of the Anti-Corruption Committee. Anastasia, thank you so much for joining us today. I'd like to begin just thinking now, 4 years basically until this war started. What is your message to the partners here that you bring to the Munich Security Conference? What do you need from them in what could be the final stretches of a negotiation to get it over the line?
Sadly, currently on the ground in Ukraine, we're not seeing Russia's readiness for peace. What we are seeing is Russia weaponizing winter cold, destroying energy infrastructure and central heating infrastructure to make lots of Ukrainian communities basically unlivable when temperatures in Ukraine are well below zero. Sadly, a lot of regions in Kiev, the capital of Ukraine, will not have central heating until the end of the winter. Houses frozen because Russia is simply continuing terrorizing civil population. This does not look like readiness for peace for us. So the most important question that we are discussing now on all of the levels is security guarantees for Ukraine, because without security guarantees and proper mechanism to ensure Russia keeps up to its promises, peace deal would not be possible.
And something that is, I think you've said this, as important as fighting the Russians, is fighting corruption within Ukraine, because that bears on whether or not there's going to be support from the United States, continued support from the Europeans, and of course it's a fact that's used consistently, it's exploited by your enemies as well. And I'd like, as the chair of the Anti-Corruption Committee, for you to give us an update on where we are on some of the investigations that have been launched, namely into the energy sector. What progress can you apprise us of?
Just a few days ago, Transparency International released its Corruption Perception Index for 2025, and Ukraine has gained 1 point in that, demonstrating increase in our standing and progress in fighting against corruption. I think we currently are happy to say that after 10 years of anti-corruption reform, we finally have the strong, independent anti-corruption institutions ready to prosecute and investigate cases regardless of political standing of people allegedly involved involved, regardless of their place on the power ladder. And I think this is actually a success after 10 years of anti-corruption reform.
Thinking about this sort of timeline to try to get some of these investigations behind Ukraine so that they can move forward. Of course, it's going to be a major factor in some of the discussions and accession to the European Union from Ukraine. Do you have an idea of how much longer this investigation will go on, when it can be finally put behind and you can move forward on other things?
European Union and European Commission specifically requested Ukraine to demonstrate track record in investigating high-profile corruption. This was put on paper in black and white, and I think currently anti-corruption institutions of Ukraine are doing exactly that, exactly what was asked of them, and are providing this track record of investigations. I am definitely not in a position to comment on any timeline, but I'm very confident that anti-corruption institutions are doing their work exactly in the way we hoped they would when we started reform many years ago.
And you're perhaps in a position to comment on what the reception has been from European partners, from American partners, in terms of the anti-corruption tide. Are they satisfied with what they're seeing?
I frequently receive this question as to what the anti-corruption or corruption-related scandals mean. Does it mean that Ukraine is still very ill with corruption? And my answer to this is no. This actually means that Ukraine is getting better, because when we were having no anti-corruption institutions, there were no corruption scandals, but this didn't mean the country was healthy. Currently, we finally have these institutions able to address certain issues in the way country with rule of law should do, and I think this is a huge progress.
And so obviously there's the investigation ongoing, very high profile, into the energy sector. Are there other sectors that are concerning to you that you think require attention from anti-corruption?
In anti-corruption committee in the Parliament of Ukraine, we follow very closely the progress and we follow very closely the defense sector. At the same time, we do not have any breaking news from anti-corruption institutions in this sector, so that's probably not my place to comment.
But certainly the defense, given how much money is flowing in, is one that you'll be very sort of concerned of and sort of aware of. Just a sort of final question for you about some of the reporting that we've heard over the last couple of days, that Zelensky potentially considering a referendum of any kind of deal going to the Ukrainian people, potentially looking at an election. As a member of parliament, do you think that that is a good idea? Do you think that bringing some of these questions to the population of Ukraine is a good idea? And do you think it's feasible?
Mr. President already commented on this, and I stand by what he said. What he said is actually security first. The question is, how do we guarantee elections or referendum in a situation when Russia is shelling civil population all the time? My question here is whether international observers that are to be present according to international standards of elections, are they ready to come to Kupiansk, Kharkiv region, which is literally a kill zone, to monitor elections there? And if the answer to this question is no, then basically how do we even talk of any elections or referendum?
Well, Anastasia Radina, thank you so much for your time, member of Ukrainian Parliament, and of course the chair of the anti-corruption investigation sort of committee within the Parliament. All important, very closely watched by the United States, by the Europeans alike, in order for Ukraine to make sort of progress in its accession to the European Union, and of course continue to enjoy the support of the United States.
Fascinating interview, Ollie, and of course a fascinating Munich Security Conference this year, given the change in the world order, seemingly. That is Bloomberg's chief European correspondent, Oliver Crook. Turning back to tech now, Sheridan Applied Materials and Arista both soaring in the pre-market as sales forecasts blew past estimates, signaling demand for AI and memory chips. Joining us now is Matt Bloxham of Bloomberg Intelligence. Matt, this memory chip trade, when does it come to an end? I mean, Seagate, Western Digital, they were the best performers last year, and it just keeps on going.
Yeah, it does, although we have seen a little bit of a contrast with some of the other stocks like Cisco, on the other side of that, Cisco squeezed on the margin side, but certainly Applied Materials is one of the big US manufacturers of the equipment that chip makers use to create the product, benefiting from those supply shortages and the overall kind of demand for kind of AI technology, and obviously high bandwidth memory, a kind of really important part of that AI technology stack. So yeah, kind of really benefiting from that with a strong beat in the quarter on revenue and profit, and I think the forward view on sales about 9% ahead of where the market was. So I think you'd kind of expect that because we just seen nothing but positive signals out of the likes of TSMC that are big spenders on this kit.
Have to ask you if the sell-offs that we're seeing in the various AI trades, yesterday it was logistics, when investors realize there are startups out there that are doing what they've been begging CEOs to tell them their own companies doing. But is it the retail trade? Because these sell-offs are insane.
Yeah, I think there certainly is a bit of a kind of a retail sell-off there, but I think it's just generally the market's clearly very skittish about what's going on with the AI trade right now and who the winners and losers are going to be. And obviously we've got macro issues coming in with, like, for example, the kind of inflation print. So I think anything that kind of creates a little bit of uncertainty, pushes that risk-off trade again. I think it's going to take quite a while for this kind of winners and losers issue to kind of shake out. So I wouldn't be surprised if we've got more and more volatility coming through.
Yeah, absolutely. All right, Matt, thank you so much. Matt Bloxham there of Bloomberg Intelligence. This is Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Hazla Amin in Davos, Switzerland, and this is Bloomberg.
Now, a look at what's ahead for your Friday the 13th trading session. First up, we have earnings from Moderna. They come before the bell. January CPI, all eyes will be on that data at 8:30 a.m. Eastern. And then we do have a partial government shutdown, specifically the DHS. That begins Saturday. Some earnings movers now before the open. Applied Materials, one of those extending double-digit gains after its sales forecast crushed estimates. We were just talking about this. The memory chip makers just really having a fantastic time. Similar story with Arista Networks. Its sales forecast boosted by AI demand. And then Airbnb, another one. It's seeing healthy demand, fueling faster growth into the rest of this year. But it also talked about its deferred payment option as becoming very popular among consumers. So what does that really mean for the consumer? This is what your macro picture looks like for the day. Potentially another down week for the Nasdaq 100. It's had 3 already. That's it for Bloomberg Brief.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no. I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially, how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
The things that have been driving the market over the last couple of years have now switched over.
It's no longer, we're just going to take at face value the AI trade.
We are very heartened by the embracer of this rotation.
We think it's a stock picker's market, so you got to be selective.
There's plenty of opportunity globally to diversify.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Friday, it's CPI Friday. As major tech jitters are consuming investors worldwide, risk aversion is sending bond yields sinking to new lows for 26, just before we get another read on price pressure in America. We begin this hour taking stock of another wild week on Wall Street. Just 2% from all-time highs, and yet in some sectors, it already feels like a bear market. Wave after wave of anxiety crashing through industry groups from software to wealth management, from real estate to logistics. Not even a much stronger than expected jobs report enough to lift the mood. Investors dropping the banks and piling into staples, sending Walmart to fresh record highs as investors look for somewhere to hide.
So how do you hide from an existential AI threat that, as Joe Amato yesterday of Neuberger Berman said, is like a heat-seeking missile looking for its next target? You buy toilet paper, you buy bananas and string cheese and wheat thins. You go out there, you buy a tinfoil hat or maybe just some of the metals that you've got, which is the reason why staples are doing so well right now. There is a feeling that even if some of these moves are overdone, we do not understand the scope and the speed of the disruption that is happening right before us.
Overdone at 50 PE on Walmart. Yep, maybe overdone. We can talk about that a little bit later. Let's talk about the headlines. You've all seen them online, on X. It's February 2020. We were talking about that yesterday. It's 2008, yet this time the software names, they're the banks. And then you hear this from the Microsoft AI chief to the Financial Times. As for white-collar work, quote, most of those tasks will be fully automated by an AI within the next 12 to 18 months. Is that a warning or a sales pitch? You decide, a warning or a sales pitch. This from Anthropic yesterday. Completing a deal to raise $30 billion in funding from investors at a $380 billion valuation.
Look, it could be both. And I think the problem is that the market can't decipher which it is, because ultimately there has been an unproven aspect to what we have seen from some of these artificial intelligence and large language models. If you talk to some people who have been intimately connected to some of the crafting of these models, they do say that the speed has been dramatic and has been profound, and it will change jobs. Pinterest cutting a significant swath of their employees because they are leaning into AI-related tools rather than the random person who is putting different images on their page. So you do see this starting to affect the business models of a whole host of companies. That's true. On the other side, will it eradicate humanity as we know it? Probably that is more of the marketing pitch as Anthropic raises $30 billion.
There is a great contradiction, I think, in the price action of the last week or so. And here it is, that somehow this tech is going to be so highly disruptive it will destroy everything, and yet still the capex is a waste of money. Can you square that circle? Can you have both at the same time?
No, because ultimately someone's got to win. The profits have to be there. The only way to square that circle is recession. The only way to square that circle is if suddenly the whole concept of a new technology that undermines the reason for our existence in various jobs really does create some sort of dramatic drawdown in the overall economic growth that leads to a problem. If that's the case, well, then why are we even going into this in the first place? So it does kind of undermine some of these capex plans. So to your point, there's got to be a payoff somewhere, and you're starting to see it in a number of companies that are saying, look, our efficiency is so much higher. Our profitability is so much higher. That said, the fly in the ointment, as Torsten Slocks has pointed out many times, is that the profitability has been directed toward a small cohort of tech-dominated stocks. It has not broadened out yet, and that, I think, is going to be the key tell in earnings for the rest of this year.
This is also super frustrating for so many investors right now. Only 2 weeks ago, it was a and you could see that across small caps, across banks. Now look at how things are playing out. Look at the sector performance. Banks this week down 6%. Staples up by 1 to 2%. Walmart, all-time highs. If you took a step back and knew nothing about the technology story, the software disruption, and just saw that sector performance, that's the recession trade. Bond yields and new lows for the year.
Yeah, if you take a look at what's going on, it's both recession trade and a complete loss of liquidity. This is a market that feels like it's being jerked around by funds that are getting blown out and stopped out and having to liquidate gold in order to cover their losses. Why would gold be down in this kind of trade if this is a recession trade? Look, this feels like a highly financialized market that is losing its liquidity base. And right now there is thin confidence and there's thin trading. And that's what you see in these wild whip swings. I mean, why is Cisco down 12.5%? Because its margins are a minuscule smidge smaller than people had expected when they overperform on sales. I mean, it just does not make sense from any traditional backdrop.
And yet the stock market is 2% away from all-time highs on the S&P 500. Futures this morning down another 0.25%. Coming up this hour, we'll catch up with Peter Cheer of Academy Securities, with AI fears keeping Wall Street very much on edge. Tom Forte of Maxim Group, with Apple bearing the brunt of the mega-cap sell-off. And Andrew Honhorst of Citi looking ahead to a fresh read on inflation. We begin this hour with stocks on course for back-to-back weekly losses. Peter Cheer of Academy writing the following: we're transitioning on multiple fronts, and that transition will create some volatility. Pete joins us now for more. Pete, good morning. This is quite a transition. How would you describe this transition to clients at the moment?
You know, I think, one, at the world order sort of level, we went from this kind of rules-based economy where we kind of understood the rules. China, I think, was pressing the envelope. and we've now thrown a bunch of Molotov cocktails there. We are going to wind up, I think, in potentially another stable system where everyone does a little bit more on their own. Global trade kind of diminishes, and each country becomes a little bit more responsible for their own efforts. But that's a stable state, and we're in a stable state. I think the transition is very painful. We're going through that. I think we're seeing some of the same transitions in AI. How's it going to be applied? Where is this going to be used? So when I'm looking at the AI story right now, I think what you want to avoid is companies that don't rely on people, don't rely on property, plant, and equipment, and have very high margins. I think that's where you can see AI disrupt, right? It's easy to disrupt those kind of tech sort of earnings, right? Okay, they're not going to replace the big tech companies, but if products come along that are cheaper, you start feeling that margin pressure. At the end of it, I think companies that are actually producing things, goods, services, real things, tangible, pulling things out of the ground, those companies are going to do well, and that's where you might see margin, increases. So we've had this tail of a tape, right, where we've had low margin companies, high margin. I think that's going to dissipate, and you're going to see the pressure on those high margin companies as they feel it, and you're actually going to see continued rallies in the other sectors.
Okay, here's the issue. Some people thought the safety play was trucking, the movement of physical goods, and then yesterday happened.
One, I think Lisa mentioned one of my favorite points has been this lack of liquidity. I think we live in this world of what we've been calling full liquidity, right? There's all these algos, they're all sitting there trying to make markets, but when a trade starts happening, it accelerates, right? There is no real depth. There's no one sitting there really willing to pick up and say, I'm going to step in the middle of this, and you create all these stop losses. So the hedge funds all have the stop loss trading, CTAs have stop loss trading. People see this too. Now they can use whether it's single stock leveraged ETFs, whether it's some index leveraged ETFs, they apply onto 0-day to expiration options. So I think you kind of see this additional pull on things.
There's a signal, though, for a karaoke company turned into somehow a trucking and logistics company overnight with less than $2 million of sales at the quarter ended September 30th, coming out and saying, look what we have, and then suddenly having trucking stocks plunge 14.5% in response. Isn't there a tell about what risk appetite is and how much the fear is out there, the trigger finger that so many people have?
Definitely. I think people are looking for excuses, and it doesn't take much. And at the same time, I do track some of this. I'm going to say this, and I think it started with Greenland, right? I think we've now shifted this world where the U.S. is not friends with everyone, and every other country kind of realizes...
You keep going back to geopolitics. I'm surprised by that. The first question I had for you, I thought that Pete was going to be talking about tech news.
Completely. I was actually just going to say the same thing.
And geopolitics. Why do you keep doing that? Why is that important?
Because it is the biggest driver out there. What we're doing with China is going to affect our outcomes. I think we're trying to do a lot of things on rare earth critical minerals, electricity production. China's doing that, and the rest of the world's now confused, right? I think pre-Denmark, okay, we're all trying to figure out how to deal with what's going on with this administration, and I think that slapping the tariffs on Europe kind of randomly, and again, as far as I can tell, there was not a single ask ever, Greenland, do this for us, and Greenland said no. All of a sudden, it was take over, and then just this past week, you look at the, I'm going to probably title the report, A Bridge Too Far. I think the messaging that came across on the Ambassador Bridge, what we're doing, and I've had to go over that old bridge, it's awful, and I grew up in Canada, I am Canadian, so take this all with a grain of salt, but I think the messaging was just very unclear. It clearly affects Michigan, which is a swing state, so I'm wondering if some of this trade is too, we felt we were on this path. We saw what Trump was doing. I think, when we took Maduro out, that was an extremely successful operation. There was success. And since then, I think we're losing faith in this. And you want to invest in other countries because everyone's doing their own thing right now.
There have been so many people who have come on the show, and I'm glad that John pointed this out because I was thinking the same thing, who have said geopolitics matter in the long term, but in the short term, that's not what's jerking around price action. This isn't what people are following on a day-to-day. Yesterday, people were looking at a karaoke company. They weren't looking at Greenland. Why is this structurally different, where suddenly that is going to inject more volatility at a time where the marginal flows seem to be on the margins heading away from the United States? I mean, is there something about flows that affects both the liquidity and the market reaction as a result of this changing geopolitical order?
Yeah, I think two things. One is, if you're in Germany today and you're going to the store, is a U.S. brand as appealing as a German brand now as it was 3 months ago, 6 months ago, a year ago, right? I think we rely heavily on selling to foreign countries, right? If you're an American company trying to get a meeting in Europe, is it as easy today as it was 6 months ago? I think that's changing, right? There's been a pullback, and I think it's going to affect our foreign sales. I think it's going to do a lot of those things. I think it's affecting a bit on foreign capital. Again, look at the banks, right? Maybe that's part of this, right? If we're decoupling a little bit, that gives less opportunity for U.S. banks maybe than we had 6 months ago or 3 months ago. So I think these geopolitical ramifications are coming through. And, there were some tweets I saw, maybe coming in that China and Trump said something. No one even seems to care anymore. I think we've moved past that.
Pete, you think that this is a short on White House policy?
I think there's an element of that. One thing I keep watching is Bitcoin. It cannot get up. And there's been nothing but good news about Bitcoin, right? Everything goes, there's been some delays, but all the things this administration is doing is towards Bitcoin, and it's still struggling right around 67,000. And to me, that's telling me there's something going on that's affecting people's investment behavior. 2 months ago, 6 months ago, a year ago, certainly everyone would have piled into those sorts of trades. Are they out of money? I look at TQQQ, which is the triple leverage Qs. It's not really experiencing big inflows. Last year when we were going through Liberation Day and you had to buy the dip, massive inflows into that. ARKK, which is kind of like a disruptive, same thing.
So I see John's face, and I see that face across Wall Street to a lot of people who are listening to this. Really? We're talking about Greenland this morning. We're talking about all of this geopolitics. When we're talking about huge CTA funds that are whipsawing their money on AI fears. Is there something bigger here? And this is where I'm wondering if there's actually a connector. Because flows have been moving away from the United States, or on the margins, there's been a much bigger flow of cash going into Europe as well as Japan and China. Is that creating a less liquid backdrop? I mean, is that kind of what we're seeing right now? I mean, that's sort of, to me, maybe the way to connect these two.
Where's the leverage, Pete? Where do you think it is?
I do think it's in, call it the degen trade still, where people are still very aggressively positioned in these leveraged, ETFs. There's still a decent amount of size. Every day it seems like there's 5 or 10 new single stock leveraged ETFs. You've seen the crypto. I think there's a lot, and gold and silver became hot things. I think all those things kind of have to get pushed down and renormalized, right? Again, it seemed like every day someone would come on and say debasement, and we should buy gold because debasement, and no one's explaining where the debasement's coming. Like, where is the debasement? So we get ahead of ourselves, and I think everything's kind of pushed by the stop-loss trading on both directions. And no one complains when we're going up every day, right? Oh, that's just fine. That's because I was super smart. I made these great picks. And
that's always the way.
But there's the same liquidity issues. It goes in both directions. It tends to be slower on the upside and much more rapid on the downside.
Is there a cyclical signal in the sector price action this week or not?
Yeah, I think we are changing the dynamic of, the global economy, and people are going to have to look a little bit differently within that. I think there are going to be some concerns about how U.S. companies do in sales. On the flip side of that, though, I do think all those things we've been talking about, production for security, whether it's biotech, whether it's electricity, those things are going to stay through this administration. They're going to be developed, and they're getting developed everywhere. Like, I love uranium still, for example. I don't see a world that doesn't realize they need nuclear anymore. And that's happening. You're starting seeing in Canada. Again, I think that's the flip side of some of this, too, is you even looked at Canada. All of a sudden, they're trying to actually process and refine some of their resources. They're no longer just content to sell them. Everyone seems to be turning to China, who, maybe it's the least dirty shirt when you look at this. Like, at least China tells you what they're going to do. They wrote this thing, China 2025. They're going to control the world in this, and this. They did it. But I think as people are trying to look, who do you trade with? How do you do business relationships? When it seems like every day, if you thought you had a deal, that deal could be changed. And that's becoming, I think, increasingly difficult. And the other part of this is we always looked at tariffs, right? And it's say $30 billion a month. I always argued that it was going to take time for this to have a cumulative effect. Well, it's now been 7-8 months, so now we're at $250 billion. I also, this will be very simplistic, and anyone who's truly looking at companies will laugh at me, but I just, as a working assumption, let's say everyone does 2 turns of inventory, right? So if everyone kind of knew tariffs were coming and it was a risk, they had 6 months, maybe 9 months of supply. It's only now that every company is starting to be fully engaged in tariffs, and people have been very reluctant, certainly early on, to pass these on because it was catching the, it would cause you problems. I think these things are getting passed on more and more, and all these things are coming home to roost. And it's just, there's a very, you look at delinquencies on everything across the board, there is some mess. One positive to say, because now I feel like I've been too negative, that we've been really excited about. I think you're seeing a regrowth in the Great Lakes regions. I think you're seeing some of these states that have kind of like fell behind a little bit.
Yeah.
Access to fresh water is huge. It is going to be a huge part of any sort of industrial revolution that we do. We're doing that. I'm hearing some chatter now that we might pull back on tariffs on steel and aluminum, which would make sense. I think I tweeted at the time we were doing this, we're tariffing everything that we need to actually build out industry, which made no sense. So maybe we'll have a policy that's a little bit more coordinated and gets that growth. But I think it's going to be those hard physical assets that do best.
We'll let you take a break because you started interviewing yourself. Pete, you're going to stick with us. Peter Chair of Academy. Pete, thank you. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Is Vonnie Quinn. Hey, Vonnie.
Hey, good morning, John. Hi. Venezuela planning to grant more oil production land to Chevron and Repsol. Sources are telling us here at Bloomberg that officials in Caracas are preparing to award the exploration and production blocks as soon as this week. U.S. Energy Secretary Chris Wright toured a project operated by Chevron in Venezuela's oil belt. The Trump administration is working to narrow its scope on some metal tariffs. Sources telling us here at Bloomberg that Change would target levies on steel and aluminum products that many companies find difficult to calculate and that negatively impact consumers. The report is sending London aluminum prices lower today. Anthropic completing that $30 billion funding deal from investors, including Singapore's sovereign wealth fund GIC and Coatue Management. The deal values the AI company at $380 billion. Anthropic also confirming plans to let employees sell shares in the company at the same valuation as this latest round. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. We'll see you later this hour. Up next on the programme, Seek and Destroy.
AI has been sort of like a heat-seeking missile, looking at different sectors in the equity markets. You know, first it was software, then it was private credit, then it's data service providers.
And now it's logistics. Mandeep Singh of Bloomberg. Up next from New York City this morning. Good morning.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Next up, inflation in America. The CPI report about 2 hours away. Looking ahead to that at 8:30 Eastern Time. Going into it, the scores look like this. Equity futures pulling back by 1/3% on the S&P 500, on the Nasdaq down by 1/3%. Also in the bond market, if I showed you ISM and payrolls, you'd conclude things were pretty good right now. But any counterpoint whatsoever, including jobless claims, test the theory. Test the bull case. Yields near the lows of the year, 4.1134 on 10s.
People had so many notes overnight about all of the reasons why the strong payrolls report wasn't that strong. I mean, I did not read one saying, oh my goodness, you look under the hood and it's actually stronger than people thought. And ultimately, this goes down to A, skepticism about the integrity of some of the data, not from any kind of conspiracy theory, but just because of some of the seasonal changes. And B, the lack of signal at a time where there's not wide breadth of some of this job creation.
The tech anxiety is overwhelming for the jobs market as well. Under surveillance this morning, Seek and Destroy.
The things that have been driving the market over the last couple of years have now switched over. AI has been sort of like a heat-seeking missile, looking at different sectors in the equity markets. You know, first it was software, then it was private credit, then it's data service providers. AI is going to be the most massive creative destruction process we've ever seen, and it's going to be happening faster than we've ever seen it.
So here's the latest this morning. The S&P logging its third session of declines at Thursday's close, with AI disruption fears roiling equities, causing investors to pull back from mega-cap tech and software. Bloomberg's Mandeep Singh joins us now for more. Mandeep, welcome to the programme, and welcome back, I should say. Mandeep, the level of anxiety around the tech story feels different. Does it feel new and different to you?
Well, right now what we are witnessing is, obviously there is anxiety around this build out of CapEx, but also what we are seeing with the component prices, especially memory. And now I think people are debating, yes, the hyperscalers raised their capex, but then how much of that went to memory prices? And I think that trickle down to the overall market is everyone sees the Anthropic release. In fact, the numbers we saw yesterday, they went from $10 billion ARR to $14 billion ARR in 6 weeks. That kind of growth is phenomenal. So enterprises are allocating their dollars, and whatever model they have released is really working from that standpoint. The question that needs to be asked is, what does it mean for the margins? Because a lot of these companies right now are giving away their product under cost. And, with the inflation we're talking about with memory prices, I mean, you have to ask yourself, yes, things can change, but at what cost and at what margins? And that's where I think the impact is still not clear. There's a lot of noise, and everyone is trying to figure out, what really gets impacted, because the costs are really going up when it comes to building this AI infrastructure.
Well, Mandeep, let's stay on that and let's talk about the victims of it. How does Apple fit in with a big move lower yesterday?
Well, I think for a company like Apple, they have stayed away from investing in LLMs altogether. Now that they are partnering with the like of Gemini, basically what they're saying is we will get the best model. Let the 3 or 4 companies compete. We still have a hold on the hardware until there is a new form factor when it comes to using these LLMs. I think Apple is still in a great position, and I do see, this arms race around raising capex, but it's going to impact margins big time, and it's just a matter of time. And so from that standpoint, Apple is somewhat insulated.
Apple hammered in yesterday's session. Mandeep, thank you. Down 5%, Bramo. Worst day for Apple since Liberation Day week.
Yeah, and it seems like maybe people were just selling it because they hadn't been selling it quite as much before. I mean, the fact that Amazon has been down 16% in the past 8 trading sessions gives you a sense of just the scope of the carnage. And it goes to the question that you have. And Apple's sort of a different story because they're more of a consumer of this. But it goes to the story, if they're going to be the big winners, why aren't they winning, right? I mean, if they're the ones that are disrupting everything and that are going to ultimately have to consolidate market share, well, why aren't people buying them at least?
Pete, which one is it? Can we make our mind up? We started the program like this. Either it's going to cause mass disruption and destroy lots of things because it's so good, or we're wasting money. Can it be both?
One thing I think that's coming up certainly in our discussions, electricity, right? 6 states now, I think, have actually put some sort of restrictions on the data center build-outs, right? This lack of electricity, will we actually be able to achieve all these things, right? Mandeep just talked about the chips and the underlying cost of the chips going higher, right? How are we going to get the electricity on board to do all this? Where is this all going to come from? And yes, I see it sometimes replaced. I still think this is much more of a unwind of liquidity. People got very comfortable in treating some of these companies like cash, right? We went from a world where, yeah, money markets are good, but like Apple's like cash. So I think people got very, very comfortable with risk. People were very excited, again, coming into this year, what was going on with this administration, where we were headed. And I think there's a bit of a pullback. Like, there's a degree of uncertainty, and you start seeing things come down. People say, like, you know what, I will sell. I will see if I can. It doesn't have the same feel. You're not getting that buy the dip mentality, right? I keep looking at these ETFs that, to me, kind of exemplify buy the dip. They're not getting the big inflows. You're not seeing retail come in. And that, to me, that's part of the reason we're getting these on-selling things. And we have not lived in a world where we've seen these big sell-offs for a while, right? People were very comfortable with these trades. They kept working. So I think there's a lot of room to unwind. I think it's just really all about positioning, and we are going to figure this out.
Would you be a buyer of this? I mean, is this a falling knife, or does this look like something that is actually a really good opportunity?
I think we're getting close to opportunities in some. I'm looking at some of the wealth managers, for example. We're having some conversations around that. Yes, robos are going to do a certain amount of things. There is going to be a lot of hand-holding people want to do, right? People are still going to want to talk to people. I think some of these things are overdone. To me, again, it's about valuations. And valuations positioning until you kind of get this thing. And it's kind of weird, too. This has been the U.S. selling. It's not like we get overnight these huge futures moves. Generally, we've been higher in the morning, right? We went much higher after payrolls. We went higher yesterday morning. You're sitting there. I went into a meeting. NASDAQ futures were up 100-something. Came out of a meeting. We're down 400 points. So this is U.S. selling, right? I think it's an unwinding of positioning in the U.S., and people are less comfortable that we have to go higher.
Got 30 seconds left. What's Walmart doing with a 50 multiple?
Again, I think it's positioning the other way. Maybe that was what people were using short. Again,
Isn't that wild?
I think what we have to understand is people have all these trades, long shorts, and the systematic trades. Maybe Walmart was everyone short, so that's coming back. It is pretty wild, But again, these are the companies that were going to do well, I guess.
What a chair of Academy Securities, Pete. Thank you. Appreciate it, buddy. Walmart reporting earnings next week.
Apologies, but honestly, after the pandemic, what do people do? They went out and they bought toilet paper. I mean, ultimately, you go out, you stock up in goods.
So you're in the February 2020 camp.
I mean, ultimately,
is
this not the same type of trade? I mean, it's the haven trade of stockpiling of the things that you need.
A 50 PE.
You know, Clorox
Walmart.
wipes.
My goodness. Is that what you think this is?
No,
Eve
actually,
of the pandemic?
their business model, I think, has fundamentally changed. I think that that's a big piece of it.
Okay. Coming up on the program, Tom Forte of Maxim Group. As Apple shares fall by the most since April of last year. Plus, Vonnie, how's your morning movers? Applied Materials soaring on a rosy forecast and memory demand. That stock is up by more than 11% in the pre-market.
crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Stocks are down by a third of 1% on the S&P 500 following a three-day slide. 3 days, no gains on the S&P 500, wiping out the gains for the year so far on the benchmark. The S&P 500 heading towards the worst week of losses so far this year. On the Nasdaq, we're down by another 0.4%. On the Russell, the small cap softer by about a quarter of 1%. In the bond market, check it out. Bond yields on 10s, very close to the lows of the year, up a single basis point this morning, 4.1134. Think about it, near the lows of the year. even though we had an upside surprise on payrolls, a downside surprise on unemployment, and a week ago, a really strong ISM manufacturing, and yet here we are at 411.34.
Yeah, even the 30-year auction that happened yesterday, the dealers that normally have to buy if they are on an auction took down the lowest proportion of this bond sale on record. In other words, there was so much demand for 30-year treasuries at a time where suddenly people are talking about the existential risk of a deficit. Poof, all of a sudden that went away. Why? Is it because of the fear of some sort of downturn, recession? Is it because of Japan? I mean, ultimately, this is a real question at a time where there do seem to be some pretty massive market shifts.
That's the silver lining of the week so far. The bonds still work. Yields lower at the long end, 30s down to 474, up a single basis point on the session. As we count you down to the opening of this session, 3 hours away from the opening bell, let's get you some morning movers with Vonnie Quinn. Hey, Vonnie.
Hey, John. Yeah, some violent moves this early on in the session as well. Look at Applied Materials, up 11%, and you would think that a lot of the good news would have already been priced in here, right? Applied Materials in the perfect position right now. It makes the equipment that makes memory chips, and we know that memory chip stocks have been on a tear. Well, seemingly the demand is just unending. It beat on the top and bottom line and gave a fantastic forecast. So Applied Materials is off to the races this morning. Let's take a look at another stock that we're seeing a huge move in and maybe a little bit less expected. Rivian Automotive, the maker of EVs. Now, we all thought it was a hugely bleak outlook for electric vehicles, right? Not so, seemingly. So Rivian actually swung to a profit in the quarter, and it's betting the farm on a mid-sized SUV that's going to be all electric for this year, and it upgraded its guidance for its full year forecast. So seemingly EVs are popular still in some corners of America and the world, and that stock up 20%. Also got up many upgrades, but one in particular from Deutsche Bank upgrading its price target to $23 a share. Not so for DraftKings. Now, this is an online gaming company, obviously, and what have we all been talking about recently? Prediction companies, right? So the prediction markets are gung-ho. Online gaming, not so much. Also, there's really no moat here. You can have as many companies in this space as you want. DraftKings definitely didn't at all come anywhere close to meeting revenue or profit expectations, and it also gave a fairly bleak forecast, and that stock is definitely down 15% and suffering today, John.
Hey, Vonnie, thanks for the update. More from Vonnie in about 15 minutes' time. And our radar this morning, Wall Street seeing more than $500 billion in market value wiped out on Thursday across just 10 mega-cap stocks. Fears over AI disruption taking a major toll on the tech sector. Elsewhere, the DOJ's top antitrust official resigning following pressure from the White House. The move raising questions about how the administration may shift its stance on challenging anti-competitive conduct. And finally, the Trump administration working to narrow the scope of its tariffs on metals. Trade officials addressing the difficulties companies are facing since the White House imposed a 50% levy on foreign steel and aluminum.
This is exactly what Pete Shear was just talking about, that these are some of the crucial elements that go into a lot of the manufacturing boom that they're hoping to reignite. This goes to a larger point, though, that a number of different guests have talked about, which is that if they don't have that many levers to pull in a year where affordability is increasingly in focus, how much will there be a push to reduce some of the tariffs already in place? We're already seeing that in the margins from House Republicans. Do we see that taking shape in terms of lowering rates overall?
They're feeling the heat, and unemployment's close to 4%, and the stock market's 2% away from all-time highs, and GDP could be close to 3% by the end of the year, and they're feeling the heat. Now, bear that in mind when we talk about these AI stories. And we quote these AI officials, people from Microsoft talking about wiping out white-collar jobs in the next 18 months. If they're feeling the heat now, what do you think the Washington response is going to be if we actually see technology that starts wiping out white-collar jobs across this country?
This is the reason why I thought that the Anthropic press release yesterday was so interesting. Anthropic's trying to get ahead of it and saying, yes, we need you to regulate us more. And by the way, we want to come into Washington and help you do that because we're going to help you craft that so that we can get ahead of it. This is the question. What is that response, right? What is the policy lever that Washington, D.C. is going to do? Is it going to simply say you can't have electricity? Is it going to simply say you don't have permitting to build out? Or is it going to say, hey, Kevin Warsh, lower rates, go drop them to zero and try to ignite some sort of growth? I mean, they're kind of in a bind here, right? Because the United States has always been a bastion of creative destruction. That has been the power, the engine of this economy. So how do you deal with that creative destruction if it is potentially the nuclear bomb of creative destruction?
And moving this quickly, and it's the speed at which it's moving that is of concern. That post that everyone's talking about, the viral post that we mentioned yesterday, the start of it, that it's February 2020. Let's just think that through just a little bit more. I understand why people are concerned and anxious about that. The technological development is real, and it's happening much quicker than people thought it would, even 12 months ago. But everyone's worried about March. Did everybody forget April and the following 12 months? Governments around the world threw everything at this pandemic to make sure that unemployment didn't climb because they knew what it meant for their jobs. But just think that through. Never mind February 2020 and being obsessed about March. Think through April. Think about the government response to the pandemic to try and insulate the labour market from the economic shock. That's what you've got to bear in mind, how Washington will respond if some of these fearful forecasts actually start to materialise.
It's a great point. It's a really important point. It's the reason why people's eyes are turning to Washington as they see some of these developments take place. I'm just not clear on the policy prescription in response to this type of creative destruction when Washington, D.C. doesn't seem to understand it as quickly as it's moving. And that a lot of people don't have their heads around exactly how developed some of this technology is and what its potential is. And when there is this arms race globally, right? China is not going to regulate it into obsolescence. They're going to invite it more because they want to dominate. So what is the policy prescription if it's not throwing cash and dropping rates to zero? That seems to be where President Trump is trying to push it with Kevin Warsh. But is that really going to change the dynamic in any material way?
Well, China's an interesting example because the labour market and unemployment in China is existential risk to the Communist Party. Literally, the whole thing gets shut down if people start to come out with pitchforks because they can't make a living. So how governments respond to this, the same thing will apply to China too. They can't just sit idly by and let all these companies make tons of money, hand over hand, fist over fist, and then just watch people lose their jobs. That's not going to work out for any of these governments.
I would agree with that. You're seeing right now in China the unemployment, the youth unemployment rate at 20-some-odd%, and they're having to crack down on a number of dissent that is percolating to the surface. That's already somewhat there. I will say going forward. Again, though, how are they going to address this? Is it going to be training programs so that we can all become gardeners? Are we all going to learn how to refine metal? I mean, there are certain jobs. Are we going to become plumbers? Because evidently plumbing pays a lot if you've ever had to fix anything in your house. So there's a lot of potential jobs that do still have a place, but they haven't been the ones that have been most popular over the past couple of decades.
Let's keep it on tech. The Nasdaq 100, as you all know, on track for its third straight weekly loss. Tom Forty of Maxim Group covers Apple and Amazon with a buy rating on both. Tom joins us now for more. Tom, the anxiety is overwhelming this week in the tech sector. I don't even know if it's reached Main Street just yet, but on Wall Street, the fear is sky high in two names that you cover, Apple, Amazon. Let's start with Amazon. Lisa mentioned this 8-day run of declines, 18% lower on Amazon. What has made that stock fall out of bed over the last week?
Yeah, so when you think about the weakness in Amazon, I think it's entirely related to the $200 billion CapEx guidance by the company. And if you look historically, without downplaying the significance of a $200 billion CapEx number for Amazon, but Amazon has a track record of ramping investing when necessary to take advantage of opportunities. And I do think that net Amazon can take advantage or capitalize on AI in ways other mega caps can't. They have 1.5 million employees, many at the large fulfillment center level. To the extent that they roll out robotics, add automation, they can have greater efficiency. Now, you've been talking a lot about AI displacing jobs. So I think that if you do the math equation for Amazon, it would be to the extent that automation reduced the headcount at the warehouse level. But at the same time, you have to think about the new jobs that automation would create to the extent that someone has to make the robots, service the robots, things of that nature. So yes, I'm concerned about job loss from artificial intelligence, but I think it's going to be an offset of job loss, but also some job gains.
You know, Tom, John opened the show asking about this conflict that I think really is the conflict. Either this CapEx that all of these big tech companies are spending is not worth it and ultimately is going to backfire on them for becoming asset heavy and not as profit heavy. Or people are just totally mispricing the story, and the disruption is actually, yes, significant on the other side, but is going to benefit these companies in a significant way. Which is it?
Well, okay, for Amazon, again, I'm of the belief that it'll be worthwhile. And I think what's interesting as a student of, having started covering the internet in the late 90s, I remember the build out of dark fiber and things of that nature. So I worry that we're going to have this, ghost data centers in the future and things of that nature. But the good news, I think, for Amazon and for other mega cap tech companies that are ramping their CapEx is that presumably if they don't see the returns, they can scale back the numbers It isn't that Amazon's spending $200 billion in one day. So if you look at Amazon again, they've scaled back some of their leasing commitments when they determined that they didn't need as much fulfillment center square footage because there wasn't the demand. So I do think that they're expecting greater efficiency at the warehouse level, greater efficiency also at the software engineering level, better sales from e-commerce, things of that nature. It's not like they can't stop the spending. They can turn it off.
Tom, is the tech really that good? Is the AI really that good to disrupt all of these potential industries? Is this sort of heat-seeking missile that Joe Amato of Neuberger Berman was talking about, is it truly that in terms of its efficacy?
So you're asking me, so today, we'll call it, day before Valentine's Day, 2026, is the technology that good? To the extent that I have, spent a lot of time with Alexa and Siri as an example of, AI and things of that nature, the answer is absolutely not. The question is, in the future, will it be that good? And it remains to be seen. But I would say, Lisa, today I'm convinced the tech is not that good, but that doesn't mean directionally we're not heading to a point where it'll be much better than it is today. And I think that's, very much possible.
Tom, I'm not going to ask you if you're spending Valentine's with Alexa and Siri. I'm not going to ask that question.
You just did.
But you basically asked it yourself.
Taking my wife to dinner, but thanks, Jonathan, for worrying about me.
Otherwise, you could have joined us. I was concerned. So I'm going to follow up on Apple. I want to talk about Apple very quickly. 5% move. Is this the threat of a margin squeeze from memory, or is it about falling behind with AI? What's the move about?
Has to be the margin squeeze on memory. So, Jonathan, I was thinking back to last year being on your show and wondering if we had a super cycle for AI for Apple. 20% growth in iPhones in the December quarter would make us think yes, but they're nowhere with AI. So I think that the 5% move is concern on memory. Apple historically does very well when they have a product selling as well as the iPhone 17 and improving the margin over time. They could take price. Managing supply chain is Tim Cook's forte. So I'm not worried about memory maybe as much as the market is right now.
Hey, Tom, I'm not worried about you. It's good to catch up. Tom Forte of Maxim Group. Tom, thank you. And a happy Valentine's Day to Mrs. Forte this weekend as well.
I wonder if anyone's actually doing that. Hey, ChatGPT, will you be my Valentine?
Bramo, kinda. It's happening.
I know, but maybe they just provide, really good feedback.
I saw a headline about a restaurant opening up where you could take your AI partner recently. Did you read that headline? No. When you see those headlines, you don't actually click the stories and read them because I just know.
You can't get that depressed.
No, I don't know.
If it makes them happy, it's sort of like a niche.
I'm all for it.
It's like a furry, but
Try not to get involved in other people's business. Do what makes you happy.
What do you think?
Absolutely.
If they should come up with another name, not furry, but like body.
I'll let you take some time to think about it. Okay. Let's give you an update on stories elsewhere this morning with your Bloomberg brief. Here's Vonnie Quinn. Hey, Vonnie.
Hey, John. Thank you. President Trump says he can see negotiations with Iran stretching for as long as a month as he seeks a diplomatic agreement that would roll back Tehran's nuclear ambitions. The president also saying it will be, quote, very traumatic for Iran if it fails to reach an agreement. Trump's comments coming a day after he met with Israeli Prime Minister Benjamin Netanyahu at the White House. Global ports operator DP World is naming a new CEO and chairman. The announcement coming after emails released by the U.S. Justice Department showed Sultan Ahmed bin Sulayem swapped emails with convicted sex offender Jeffrey Epstein. Sulayem was one of Dubai's most powerful executives and was in touch with Epstein for more than a decade after Epstein was first jailed in 2008. L'Oreal shares trading lower in French trading. The beauty group posting disappointing sales growth in the fourth quarter. Results at its Luxe division, which includes Lancôme and Yves Saint Laurent, were hurt by a persistent slowdown in the travel retail business in Asia. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Up next on the programme, it's CPI Friday.
There is a potential disinflationary trend that's in place. I think shelter will be key to that. The Fed has missed their inflation target by a wide margin for now 5 years. I think it makes a lot of sense to them be cautious about adjusting policy lower.
Andrew Honhorst of Citi joins us next, live from New York City. You're watching Bloomberg TV.
This is a 15, 16 grams tuna. Then sushi rice is still a little bit warm. So take one, like a very, don't make it too tight. So from now, and very light, like a ball. Put wasabi in the middle. Then my process 1 to 6. 1. This is putting the between the rice air. Then make the 4 fingers curl. Make sushi shape. Then touch this. 2. Then turn. Now these 2 fingers, top of the bottom, make the sushi shape the more beautiful. 3. Then, I'm not, looks like pushing, not pushing. 3, 4, turn, same way, 5, and 6. So this is the 1 to 6.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in 1.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Three days, no gains. It could become day 4. Equities are softer by 1/3 of 1% on the S&P. On the Nasdaq 100, we're lower as well by 1/3 of 1% also. It's a reset for 2026, a reset because we're back to zero again. In fact, negative on the year now on the S&P 500, wiping out the gains for 2026 so far. Under surveillance this morning, our next stop, it's CPI Friday.
There is a potential disinflationary trend that's in place. I think shelter will be key to that. It's pretty clear from their dual mandate objectives. They're missing very clearly on one, but the labor market looks much closer on the other. The Fed has missed their inflation target by a wide margin for now 5 years, and the labor market is very close to what they think full employment is at this point in time. With that context, I think it makes a lot of sense to them be cautious about adjusting policy lower.
So here's the latest this morning. Traders turning to the next inflation read at 8:30 Eastern Time following a blowout jobs report, which pushed out Fed rate cut bets. Andrew Hollenhorst of Citi writing, in our base case, we have the Fed cutting interest rates 75 basis points this year across April, July, and September. Andrew joins us now for more. Andrew, good morning.
Good morning.
Just remind everybody what your jobs guess was.
We were just within 5K of the actual number. But, I was talking to Lisa about this before. The question is, are you getting the number right? Are you getting what's going on in the underlying economy right? And we were close to the right number. It was a strong jobs report in that sense. But like you were talking about earlier, there's a lot to look at here and think that really the labor market's not that strong.
So you think the number this week overstates the strength of the economy?
Absolutely, and I think we've seen that consistently at this time of year over the last couple of years. This is residual seasonality. I think we talk about it every time I'm on now, which is just such an important feature of the data now. The reason we had that strong forecast for payrolls, or that high forecast for payrolls, I should say, is because of that residual seasonal pattern. Every January you get a strong number, and then we'll get numbers over the remainder of the year that aren't going to look as strong.
Andrew, this was no victory lap. Come on. You had almost the perfect numbers. You were supposed to come in here and say, yes, we nailed it. Our team absolutely crushed it. We had 135. It came in at 130.
They failed by 5K.
I mean, instead, exactly. We failed by 5K, and it's hard to understand exactly all of the details and what this actually means. Look, how much are you focusing on the breadth of the jobs gains as a real indicator of how fragile some of these numbers actually look?
Yeah, that's another way to look at it. I mean, again, you just start pulling this report apart, and there's more and more reasons to think that it's really not that strong. Almost all of the job gains that we're getting are in healthcare, education, and leisure and hospitality, with healthcare being the biggest of those 3 categories. So this is very, very focused job growth. What you want to see in a healthy economy is job growth across the economy. And then remember, we think that these numbers are being overstated by something like 60,000 per month. You look at a moving average and you adjust down by that 60,000 a month. We're close to zero net job growth, which Maybe that is consistent with labor supply that's slowed down a whole lot, but it's still not a healthy thing for an economy.
We'll get into inflation, but it's Existential Friday and we're worried about our jobs. So I'm just wondering if you get a sense under the hood that there are certain sectors that are losing jobs as a result of AI, or uncertainty about exactly how this will play out for companies that are holding back on hiring.
Yeah, it's hard to see that in the data. You would look at certain sectors and say, are we really losing jobs in a big way in the sectors that we would expect to be affected more by AI? And instead what we see, which is interesting, I think, and maybe telling us something about what's going on, is just a general weakness in hiring, firms that are reluctant to hire. And I do think that has something to do with AI. It probably has something to do with the overall macroeconomy. But you have a lot of CEOs out there, a lot of CFOs out there, and I think they're thinking, what if we do get these productivity improvements from AI? Is this the right time to be hiring? If I'm losing some employees now, should I be replacing those roles? Or maybe I'm just going to wait and see in 18 months from now, will I be unhappy that I increased my payroll? So this reluctance to hire, I do think it has something to do with AI.
When do you expect to see more weakness in headline payrolls?
I think that we'll see that really as we get into the spring and summer. This seasonal pattern, you hire a bunch of people into the holiday season, then you lay those people off in January, then you start hiring again as you get into the spring and summer. And when that hiring is supposed to pick up, that's what we've seen over the last couple of years. You seasonally adjust those numbers downward and we get weaker readings.
Is that coming with hotter or softer inflation in the months ahead?
I think that it will be coming with softer inflation. That is critical.
You sound hesitant.
Well, I'm hesitant because we've seen inflation that, especially at the beginning of the year, again, I'm going back to residual seasonality again, January and February inflation prints have just been strong the past couple of years. We think it's going to be a softer reading today, but there's a lot of uncertainty around what exactly the reading is going to be. I do think by the time we get to the end of this year, we'll have a pretty clear, slower inflation trend. I think we have actually established that in the underlying data and the details. But are we going to see that today? Are we going to see that in the next couple months? It may be a few months before we see that.
What kind of number would we have to see for the Fed to be justified in cutting rates as a result of disinflation, not because of labor weakness?
Yeah, I think if we're reasonably comfortable that core inflation is running down more at 2.5%, which on a year-on-year basis we're not that far off of, I think that's a pretty comfortable place to be reducing policy rates. I think many others would not get into this game, which I think we were in before the pandemic, of looking at every 10th of a percentage point on inflation, because we're talking about how the numbers are imprecise and there are issues in terms of just measuring inflation. So if you're at 2.5%, you're basically at your target. That you're basically 2%. So if we're comfortable that that's where we're running in an underlying sense, I think that you can be reducing policy rates. What Chair Powell is saying now, and I would agree, is that the elevation in inflation is all due to goods inflation right now. So what you really need to see is that goods inflation slow. It should, because tariffs were almost a year ago now, came into effect 6 months ago. And we should be seeing that kind of upward pressure on goods inflation fading, but that's a key question.
Is the disinflation coming from a cyclical softening, or is it coming from AI? And this is important in terms of the read-through for risk assets.
I think it's coming from a cyclical softening, and I think that's really consistent with what we're seeing in the labor market. You are seeing job openings that have come down. You're seeing the employment cost index, right? So this is all the other employment statistics we look at outside of that monthly jobs report, which always gets all the attention. Employment cost index, this is our best measure of the costs of labor. And that has been slowing, and it slowed again in the numbers that came out earlier this week. I think that should be really reassuring for Fed officials, because that's the key input for services inflation, and you're just not seeing inflationary pressure there.
Does it feel like mid-February to you? It feels like the middle of the year.
Yeah, absolutely. Yeah, it feels like we've been doing this forever.
Do clients feel the same way right now? Are they just exhausted and overwhelmed by all of this?
Yeah, I think that's maybe part of why we're starting to see some volatility in markets, because people are starting to think about what does this really mean for the longer term.
True. Andrew, it's good to see you. Thank you, sir. Andrew Humhorst of Citi. In about 2 hours' time, we'll catch up with Jonathan Golub of Seaport Global. He's got a counterpoint to all the gloom. So looking forward to that. He said it's become quite in vogue to talk about how punk the economy is, weak growth, deficit spending, all of that. But from the market's perspective, from his perspective, incoming data looks good. Dare we say, pretty darn good. He likes financials and discretionary heading into the midterms.
And you hear this from other equity analysts as well. I just think about Steve Raschuta yesterday, an economist, not necessarily an equity investor per se. However, he came out and he was like, stop parsing the data. The data look good. Look at it. It looks good. Buy. I mean, essentially, it's that simple. So there are more people on his train.
He'll be happier over the long weekend, I'm sure. Coming up on the program, we'll catch up with Sarah Hunt of Alpine Saxton Woods, Bloomberg's Mandeep Singh, and Kelsey Barrow of JP Morgan Asset Management. The second hour of Bloomberg Surveillance up next.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the US, or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Inflation's not sticky, it's stuck.
The Federal Reserve has to wake up and smell the roses that inflation is stuck at these levels.
That's why we say get used to 3-ish inflation. That's here to stay.
As you look ahead, there is a potential disinflationary trend that's in place.
Rate cuts, if and when they come, will be based on inflation.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The second hour of Bloomberg surveillance starts right now, and your scores look like this. 3 days, no gains. The losses continue. We're down by 0.2% on the S&P. On the Nasdaq, we're down by 0.17. A little bit of weakness as well in the small caps. In the bond market, very, very close to the lows of the year on a 10-year bond yield this morning, up a single basis point to 410.77. Going into this, 90 minutes away. The last big data point before the weekend. We can't wait. You all need it. Inflation just around the corner.
You all need it. We all need it. I mean, this has been a week of all weeks. We're looking for an inflation read at a time where there's a growing chorus of people who are saying to the Federal Reserve, look, you don't have to rely on the labor market falling out of bed. All you have to see is disinflation, and then you can cut rates. So do your thing. And so ultimately, JP Morgan sees a 0.4% or higher, leading to a sell-off because that sort of undermines that argument. But if you see less than 0.3%, you could see a significant rally because suddenly it's back on the Fed and the put returns.
And then we can all relax. Is it as simple as that? I hope it is. How many different narratives have we had so far? It is the middle of February. I keep checking the date. Sell America, debasement trade, one big rotation, the rest of the world, international, Japan, South Korea. And now all of a sudden it's sell everything. Because AI is coming for you.
Kristen Bitterly yesterday was on of Citi Wealth. It feels like 3 months ago that she was on, so I'm wondering whether it was actually yesterday. And she said that in her survey, 60% were relatively bullish, 20% were somewhat more pessimistic about AI, and 20% were confused. I think that section, that 20%, grew to about 80%. I was just going to say that because ultimately it's just mind-spinning to try to figure out which squirrel to chase at a point when it's moving and moving violently. I'm just looking right now. 30% of the S&P 500 members are at 8-week highs. 15% are at 8-week lows. This is dispersion upon dispersion, but without themes that you can really follow in any kind of way.
Devin Ryan of Citizens yesterday on this program called it the AI vigilantes. It kind of feels that way. And when you identify some of these stories, like the company that was a karaoke company, but is now a logistics firm.
Love this story.
And is sinking the whole sector. Where are these stories coming from? Who's finding them? How are they being marketed? All these headlines we've been reading all this week. Who's in control of the narrative right now? Because it feels like things are a little bit too wild.
Will that short seller please stand up? Because right now it feels like people are looking for a story to kind of lob into the fire and see what explodes. I love what Deutsche Bank, Jim Breed, had to say. I've seen some shocking karaoke performances in my time, but this perhaps tops them all, given the fact that you have this tiny company with no proven track record that is sinking billions of dollars of market valuation, taking it from the overall index. You're right. It's correct to be skeptical, but the scope of these moves in a market that typically is equally skeptical highlights just how much of a fear factor there is. The fact that there's so much selling that follows one little grenade that's lobbed into a massive field highlights just how jittery and volatile people are feeling.
The progress is real. The development is real. The speed is real. All of that is real. And the issue that a lot of people in these stocks on the long side have right now is something we've discussed over the past week. From software to wealth management firms to logistics firms, take your pick, real estate. It's difficult to prove the negative. It's hard right now to sit here and say these things won't happen. So people are just selling now, and they're going to sit back and ask questions later. And that's the problem. That's going to be the overhang now for the months to come. It's got to be a show me market. These guys will have to put up fantastic earnings consistently and show that they are ahead with regards to the technology.
Yeah, and the difficulty right now is that narrative, which is very logical, is getting muddied by a lot of forced selling and by CTAs that are getting stopped out of positions. And I look at gold. Why was gold selling off so significantly? Somebody needed to raise a lot of cash in mass, and they've been selling gold in order to finance some of their short positions that they need to cover. So there's a financialization and a lack of liquidity overlay that exacerbates some of these moves and makes them feel more painful when it might be a margin squeeze. It might not be necessarily an existential threat to the entire business model.
And that's a new dynamic.
Yeah.
That's a new dynamic. So picking out the one karaoke firm and saying that it did all of this, it's a little bit too cute. It's a little bit too cute.
But it's a great story.
Fantastic story. I'm enjoying the story too.
You can't make this stuff up. I mean, honestly, how does this come out of Hollywood? This is just too rich.
It's kind of ridiculous, because maybe it is. Ridiculous. Equity futures on the S&P 500 negative by 0.2% this morning. Coming up this hour, Sarah Hunt of Alpine Saxon Woods as Wall Street tries to stop the bleeding. Bloomberg's Anne-Marie is going to join us as Venezuela ramps up oil production. Looking forward to catching up with AMH in just a moment. Plus Kelsey Barrow of JP Morgan Asset Management as investors eye a fresh read on inflation. We begin this hour with stocks trying to find a firmer footing following a broad tech sell-off. Sarah Hunt of Alpine Saxon Woods writing investors are looking to move out of higher valuation stocks as the AI juggernaut comes for a new vertical every single day. Sarah joins us now for more. So, Sarah, they're seeking out another high valuation stock. It's Walmart. at a 50 PE.
Well, so it's interesting because I was listening to you guys talk about Walmart earlier, and I think, I mean, if you go back and look at Costco and you look at those giant moats where people are like, no matter what happens, they're going to go there. There's a reason that people feel more comfortable in that space right now, even if it is a high valuation space, because it seems a little bit harder to disintermediate buying stuff with AI. And it also seems like people are looking for the places that are least vulnerable. Whether or not that's the case, we don't know yet, but it's certainly been driving a lot of the movement.
We did this 12 months ago with DeepSeek. Is this different or another head fake?
It's really hard to say, and I think the biggest problem is that we all talk about it, and as we're all trying to learn exactly how things work, it's hard to your point, disprove a negative. If I say that this is going to come for you no matter what, it's difficult to say, no, it isn't, and this is why. And I think that this is the biggest problem, is really trying to understand exactly what the technology is displacing, because are people going to be comfortable listening to only AI and not talking to any people, which is the direction that right now that, you know, that the market is going.
So what are you more comfortable in? Highly priced consumer staples right now, or software names that have been absolutely hammered over the last week? If you had additional capital to deploy at the moment, where would you put it?
I'm looking more, or we're looking more collectively for the combination of, you've got some real world assets on the ground and you're a company that makes things, you've got good cash flow. It's difficult to think about a pipeline, for example, or an energy company being disintermediated by AI. I think one of the biggest challenges is going to be that electricity that we've all been talking about. There was a story this morning that Germany was basically put the kibosh on a data center going in someplace because they didn't have the power resources. We talk about that in this country because electricity prices have gone up. We're looking now at what the software can do, and then saying, maybe on the other hand, can we build it as fast as we were going to build it? Do we need to build it as fast as we were going to build it? Because that's another question. Is the speed and the technology going to catch up with the chips? I don't think we know the answers, and it's that unknowing that makes people much quicker to pull the trigger to say, let's step back and see what happens.
John made the point earlier that in this viral post, it was February 2020, and John was talking about how everyone's looking past the fact that in April 2020, the bazooka came out. I'm just wondering how much you're starting to anticipate what kind of policy response there is going to be, whether it's restricting some of the electricity demands by some of the AI companies, whether it's throwing money at the cause to try to train people to get them into jobs.
I think that that is also something, you don't know what the response is until you know what's actually happening. Right now, we have an enormous amount of anticipation of what may happen. You can see certainly that things like on the travel side, websites are having a hard time. Hotels valuations are going up. Why? Because they own the hotels. And you can't take that out of the picture. If I'm going to go stay in a hotel, I have to actually be in a physical plant. So there is a bifurcation of what people are looking at. Is this a digital asset? Is it a real asset? Who controls what and how? I mean, even some of the stocks that got sold off yesterday, some of the automation stocks, there's a software component to that, but it's also into the entire automation product. You can't take those two things apart just because I can write an app to do anything. So I think that there is very much of a knee-jerk reaction to, we just don't understand how this is, and things are expensive. And I think that that's really been fueling a lot of the last 3 days.
Is the U.S. market just too confusing? Are people just like, all right, I'm going to go to China where it's a lot clearer and that maybe valuations are a lot lower. I'm going to go to Europe because it's maybe a lot clearer and they've been so beaten up that can't lose too much.
Well, if you think about it just from a purely thematic standpoint, one of the big reasons that the U.S. market had outperformed Europe for so long was the technology piece. If the technology piece is what people are concerned about, you go to markets where that's less of an issue. It's not an issue at all in Europe, but the valuations were lower, and you don't have quite as much movement on the idea that I can get rid of entire sectors with AI the way we've been talking about it in the U.S. So I think that there's a difference there, and it's hard to say that you shouldn't go looking in other places when you've got valuations that are cheaper and you have less of a market that is being perceived as at risk, as you see right now.
So the regulatory burden in Europe becomes a benefit? Is that how we're framing this?
That's what it ends up being, like what I just talked about. I'm thinking exactly where's that going? And it's because you can't do as many things, and or people are saying, no, you can't do this right now. I just think that the U.S. market has been a technology-heavy market and has been a huge benefit. And right now, the big technology companies that are spending a lot of money are under pressure because they're spending so much money and people are looking at that. And the ones that are in the ancillary atmosphere, people are worried that they won't have a place.
Can you identify any financial risk accumulating at the moment?
Well, I think that the moves being so big is telling you that there was, you know, you look at the margin levels of margin debt and you look at the leverage in the system, and you have to think that as the market has wound up like this, using leverage, it also can wind down a little bit when that leverage has to come off. And to your point about margin calls and everything else, there has to be some carnage under the surface because there's so much movement in both individual names and in sectors.
Do you think that treasuries are the haven now of choice? Not necessarily gold, but treasuries, because they hadn't served that way maybe over the past 6 months and increasingly could be susceptible to some sort of policy response?
Well, I think you're seeing that in the short end of the curve, but I'm not sure you're seeing that so much in the long end of the curve. I mean, what the U.S. wants, arguably, is lower rates on the long end so that you get better mortgage rates and some relief there. It's the short end that's been coming down on the back of some of this. And even the move higher after the labor picture did not really last very long. So I think people are using it, but I would say more short term than long term.
So you wouldn't be buying. So you wouldn't be buying the long end of the Treasury curve right now as a haven asset, the way that at least the narrative seems to be painting it. It's working.
Well, and it very well could. I mean, that's the other thing, is that if you get a slowdown, it could work for reasons you don't want it to work, right? Because longer term rates might come down under those circumstances, and therefore then you would want to be in the longer end of the curve. I just think that there's so much uncertainty. It's difficult to say that's a place where you feel comfortable right now.
Sarah, it's good to see you. You're going to stick with us. Sarah Hunt of Alpine Sachs & Woods with 30-year bond yields this morning, just about unchanged at 4.73. Let's get you an update on stories and news worldwide with your Bloomberg Brief. Here's Vonnie Quinn. Hey, Vonnie.
Hey, John. Thank you. The federal government heading for its second partial shutdown in as many months. The Senate going into a week-long recess without reaching a deal for new limits on immigration enforcement. Under a shutdown, most DHS employees will be expected to work without pay. Goldman Sachs' top lawyer, Kathy Rimler, is leaving the firm following the release of documents showing her connection to convicted sex offender Jeffrey Epstein. Rimler was hired by Goldman in 2020 and disclosed to the firm's leadership that she had previously dealt with Epstein. In a statement, CEO David Solomon said he respects Rimler's decision to retire. NASA launching 4 astronauts to the International Space Station, replacing a crew that was evacuated early due to that medical issue. The crew's mission is aboard a SpaceX Falcon 9 rocket. The astronauts should arrive at the ISS by tomorrow afternoon. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Appreciate the update. More from Vonnie a little bit later. Up next on the programme, AI anxiety.
It's no longer, we're just going to take at face value the AI trade and everything's going to grind higher. People are starting to ask the question, what is going to be disrupted? And then also, when are they going to start to see the productivity gains?
Up next on the programme, we'll catch up with Bloomberg's Mandeep Singh, plus more from Sarah Hunt from New York City this morning. Good morning.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Stocks are down once again. Could be a fourth consecutive day of losses stateside. Equity futures down by a third of 1% on the Nasdaq, down by a third of 1% also. As for the sectors, staples heading towards a sixth week of gains. IGV, the software ETF, getting kicked around. That's heading towards a fifth week of losses. And that's really the story of the moment. In the bond market, 10-year yields near the lows of the year, 410. 410, even with a blowout jobs report earlier on this week, and a lot of doubt around that so-called blowout jobs report earlier this week.
Yeah, even with all the debt sales this week coming from both big tech and the U.S. government, still yields are down significantly, which raises this issue. Is it because that people are expecting that Kevin Warsh, one way or another, is going to get those yields down? Is it because of Japan and the fact that people seem to be less worried about some sort of fiscal overhang? Or is it that bonds are acting as a haven again? And that, I think, is what a lot of people are leaning into for hope, given the fact that gold is suddenly acting like Bitcoin.
So that's treasuries, and yes, precious metals too. The interesting thing for me is corporate debt. We started the week with that massive alphabet issue, and it was sucked up, eaten up. The drawdown was fantastic demand that we saw comes not just from corporate America, or rather investment America, but also from the Europeans as well. So the credit market has decided I'm getting paid by some of these companies. And the stock market's worried about existential risk. And there is a bit of a difference there at the moment.
This goes to the psychology right now of markets. You can't price uncertainty. And this level of uncertainty is getting increasingly difficult for people to price, and you can see that. The idea that you can get a coupon payment is a level of concrete understandability that I think a lot of people like, which is the reason why there's a focus on income. At least you know what you're getting. And that's the reason why you're not even seeing spreads widen that much, even as you see specific sectors completely fall out of it.
In the stock market, we don't know what's going to happen in 5 minutes. In the bond market, there's confidence 100 years out, apparently.
Coupon payments.
What a week it's been. Under surveillance this morning, AI, anxiety.
It's no longer, we're just going to take at face value the AI trade and everything's going to grind higher. If you don't see the ROI, investors are getting less patient, and I think that's healthy. People are starting to ask the question, what is going to be disrupted? And then also, when are they going to start to see the productivity gains? It's not a bubble. It's really kind of the infancy stages of this, and that's going to then benefit a number of other industries.
So here's the latest this morning. Trucking and logistics companies becoming the latest targets of AI disruption fears. The industry joining the ranks of software, wealth management and real estate. Bloomberg's Mandeep Singh joins us now for more. Mandeep, welcome back. You heard Kristen Bidley there of Citi, and she used the word benefits. And I hope we can talk about that for a little bit, because we're all talking about existential risk and the punishment and the losses we'll see elsewhere. Are we going to see some benefits, and where?
Well, I think we have already started to see quite a bit of disruption when it comes to what Anthropic has shown with coding agents. And look at the cadence of their product releases this year. There is a reason why they went from, 10 to 14 billion in a matter of 6 weeks, because they have themselves released, a few new products, and the coding agent release that they had has empowered this narrative that, you can create a lot of customized software. So I know the narratives is what's driving the market right now, but underneath that, there is substance in the sense like this is quite a powerful model release from Anthropic, and same thing with what OpenAI is trying to do with Codex. So suddenly that coding agent is not just a category of its own, but also what it can do in terms of disrupting other categories. And that's why you're seeing this sort of reaction with stocks.
Mandeep, I think the private market firms are equally as frustrated with the moment. In fact, perhaps more so. This came from Mr. Arrighetti in the last week or so. If you're going to underwrite a narrative of AI disruption, you also then have to say, well, what does that mean for the productivity and the margin improvement in the rest of your book? Mandeep, what is it going to take for that to become the more dominant narrative in financial markets?
I mean, I do think, when it comes to workflows, which is what we have been talking about, how AI can disrupt workflows, you will start to see it impact certain types of jobs. But again, the way market is acting is, everything will happen at the same time. And that's where, the cost benefit analysis, the margin impact needs to be taken into account. And some of the software companies will be implementing AI on behalf of the clients. Right now, they were sort of naysayers in terms of, or they were probably too slow in terms of adding that AI functionality. This will force them to, really figure out what are the valid use cases that they need to incorporate as part of their software. And I think you will see more of that in terms of the software companies really doubling down on the use cases that they feel their clients should implement.
Mandeep, just before you go, I want to finish with this question. You followed tech in the industry for a long, long time. I often lean on you for your insights because they're far better than mine. When you look at what's happening with a company like Anthropic at the moment, how much of that is just the pre-IPO roadshow and how much of it is real? What's hype and what's not? That's what I'm trying to get my head around at the moment. Is this a big marketing push that's causing a lot of anxiety, or is it something more?
There is something more, and that's where the latest model release they had clearly has shown a leap in terms of the performance versus other foundational models. And anyone who was saying models will get commoditized, I think is wrong. So you are seeing these companies actually differentiate based on the functionality. And that's why you have seen so much momentum with Anthropic right now.
Mandeep, thank you. Mandeep Singh there of Bloomberg. Wait until the roadshow actually begins. Imagine what the headlines are going to be like then.
We're all going away. We're not. Can I just say? Can I just take a second?
That wasn't a trade recommendation.
I know, no.
It's just like the,
I like the small print.
It's always the same, isn't it? It's like you see the headline, the warning.
Yeah, exactly.
And at the end, it's always buy whatever we're selling.
Of course, which is the reason why buy Claude. Can we just take a note? Algorithm Holdings, the karaoke company turned trucking logistics company. Algorithm, its ticker is RIME, R-I-M-E. Brilliant. I just have to give a nod to that. Really, again, written for Hollywood itself.
Sarah, you've been tracking the same stories. Mm-hmm. How much of it is hype? How much of it is real? I think we all understand the technological development is happening much faster than we thought, and a lot of it is real. But some of it just feels just a little bit too hyperbolic. When I see headlines like we're going to wipe out white-collar work in 18 months, what do you think it is?
I think it's a combination. I think in some places there's going to be room to not do stuff. I mean, already you go into a fast food restaurant and you are encouraged to order on a thing and not with a person anymore. There are a lot of things that are going to change. What is going to be the ultimate answer for all this? I don't think it's going to be as hyperbolic as it sounds, but this is a more difficult technology to understand. The internet, when it first started, people were like, well, this isn't going to take off. This is it. It completely changed things, but not in the way that people thought that they would be changed, right? So in the scheme of things, where are we going to go next from here is hard to say, which is why it's so easy to say it's definitely going to decimate this industry, that you have to look at this industry, and we just don't know yet.
Jonathan Krinsky of BTIG had a really interesting note where he was talking about how the bifurcation is getting pretty extreme. He said the AI winners and losers, the moves in single stocks are getting more and more extreme. At a certain point, we begin getting concerned that the weakness supersedes the strength and the broad market becomes vulnerable. Are we getting closer to that point where the dispersion turns into actual general weakness?
It certainly has been across the leading sectors. And then the question becomes, what is going to pick up as a leading sector? Is it going to be staples? Because markets aren't going to love staples as a leading sector. What is going to take over from the hype that we had of AI CapEx is the best thing that ever happened to the universe to, oh my God, people are spending way too much money. And once that money is spent, it's going to be terrible for everything. That's where we are right now. We could flip that script in a couple of months. It's hard to see what flips that script right now because some of these things that are coming out are so good that people are looking at it who do the jobs and say, wow, this is something that could really be impactful for the industry. So that's why you're getting much more of a reaction right now than you did with DeepSeek, which was a quicker one.
Why wouldn't you just go back into the big tech names if you had faith that this technology truly was disruptive?
I think that I actually think for some of them, I mean, we were talking about Amazon earlier. I think for some of them, you absolutely would. People don't like to be in the middle of a CapEx cycle, but it doesn't mean that that's not a good opportunity to buy that stock. Because in the scheme of things, what this pushes to is more big and less little, which is tough for the whole small cap discussion because that was part of what was rallying early into the year. And the value discussion has a tendency to be more on the smaller mid-cap side than it is on the mega-cap side or the big-cap side. So I think that there's definitely room for that, but there will be more of an emphasis on people leaning into companies that seem less disruptible, and that tends to be smaller.
You mentioned the Krinsky note. His point is that semis have got to hold up.
Right.
And if they don't hold up, we've got a problem. Semis, the iShares Semiconductor ETF up for 9 consecutive weeks. Yesterday, though, some weakness. They should be the big beneficiary of all this CapEx. They should be the winners. If you start to see some real damage inflicted there, then sure, we got a big problem, given the weighting on the S&P from some of those big names.
Because ultimately then also means that the CapEx isn't going to be worth it, or ultimately isn't going to come through in the same kind of way in an overall downtrend in the economy. And ultimately, that's why it does come down to the economy, to the jobs market, to the inflation backdrop, and of course, always back to Kevin Warsh.
There's a lot of cliches on Wall Street. One of my favourite is, if you think the world's going to end, what's the value of being short? And I do wonder if we start to get to that point in financial markets with this trade. If you really think disruption's going to be that great, that everyone's going to lose their job, and it's going to be the end of capitalism, what's the value of being short?
I'm looking for your tinfoil hat. I can't see it.
No, in fact, I'm saying the opposite.
But it's true.
No,
but it's true. But if the world's going
sure.
to...
What's the point of having money, like, they're going to take it all off you anyway. Might as well be long.
It's not. Look, you're not wrong. I mean, you might as well just be long that and long maybe your go bag.
This show is just full of existential risk today. It's just a little bit too much, isn't it?
I do think that it's getting a little bit overdone.
The divide's pretty amazing, though. Like, the concerns on Wall Street. Is this even reaching Main Street yet? Are they even thinking about what's being concerned and talked
They
about?
haven't been happy all year as Wall Street was screaming. So I think that there's been this divide.
Sarah Hunt of Alpine Saxon Woods. Sarah, thank you. This is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
The world's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Equity softer, negative by 0.2% on the S&P 500. Softer also on the Nasdaq by about a quarter. On the Russell, we're down by 0.16%. 1 hour from now, CPI, inflation in America. The last thing this market needs is a hot print. In the bond market, 10-year bond yields near the lows of the year. The bonds are working. That's the good news. 410.38 on Treasuries in the face of better than expected data from payrolls early this week and a decent ISM the week before.
Yeah, honestly, this otherwise should be a strong economy, and yet it does seem like people are going into bonds with the expectation that it's going to roll over. I think you're right. It does feel like something of a recession trade, or people feel like there is going to be something dramatic that's going to undermine some of the growth trajectory, or at least that is the expectation going into it. I'm just thinking about if we get a really hot inflation print. What happens? Do people get more optimistic? Do people just suddenly throw in the towel and say, forget it, I'm going on vacation for the next 2 months?
The problem with the data right now, that I can give it to you and no one really knows what to do with it?
I mean, honestly, where would it even come from that suddenly people start to get worried? Is it coming from Birkin handbags?
Kit Juice of SocGen put it perfectly last week about payrolls. We were meant to get it on Friday, and he turned around and said, even if we got it tomorrow, I wouldn't know what to do with it. It's kind of true of CPI, a little bit later as well.
Andrew Hohenhorst from Citigroup, he was supposed to do a victory lap. He got it almost bang on the nose in terms of the actual headline number. He comes in, you say to him, you guys did really well. And he said, we were 5,000 off, but who knows what this means anyway, which gives you a sense of just where people are.
Everyone's so downbeat already. What are we, 7, 8 weeks into the year? 7 weeks?
People are confused, and it's frustrating to feel confused, but there are some people who are making a lot of money, and I'd like to speak to them and exactly how.
Yeah, I'd like to talk to them too, particularly those on the short side in some of these sectors.
Finding things like algorithm.
Who found the karaoke company that's done so well?
Please stand up.
Yeah.
Call in.
A few hours away from the opening bell. Let's get you some morning movers. Danny has more. Hey, Danny.
Hey, John, starting with an upbeat story for you, and that is Rivian beats across the board and booking its first annual gross profit, something that this company has never been able to do, and a really rare bright spot in an EV industry that's just been downtrodden with gloom. They also are going to start selling one of their more cheaper SUVs this year, so positive outlook for sales for them. So shares up a whopping 20.8%. Not all the stories are good out there. Pinterest, it was a miss on their guidance for their current quarter. Shares are down 20.8%. That really hurts. They also announced a lot of layoffs. They said that this was in months prior, that they're going to be shifting more towards AI. So that not helping them, at least for now. The company has warned in the past that things like tariffs have hurt some of their advertisers for categories like home goods. So that has clearly been weighing on them. Finally, Expedia. This is another one of those instances of a head-scratching market panic type moment, because Expedia had fantastic earnings. Their fourth quarter was the best in 3 years in terms of growth of their sales. The first quarter also expectations easily beat Wall Street, but the commentary is around AI anxiety. Does Expedia get replaced by some sort of AI agent that can just book your travel for you? So who cares about the good earnings? Shares are down 5.8% in the pre-market, John.
Seen a few of those over the past few weeks. Danny, thank you. More from Danny in the next hour. Can we talk about a good story, Rivian? Just proof that if you make a nice looking EV, a nicely performing car, people will buy it. And Rivian proving that's the case.
Just have door handles. Just have them that come out so that you can open the door. It's really nice. But yes, Rivian coming out and showing that if you make a nice vehicle, people will want to buy it. And they've got pre-orders up the wazoo. And I'm seeing an increasing number of Rivians. They're actually really attractive.
The new mid-size SUV is a very good looking car, and I'm looking forward to seeing that on the road over the next 12 months or so.
In your doorway? In your driveway?
Who knows?
Oh, yeah.
I'll keep you posted. All right, let's see. All right. On our radar this morning, logistics stocks becoming the latest victims of the AI scare trade. A former karaoke company sparking the sell-off, announcing its logistics platform was scaling freight volumes without increasing headcount. Elsewhere, OpenAI delivering a warning to US lawmakers, the maker of ChatGPT, claiming Chinese rival DeepSeek is distilling US models to gain an edge in the AI race. OpenAI also alleging DeepSeek is using increasingly complex methods to evade detection. And finally, Anthropic raising $30 billion in its latest funding round. The investments pushing the AI firm's valuation to $380 billion as it looks to compete with rival OpenAI.
So you've been talking about how a lot of the concerns and warnings are essentially a roadshow. Although I would say, how are they going to make money off of this? And this is really a key question. If Anthropic is coming up with these truly disruptive models, if they were trying to disseminate them and win market share, How do they get their margins up at a time where it actually is expensive to hire some of these people? So that will be something that people will be looking at. But they're raising money at a very quick clip. I mean, if you think about $10 billion a couple weeks ago, now it's $30 billion. The valuation's going up. I mean, it's just how big are some of these private market companies that are setting up to IPO later this year to potentially dominate indexes that currently don't even have their eyes on them?
There is a lot of paper that needs to be moved. There's a lot of debt that needs to be issued over the next 12 months. And certain headlines benefit those things. That's all I'll say about that. I don't think that the technology's a head fake. It's real. I just think there is a massive marketing component to a lot of this, and you're going to see more of it in the next 12 months.
I'd be inclined to agree with you, and I like that skeptical take because it indicates that maybe some of the fears of our jobs being totally eradicated in terms of necessity have been somewhat overblown. The people who are on the inside are talking about how quickly this is happening and how well this is sort of rolling out. I'll give you an example. Walmart. Sure. People are talking about how much their market cap has been increased. Is this just sort of people going into toilet paper unnecessarily? Is this a February 2020 kind of story that will fade over time? Walmart is investing so much money in artificial intelligence. They are using it in every part of their supply chain. They're using it for their warehouses. They're using it to get margin improvement that their competitors can't. So they can compete on price and they can get profitability and they have the data to show it. So people are looking at them in a different way. Who are the other beneficiaries of it who are going to experience a similar type of trend? It is going to be the bigger companies, but it is going to be a significant material benefit. It just maybe hasn't happened yet.
That's why that name is at a 50 PE ahead of earnings next week, which is remarkable. Elsewhere then, let's move on to energy. The US Energy Secretary Chris Wright travelling to Venezuela, meeting with the interim president, Delcy Rodriguez, in a push to increase foreign oil investment in the country. Anne-Marie's been speaking with the Energy Secretary in the oil fields.
In the first year, we'll see pretty significant 30–40% growth in Venezuelan oil production. We want it to be open to less corrupt, honest American, Western American allies for business. The influence of China and Russia and Iran that has been very large in Venezuela will become very small.
Anne-Marie joins us now from Washington. AMH, welcome back. Fantastic couple of days. We've all been tracking the story on your social media account on X. You heard Chris Wright there, the Energy Secretary. He talked about the influence of China, Russia and Iran. When you're in the country, do you see that influence? How obvious is it?
Oh, absolutely. And on the route to that facility we were at, that was a joint midstream facility between Chevron and PDVSA. You actually saw a Chinese facility as well as a Russian facility. And we should note that some of the flaring from those facilities are black smoke as opposed to what many in the oil industry would call cleaner flarings from the likes of Chevron. The presence there is profound when it comes to these countries. And that is why this is part of what this administration would call the Don Road Doctrine. Not only do a lot of individuals think on the left and the right of this country bipartisanly in Congress that Nicolas Maduro had to go, that something needed to change on the ground when it comes to Venezuela. But this administration also sees this as a chance to really push out the influence of the Chinese and the Russians in their, what they would call their sphere of influence. And he made that very clear to me yesterday, speaking in the oil field, saying that we want to make sure that U.S. companies are here and that this influence you see from, say, Beijing or Moscow, that starts to wane in Venezuela.
Does the interim president agree? Anne-Marie, I think that's the big question. When the Energy Secretary says the influence of China, Russia and Iran has been very large, it will become very small. Is the interim president on board?
Jonathan, I don't think she has a choice right now. Tomorrow marks 6 weeks from U.S. Special Delta Forces captured President Nicolas Maduro and brought him to Brooklyn in New York, and now she is this interim president. And within this month and a half, you see the highest-ranking U.S. official right there, Chris Wright, meeting her at the presidential palace. I cannot describe to you and emphasize how surreal and uncanny this moment is, how quickly this administration is moving to try to change the path and the course of this country. And she spoke about it. I asked her, do you plan on visiting the United States? She kind of shrugged and she said, a lot of work to do here, but at some point, yes. And an invitation was delivered to her. And then yesterday, before we departed, Chris Wright said you can expect other U.S. government officials, say another cabinet secretary, other U.S. companies to come to Venezuela and have these discussions. So the United States is going to be there. He used the term nudge to me. Others might use the term coerce or have leverage over this interim administration government until there's a free elections in Venezuela. So absolutely, she kind of has no choice but to go along here, especially given the fact that this is a government that relies 95% of their funding and their budget still comes from oil, even though it's a country that is only producing under 1 million barrels a day, not the heights we saw of 3.5 million barrels a day. So the opportunities are there for Venezuela. And the companies that can do this and turn it around are going to be U.S. companies, especially when you look at the likes of Chevron, which to our reporting is potentially going to get another exploration block from Caracas and potentially a new license from the U.S. administration.
Anne-Marie, I'm glad that you went there. It's one thing for Chevron, which already has a presence there. It's another thing for Exxon, where Darren Woods has already said, look, we're out of money in a significant way already. Why would we go back without certain security guarantees? Did you get any sense of what the security parameters were going to be, what the guarantees were going to be to entice the likes of Exxon back into the region?
So there's not going to be any security guarantees. And Chris Wright reiterated that yesterday to me. He also said this to us, of course, in Davos when he announced that he'd be going on this trip shortly. There won't be security guarantees, but I think part of this visit was to show that you can potentially go to Venezuela, operate, and be safe. If you look at the State Department's travel advisory, it says do not go there if you're an American citizen for arbitrary laws potentially that they'll come after you for, kidnapping, theft, and crime. On the ground, I was speaking to a lot of local journalists who said, look, actually, Venezuela has become a little bit more secure. It's not at the height it was when you had protests and tear gas and high crime. People do feel like the situation is getting more secure, and there is a lot of hope there. When it comes to some of these big oil players, though, what I thought was very interesting from my conversation yesterday with Secretary Wright was that he said these companies like ConocoPhillips are in active discussions with Delcy Rodriguez right now about recouping those billions of dollars they lost when Venezuela nationalized the oil industry decades ago. And he also said she understands that and has regrets that mistakes were made. So that said to me that she definitely wants to have a opening of a dialogue with some of these bigger oil companies to come back in. The scene yesterday was striking to me. 6 weeks ago, they captured Nicolas Maduro. And then yesterday, I was at a Venezuela oil field with Secretary Wright and Delcy Rodriguez. They toured the entire day today looking at these facilities. And I think that pictures what they want to project, that this is open for business and we want U.S. dollars back in this country.
It's incredible how quickly this story has moved. Anne-Marie, it's great to catch up. Welcome back. Looking forward to having you back in the seat next week. Anne-Marie Hordern, following her trip to Caracas, Venezuela.
Yeah, I was looking at the other areas that have level 4 do not travel warnings from the United States to see where she might go next. Afghanistan, Russia, Ukraine, Iran, North Korea, Syria, Haiti, Venezuela.
I think she's done most of those, with the exception of Haiti.
I know, so she can go through that list and figure out what's next.
Yeah, when she takes her next vacation. That'll be fun.
Yeah.
Let's get you an update on stories elsewhere with your Bloomberg Brief. Is Vonnie Quinn. Hey, Vonnie.
Hey, John. Thank you. The Trump administration working to narrow its scope on some metal tariffs. Sources telling us here at Bloomberg, changes specifically target levies on steel and aluminum products that many companies find difficult to calculate and negatively impact consumers. Aluminum is trading lower in London after the report. The search continues for Nancy Guthrie, the 84-year-old mother of Today Show co-host Savannah Guthrie. The FBI doubling the reward for information leading to her captors to $100,000. They've also released more information about the masked man seen in surveillance video, saying he's about 5'9" with an average build, and he's wearing a black 25-litre Ozark Trail hiker pack backpack. Citigroup is boosting CEO Jane Fraser's 2025 pay to $42 million. The 22% increase follows a year which saw the stock surge more than any other Wall Street bank. The pay bump also puts Fraser's total package for the year just $1 million behind that of JP Morgan's Jamie Dimon. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Appreciate it. Up next on the programme, all eyes on inflation.
January and February inflation prints have just been strong the past couple years. We think it's going to be a softer reading today, but there's a lot of uncertainty around what exactly the reading is going to be.
Up next, we'll catch up with Kelsey Barrow of JP Morgan Asset Management, live from New York City. You're watching Bloomberg Surveillance.
The phone is, what's great about it is it's a well-developed gaming ecosystem, right? So it, folks know to find games there, but it's also a highly competitive gaming ecosystem. So its developedness gives you both that upside and that downside. But what's exciting is that now we are moving beyond the phone to the TV. So I mentioned like one of the big gaming areas we're going after. One of the big gaming areas we're going after now is social gaming experiences that will show up on your TV. So we are now announcing, we're going to announce here actually, that we're going to have these social party games that you can play on your TV with your phone as the controller. And it's things like, recognizable games like Boggle, you got Pictionary, we've got a Lego party game. We, basically are going to like unleash this with a bunch of creators, and they're going to go figure out stuff that we didn't even imagine that they can do with that interactivity.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you up to them in the news whenever and wherever it happens. I'm Sherian in Seoul, and this is Bloomberg.
%2 from all-time highs on the S&P 500, down just 0.2%. Everything's fine. On the Nasdaq 100, we're down by 0.25%. On the Russell, we're down by 0.2%. At the index level, just a completely different story. Beneath the index, it's messy. This comes from Chris Harvey over at CIBC. Staples, a favourite risk aversion sector in rarefied air with 16% outperformance year to date. In the last 25 years, the group has only seen greater annual outperformance 3 other times, and all 3 were associated with double-digit losses for SPX. The S&P 500 down just 2% from all-time highs.
This is the reason why the likes of Jonathan Krinsky are saying maybe we're getting to the point where you could see a broadening out, where you could start to see some sort of index level drawdown as a result of some of the rotating pain that we're seeing tied to AI. A real question of when the data will show that, because we didn't get that in the headline jobs picture, but people seem to be shrugging it off and saying, you're just not seeing the real thing.
We haven't seen a lot of index level stress yet, and that's the debate of the moment. Futures then just a little bit softer. In the bond market, yields near the lows of the year. On a 10-year at the moment, in the bond market, 4.10. Under surveillance this morning, all eyes on inflation.
January and February inflation prints have just been strong the past couple years. We think it's going to be a softer reading today, but there's a lot of uncertainty around what exactly the reading is going to be. I do think by the time we get to the end of this year, we'll have a pretty clear, slower inflation trend. I think we have actually established that in the underlying data and the details. But are we going to see that today? Are we going to see that in the next couple months?
Here's the latest this morning. Delayed January inflation data due out at 8:30 Eastern Time. The estimate in our survey expecting core CPI to rise 0.3% month over month. Kelsey Barrow of JP Morgan Asset Management writing, market participants should be prepared for a hotter CPI report in January after a few months of significant weakness. Kelsey joins us now for more. Kelsey, good morning.
Good morning.
Before we get to that data, 40 minutes away, let's just talk about how different things are in Bondland. People are freaking out in equities for good reason in certain sectors. I understand the stress. In fixed income, how relaxed is everyone in fixed income?
Well, we're not relaxed. We're still focused. But what you are seeing is a situation in which fixed income demand remains extremely robust. And you're seeing it across the spectrum from not just treasuries, but also high quality fixed income. So whether it be the Google issuance that was done earlier this week, that was very well subscribed. Those bonds are still generally on sides relative to where they were issued, and that's despite the fact that we've had a fair bit of volatility this week. And then you look at the 30-year auction yesterday, which we were rallying into the numbers, rallying into the auction, and yet we still got record end-user demand. So the highest end-user demand in the history of the 30-year auction. So what we're seeing is continued demand. pretty much across the spectrum. And the stress within the AI and the software names is still very, very concentrated. So you think about the high yield market, software makes up less than 5% of that index. You do look out into the leveraged loan space, and it's a little bit more than that. It's closer to 15%. But actually, where a lot of the software funding has come from has been the private credit space rather than the public space.
So right now in corporate credit, spreads are still pretty tight. 275 on high yield, everything's okay, supply comes in, demand meets it. In IG, we saw that from tech. You mentioned Alphabet, great. This is the frustrating thing for anyone who covers sovereign fixed income. If yields are up, it's problematic. And if demand is great, it's a problem too. Because why is demand so great for a 30-year bond issue? Where's that demand coming from and what are people scared of? And I know that's really annoying for anyone in treasuries because when yields were higher, it was sell America, debasement, people don't want to own the stuff. And when they want to buy it and really want to buy it, people are equally as concerned. So where's the demand coming from and why?
I think the demand is fairly well balanced between both domestic and foreign investors. I will say, though, this isn't happening in a vacuum. And one thing that I think is a little underappreciated is we've seen this bull flattening in the yield curve over the last week. And it's not just in the US. Take a look at how Japanese JGBs have moved. The 10s 30s curve in Japan is at its flattest levels in months. There has been very strong support for the back end of the Japanese curve. And I think, a lot of this is really tied together because when we were looking at the underperformance of the long end of the US curve at the tail end of last year and the beginning of this year, people were saying, is sell America back? And I was saying, I think this is kind of a broader fixed income technical story within broader developed market sovereigns. And now you're kind of seeing some of that retracement happen. So it's not just something that's happening here in the US, but it's also happening across other developed market sovereign debt curves.
When people talk about the Sell America trade, they mean a lot of different things. And Michael Hartnett of Bank of America put out a note this morning talking about the fact that stocks in Europe, Japan, and other international developed markets have drawn in $104 billion versus $25 billion to the United States. You've seen money move elsewhere. Are you seeing the opposite dynamic in fixed income in terms of international investors wanting to come to the United States because of relatively higher yields and, frankly, in some ways, better companies? I'm thinking of Alphabet and what they sold over in Europe. And they're actually seeing more value right now.
So there is the relatively higher yields. There's also the fact that there is quite a lot of liquidity within the U.S. fixed income markets relative to other markets that are smaller. I will note, though, that if you look at some of the issuance trends within the corporate market over the last week, Google didn't only issue in dollars. They also issued in sterling. And I think that is an indication that from the issuer side, they're looking at diversifying their funding book, which is a smart move on their part. And they're picking up the fact that there is incremental demand across other markets as well.
Do you think that what we're seeing right now with respect to spreads in U.S. corporate credit, and I'm talking about public markets, is not necessarily representative of credit risk in the way that it had been because private credit has been the area that a lot of the stress has been concentrated? In other words, do you think that private credit is acting as a buffer right now, leading to that stability in public market spreads?
I think that's probably part of the story, but it's part of the story that's been kind of going on for a while now. So when I talk to our high yield analysts, on an index level, they say the U.S. high yield market is the best quality it has ever been, kind of full stop. And that is a function of some of that lower quality debt being financed within the private credit market. So yes, I mean, this is a fundamentally different market. And so the resilience, should be taken and understood within the context of better fundamentals for these companies.
Kelsey Barrow of JP Morgan. Kelsey, appreciate it. Thank you. Are you getting at the old adage that maybe credit doesn't lead anymore in the same way that it used to?
I mean, that's essentially what a lot of people have been saying. And the reason why, when I look at the distress that we're seeing in equity markets and people say, well, we're not seeing it in credit, so it's fine, might not have the same ring as it has in the past because it might not be comparing apples to apples in the way that it once was.
To your point, Kelsey just went through the numbers. if you look at high yield spreads are still super tight at 275, but their exposure to the story that we think is full of risk right now isn't that great. It's elsewhere.
It's leveraged loans and it's private credit. And a lot of people have mapped out just what proportion of loans or what proportion of private credit extension has come from some of the more highly disruptible fields. And it is a much bigger proportion. But it just goes to question, what are the signals right now? Where are we getting them? It used to be high yield spreads. Is that still the same signal if suddenly that's been muddied by what's going on over in private credit?
The stocks of private credit firms over the last 12 months, I guess, for some people.
Yeah, well, although that has also been idiosyncratic. And I think that we've heard something to say about it from Apollo and others. They are not that happy.
Very downbeat. Do you want an upbeat note? Jonathan
Please.
Golub of Seaport joins us next. He's very constructive about the future. We'll catch up with Republican Senator Tom Tillis, Tiffany Wilding of PIMCO, Jim Caron of Morgan Stanley. The third hour of Bloomberg Surveillance just around the corner. CPI data 34 minutes away.
We are in such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot. Very, very strong alignment.
3 revolutions in 1.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophy.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersecci in Davos, Switzerland, and this is Bloomberg.
The things that have been driving the market over the last couple of years have now switched over.
It's no longer, we're just going to take at face value the AI trade.
We are very heartened
by the embracer of this rotation.
We think it's a stock picker's market, so you got to be selective.
There's plenty of opportunity globally to diversify.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the third hour of Bloomberg Surveillance starts right now. Your scores look like this. Down again by 0.25% on the S&P, on the Nasdaq down by a third. In the bond market, new lows for the year in the last 24 hours. Very close to those levels right now on 10s at 410. Going into this, 29 minutes away, a CPI report in America.
So how high is the bar for this CPI report to be disinflationary enough to put the Fed back in play? Maybe that could give some calm to markets if you do get some sort of disinflation. JP Morgan is talking about 0.4% bad, lower than 0.3% good. We'll have to look at the internals, but that is the ultimate argument, right? How much are we going to see some sort of reduction in the pace of price increases leading to the Fed to come back and rescue sentiment?
Bond market's loving it anyway. 30-year auction yesterday, massive demand, terrific demand. 30s down to 473. Kelsey Barrow of JP Morgan on with us just moments ago, talking about the bull flattening you're seeing, not just in America, but elsewhere in places like Japan.
I thought that you really nailed it, this idea that stock investors are, oh my gosh, my hair's on fire, and bond investors are saying, we're doing just fine. So please, welcome. It is an international story. It is a question of what's going on with respect to fiscal policy in Japan, certainty around the political backdrop, as much as it is about anything in the United States. Nonetheless, the relative calm that you're seeing in fixed income belies the chaos that you're seeing in specific names. And you're also seeing this in credit. Is that because it is more inured to some of those threats? Is it because people just like the coupon payments? Or is it because it's smarter money that's looking past this and saying, guys, get your act together. The algorithmic traders really need to just deal with their portfolios and let's move on.
Well, you're seeing calm in equities too. At the index level.
Correct.
At the index level, the moves are really muted. 2% away from record highs, just about unchanged on the year so far. At the individual stock level, these moves are absolutely wild. In fact, they're so wild, they're things you would associate with a bear market. You'd expect this stock market at the index level, based on these moves, to be down somewhere between 10 and 20%. That's not happening.
Which is a reason why Jonathan Krinsky of BTIG is saying maybe we're getting to the point where suddenly it's going to have an index level ramification. The NASDAQ has seen 5 days in the past 10 being down more than 1%, right? I mean, if you take a look, there is some real churn there that is leading to a downdraft, particularly in tech stocks. How long this can last and whether this is just superstitious on this Friday, the 13th, we shall see. And I think that our next guest has something to say about that.
Yeah, he's got a much better view, more constructive view of things. I just got this note from SocGen just seconds ago. Speculative trades all unwinding altogether. That's kind of been the story. It's not just in equities, in precious metals. You've seen it in crypto and Bitcoin. You've seen this across the board.
You know, it does feel like there are a bunch of big funds unwinding. Let's just be clear. It seems like there's a lot of selling of gold to try to cover those shorts. It does seem like a lot of the momentum trades are just getting whipsawed around. I want to see this when the dust clears, who the winners are, who the losers are, and who was it who started each of the different rumors of which different AI trade is going to...
See this karaoke company?
Exactly.
They're doing something fresh now. Check it out.
Algorithm.
Amazing.
Rhyme.
Amazing. By the way, I'm sure.
Yeah, exactly. I mean, honestly, there's a lot of stuff going on under the surface. I'm looking forward to finding out more.
Stocks negative by 0.2%. The data 26 minutes away. Coming up this hour, we'll catch up with Jonathan Golub of Seaport as equities struggle for stability. Republican Senator Tom Tillis as the Trump administration tests transatlantic relations, and Tiffany Wilding of PIMCO as markets brace for a new inflation print. We begin this hour with stocks sliding on growing AI fears. Jonathan Golub of Seaport writing the following. While AI will clearly disrupt the software space and other parts of the economy, we see recent declines as a buying opportunity. Jonathan joins us now for more. Jonathan, good morning.
Good morning.
You published in the last hour a stronger economy. You're pushing back. You said this. It has become quite in vogue to talk about how punk the economy is. Weak job growth, deficit spending, Labour taking less of GDP. However, from the market's perspective, you believe the incoming data looks, dare we say, pretty darn good. How good?
My favorite part of the Bloomberg terminal is this function called ECFC, where you get to look at economic forecasts. The GDP forecast for the fourth quarter, first quarter, second quarter, and third quarter, all four of them are up 50 basis points since the beginning of the year. That's economic out. And this is not, you say like, well, everybody thinks things are going to be worse. Economists believe that that the outlook is better. And by the way, between mid-year last year and the end of the year, you also had a 50 or 60 basis point move up in expectations. If you look at economic surprise data, since July, across the board, data is coming in better than we would have expected. You're looking at, you guys are debating, is inflation going to be 10 basis points higher or lower? Since August, inflation has fallen 50 basis points. The jobs, the unemployment rate, 2 months in a row, the unemployment rate came down. I mean, we can go on and on. The ISM, we've had a great market run with the ISM below 50. And now the ISM has popped. The ISM new orders, which is the stuff which is the most forward-looking, is over 57. I mean, this could not be a better story. And Lisa's always nervous about something, but still,
don't take it out on Bramo. Banks are down 6% this week. Staples are up and Walmart has a 50 PE. You've got to respect the price action. So that's your view of the economy. I've got all of that. But why are banks down and utility and the likes of Staples sky high?
But if you look at the market, which is really strange, if this was, first of all, you start with the point that, and you're right, the market's flat and you have a lot of rotation. If there was really fear, the market would be down and tech would be leading. However, if you look at the things that are leading, it's not only defensives. I mean, industrials are on fire year to date. Energy materials look really good. Tell me a time where the market is panicking and it's moving into staples and industrials at the same time by roughly the same amount. It's almost as if the market is saying I want to shoot a bunch of AI losers, whatever those are, and I don't know what to do with the rest. I'm just going to put it in a bunch of other stuff, undifferentiated.
If you're going to be nervous about something, and sure,
Yes.
I can always find something to be nervous about. It is actually a fantastic pastime. But I am curious about your feeling about the labor market and the interplay with some of the AI adoption. We were talking before the show about how you're really bulled up on what AI can do. You're using it a lot. One person can do the work that 25 people used to do, and that's exciting to you. On the flip side, that makes the average Joe or a programmer very nervous because that means they are not necessary and it undermines the economic story. How do you square those two narratives?
This is, I think, and I can't think of another situation going back 100 years where the part of the labor market that is safe are the people who do manual labor. The plumber is not going to be taken out by AI. Somebody who's a farm worker is not going to be taken out by AI. It's the intellectual property worker. It's the lawyer and the accountant and the consultant, which is a very, very different experience, and we don't know how to calibrate it. I can tell you what we're doing. We are finding ways of adding more value with the resources that we have. We are customizing the research product around the needs of an individual because AI allows us to have the infrastructure to do that in a way that 9 months ago, it just was impossible to do.
So don't you understand then why people might say that there are some businesses that might not be necessary anymore if you can do this yourself rather than to outsource it to somebody else? And guess what? Those other 24 people who you could have hired also now are out of work and have to find jobs as a plumber or as a farmer because evidently those are the only jobs available. I mean, at what point do you start saying you can be optimistic about the future, but the price moves are justified?
First of all, we have an unemployment rate in the low fours. The job demand is fine and the economy is healthy. Every time we've had a disruptive economy, if you go back, people were saying the same thing when we started having automated, when you were able to collect your crops using a machine rather than a person, people said, what are we going to do with all these farm workers? It's going to be a disaster. And when we move people to factories to make, your shoes and your clothing, we said, oh my God, what's going to happen to the seamstress? And yet, here we are 100 years later, and we have an economy that's at full employment. We find new and innovative things to do. If you are not able to stay on top of the curve, it is going to be rough for you. So I think that they're going to be losers and winners all over the place. But this fear that in some way that the economy is not okay and that the markets aren't going to be healthy, I think is off.
What should you buy this morning? What are you recommending? What are you advocating for at the moment?
Well, so let me maybe answer the question a little bit differently.
Sure.
If you look at the tech basket relative to the rest of the market, its earnings are on fire. Its multiples are down 20% versus the rest of the market. So I think the tech basket looks incredibly attractive. If there's one group that kind of stands out, it's actually the AI semiconductor names, the Avagos and the Nvidias. If you look at the growth they're delivering, how much the upside revisions are their numbers, and how inexpensive they are relative to that growth, they look incredibly attractive. I think that there's also a bunch of things in the software space that are dislocated near term, but I think that those big semi names.
The semis was a curious trade last week. It was really interesting to us that we had these announcements, these massive capex intentions. You're all familiar with the numbers, 650 billion across 4 names, and yet we saw semis trade softer. What do you think that was about?
Yeah, I can't answer on a given day or week, but I can tell you what we do is we array the entire technology space and we say where's the momentum in their earnings, and then where's their valuation and what's their price action, and we try to find situations where they can't be justified. You cannot justify the valuations being so low on some of these semi names for such exceptional growth, and they do not have the same capex spend that you do on these hyperscalers.
Would you be buying some of these private credit stocks, the companies, the KKRs, the Apollos that have gotten very beaten up?
It's not in my line of focus. I will tell you, if we get outside of the whole AI conversation, I'll tell you what I think.
There's more to life outside.
Well, maybe not. Yeah, but
being us, he's like, I'll ask the question you should have asked.
I'm sorry.
No, carry on.
The focus this year, especially as we move through the year, is going to be on the midterm elections, which are going to be super important. In order for Republicans to hold both houses of Congress, they're going to need a consumer that is feeling heard. And that means that there's going to be a lot of effort to ease the burden on consumers, to make housing more affordable, to make their basket of goods and services more affordable, and the like. There's the conduit for that is the financials. You have to prop up the banking sector in order to get money in people's hands, and also consumer stocks. I think those are going to be win. I think that the housing sector, housing stocks, home builders and like, are going to be a focus. You've seen the buying of mortgage paper by the GSEs. I think there's going to be more focus on that.
Isn't that a point of tension in your outlook, though? A little contradiction, that you start the conversation by saying the economy's really good, and you finish the conversation by saying it's so bad they're going to have to do these things.
No, I mean, if you looked at where I started the note, labor is taking a smaller part of the overall pie. The inflation number might be down now, but we're still going out on a Saturday night, and the cost of that dinner, people are saying, when is it going to come down? We all know it doesn't come down. It just goes up more slowly. They need to feel heard. They need to know that there are things being done to address these affordability issues. And in order to do that, any policy that's going to address that is going to pump up the consumer and consumer stocks.
John, it's good to see you. Thank you, sir. Much brighter, more constructive outlook from Jonathan Golliver Seaport. Blaming Bramo for banks being down 6% this week.
Just because I'm genetically nervous does not mean that it's my fault. Let's just put that on the record. I will say that Alpha Generator writes in, I think that he wanted to be heard as well. And I just want to clarify something with private credit stocks. Not to say that it's a monolith either. There will be dispersion there, too. But clearly, it's a sort of PR issue that they have to sort of delineate the good actors from the bad actors, and that's going to be an increasing factor.
Staples up this week, utilities higher by 4%. Quite defensive stuff.
Yeah,
banks have been hammered.
Yeah.
If you looked at that, you would just say that that's like a recession trade coming on the radar, on the horizon over the last week.
Yeah, and you look at some of the stories that are getting the most attention. It's the delinquency rates going up across the board. It's this concern about the challenger job cuts and things of that nature. So very much a tilt that's similar to my nervous genetic predisposition.
Inflation data, 60 minutes away. Don't apologise, Bramo. Let's give you an update on stories elsewhere this morning. Here is your Bloomberg brief. Anthropic raising $30 billion in its latest funding round, lifting the firm's valuation to $380 billion, making it one of the world's largest private companies. Elsewhere, Applied Materials shares surging in the pre-market. The largest US supplier of chip-making gear delivering an upbeat sales forecast, signalling strong demand for AI despite recent volatility. That stock is up by 10%. And finally, New York and New Jersey expecting the federal government to unfreeze funds for the Hudson River Gateway Tunnel project. The project's developer expecting over $200 million to be reimbursed. The project still needs clarity on federal funding going forward. And that is your Bloomberg brief. Up next, the morning calls, plus Republican Senator Tom Tillis as the US tests the limits of its NATO allies. Plus, we'll also talk to him about the race to confirm Kevin Walsh down in Washington, D.C. An update on the other side. From New York City this morning, good morning.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
If I say that this is going to come for you no matter what, it's difficult to say, no, it isn't, and this is why. And I think that this is the biggest problem, is really trying to understand exactly what the technology is displacing. Because are people going to be comfortable listening to only AI and not talking to any people, which is the direction that right now that, that the market is going.
That was Sarah Hunt of Alpine Saxon Woods joining the program a little bit earlier. Here's the direction the market's going in this morning. Down, lower by a third of 1% on the S&P. On the Nasdaq was softer by 0.4. That's the price action. Let's get you some morning calls. First up, HSBC cutting its price target on Adobe to 302, highlighting competitive risk from AI-powered tools. Elsewhere, UBS upgrading Rivian to neutral, saying the firm remains excited about the EV maker's product pipeline. And finally, KeyBank raising its price target on Walmart to 145, citing higher tax refunds and easier monetary policy. That name's still down by 0.2% after a monster rally. One more name for you in the pre-market. Alibaba just fell out of bed. It's down by 4 to 5% in the pre-market. This coming from Reuters, that the Trump administration is expected to add Alibaba to a list of firms that allegedly helped China's military. That headline just crossed on Bloomberg just seconds ago.
Yeah, and the significance of this and the reason why there's such a knee-jerk reaction in the ADRs is that there are procurement bans with respect to contracts in the United States for some of the companies that are put on lists like this, lobbying restrictions, investment prohibitions, financial and trade restrictions. So there are a whole host of consequences that can come along with a designation like this.
Let's keep it on the geopolitics. Global leaders gathering at the Munich Security Conference. The U.S. Secretary of State Marco Rubio leading a delegation as the Trump administration pushes transatlantic ties potentially to their limits. The Republican Senator Tom Tillis is on the ground in Munich, and he joins us now for more. Senator, welcome back to the program. Forgive me for doing this live in the moment, but the news just crossed. This is on Alibaba, reporting from Reuters that the Trump administration is expected to add Alibaba to a list of firms that allegedly helped China's military. This according to reports just moments ago. Senator, clearly the U.S. administration, and Congress for that matter, is looking to put a bit of a squeeze on China. Landing in Europe, in Munich, Germany, do you believe that you have the Europeans on side in this effort?
I think we do, but let's go back to Alibaba. And honestly, any business that's domiciled in China, does anybody really believe that there's separation between the CCCP and the state-owned enterprises and other supposedly independent businesses? I think the president is on the right track to make sure that we're starting to hold China accountable. We need a good relationship with them, but it needs to be one that's founded on trust. And quite honestly, there are moves in China that I don't trust.
So, Senator, with that in mind, should U.S.-based investors be able to have access to investing in these companies?
Well, look, I've got a real problem with. We had a banking committee meeting yesterday with Atkins before from the SEC, and I've got a real problem with the U.S. getting into a trend of buying into some of our companies. I feel like we should let the free market really drive innovation. And also back to the segment before, I watched your prior segment. We've also got to unleash AI. We can't be afraid of it. We have to embrace it. We have to leverage it. And we have to be the leader in innovating in it.
Well, Senator, let's talk about that. Creative destruction is a feature of the U.S. economy, and American dynamism is something Lisa was talking about earlier on this morning. Senator, I feel like there's an aversion to that these days and a fear associated with some of the headlines we've all seen over the past week, the prospect of white-collar jobs being wiped out. How do we prepare for a moment like that and ensure that what globalization did to manufacturing doesn't happen to services with AI?
Well, we have to be ever watchful, but the bell has been rung. We could either decide to be the innovation leader and work with our partners and allies, the nations that we have military alliances with, to make sure that the Western world is still in the front of it. But I'm reminded of books that I read about the Industrial Revolution, and any time that we've had a major leap in technology, we can't pretend like it didn't happen. We have to figure out how to master it and be the best practice in executing it and dealing with all the potential negative consequences and job displacement. I think the jury's still out on what the net job displacement is going to be. Does it mean that we've got to put more money in education and retooling expertise around the needs of the AI future? Probably, almost certainly, but we should resist it. We should make sure that we get rid of the patchwork of laws that are being implemented at the state level that are impediments to our own indigenous innovation in AI, come up with rules of the road at a federal level, and just unleash the power of the U.S. innovation economy to lead the world and getting it right.
Senator, do you feel like internationally there's the same skepticism? You're in Europe. It's known for regulating. There are experts in it, and it seems like a growing number of people feel like that is hampering some of the progress. I mean, is there the same kind of enthusiasm? What's the mood like around some of the AI story that's causing a lot of volatility, certainly here in the United States?
For years, I've been trying to remind everyone of how critical we were of the GDPR, data privacy, data breach policies that the EU implemented. They made mistakes. They corrected some of them. But then states started gold-plating some of those policies, California and other ones, that are, again, impediments to our tech sector. What we need are national rules. This is clearly interstate commerce. We need to preempt these laws, make them better. If we find a best practice, be instructed by that at some state level. But we need to set that platform right, or the malign uses of AI are going to outpace our ability to stay up with them. That's why I think it's so important. I was the only one, actually. 99 members voted against it. There was an amendment last year to try and preempt the AI laws at the state level, come up with a national standard. I think that we need to do that very quickly, and we should throw data privacy, data breach in there so that we get it right, and maybe we have a gold-plated standard that Europe can be instructed by.
In the meantime, as people are concerned about this labor market transition and the pain that could come alongside it, it's one reason why there's been so much focus on the Federal Reserve. It's one reason why people are saying it might behoove the Fed to cut rates more aggressively in order to ease the pain for a number of individuals that otherwise might be losing their job. I mean, how much are you feeling satisfied in the process that you could get a hearing for the nominee, Kevin Warsh, in the not-so-distant future? Do you think that that's feasible?
Well, we could have a hearing all we want, but until the investigation is done, I still believe that the initial inquiry and the investigation was a flex to try and get the current chair to step aside. Chair Powell has a term as chair that expires in May. He also has a term that could extend for 2 more years. I have no intention allowing any Fed board nominee to move forward out of committee and to be confirmed until this matter is settled. Look, this is foundational to Fed independence, and I, for one, am going to stand on the side of certainty, and Fed independence is what delivers certainty in our markets.
So, Senator, it's intriguing because we heard from the Treasury Secretary earlier on this morning, speaking to the American press, and he said the following, that I spoke with Republican senators early this week, and I think we have agreement to go ahead with the Warsh hearing. Do you have an understanding of where he's getting that impression from?
Well, you know, I've said that if they shouldn't confuse or conflate 2 issues. The suggestion that we should have an oversight hearing to see how well this building project with the Fed has gone is fine with me. In fact, I think we should have that kind of oversight for the East Wing construction, the upfit of the Air Force One that's kind of a mini Air Force One because it can't fly out of U.S. borders. All of that is just good governance oversight. None of that has anything to do with an investigation that I believe was dead on arrival. We are talking about 2 minutes of testimony that 7 members of the banking committee, Republican members, including the chair, have all said did not constitute a crime. We've got a prosecutor who's not listening to the eyewitnesses and continuing. That's not productive, and I'm not going to allow it. Maybe they can convince a Democrat to vote with them, but as long as I'm the deciding vote, we can have Mr. Warsh, who I would love to be the next Fed chair, but I'm not going to confirm the next Fed chair until I can be absolutely certain that these sorts of flexes do not always have members of the Federal Reserve Board or the chair looking over their shoulder, wondering when they get the call from some U.S. attorney with a dream.
Senator, have you had the call from Treasury or from the White House about this? When was the last time you had the conversation on the issue?
Well, I've had a conversation with the American people in C-SPAN yesterday on the floor, and I don't think I was mincing words. I'm not really known for that, but if I need to make it very clear, this is about an end or a resolution. I'll give the prosecutor the benefit of the doubt. Provide me with evidence beyond the 2 minutes of testimony in the committee that 7 Republican members said it was not criminal, it was not misleading, and that there was no criminal intent. It's like an indictment looking for a crime, and to me it's at the edge of absurdity that I can't accept. The only thing I know that I can do is exercise my right as an individual senator to hold up future nominations until this investigation is done. But to the assistant U.S. attorney, bring me evidence beyond the 2 minutes has been rejected out of hand by the majority of Republican members on the committee, or prove to me that there's been an instance where a referral. What's really odd about this, and I spoke about this on the Senate floor yesterday, this is the first time that I can find where a prosecutor moves forward with an investigation without a referral from the chair or a member of the committee. Maybe somebody can prove me wrong, but if that prosecutor has compelling information, either the way they read that 2 minutes or something else that no one's aware of, let me see it.
Senator, before you go, time for one final question. You're in Munich. Let's finish where we started. Chancellor Merz just spoke moments ago and said the transatlantic partnership is no longer self-evident. Senator, how well received was your delegation in Munich?
Well, you know, we're going to have, I think we're going to have a lively discussion here. I had someone ask me about J.D. Vance's, Vice President Vance's speech last year. I said that I wouldn't have given that speech, but I would not have missed the opportunity to let my family of nations in NATO know that one of the reasons we're here is because of the $2 trillion deficit over 20 years. Jonathan, can you imagine how much more ready we could be if all the demand signals that would have come from $2 trillion in weapons and our mutual defense had actually been purchased by the countries of NATO who have failed to even meet their minimum requirement? So I think there's frustration there that we need to get past. But I am speaking, I believe, for the majority of Congress who knows that the NATO alliance is the most profound and impactful alliance in the history of mankind, and we stand behind it, and we will as we go through this discussion to get things back to normal.
Senator, appreciate your time. I know it's loud over there. Enjoy Europe. Thank you very much, sir. Senator Tom Tillis there on the Federal Reserve, on China and the relationship with the Europeans. Just ahead of CPI data, if you're just joining us, welcome to the programme. Equities at the moment into that data just a little bit softer, negative by 0.2% on the S&P, on the Nasdaq down by a third. New problem for tech stocks. This time it's Chinese tech stocks. That headline on Alibaba 15 minutes ago.
Yeah, coming out and saying that the U.S. is looking at Alibaba as cooperating with the Chinese military. And Senator Tillis right there was saying, of course they are. I mean, how can you really extricate these? But designation like that has serious market implications, and that's the reason why those shares are so much lower.
That stock is down by about 4%. With the CPI data, month over month, year over year, and including core. Let's cross over to Mike McKee for more. Good morning, Mike.
Good morning, John. The numbers just starting to drop here, and they are a little bit better than what economists expected. A 0.2 rise in the CPI headline, which puts us at 2.4%, down from 2.7% on an annual basis. The 2.7% was for December. Remember, there's some things you got to think about with these numbers because of the fact that we didn't have any October numbers, and that biases all of this. Core CPI comes in up 0.3. That's more than the December 0.2, but it's what the market had forecast. On a year-over-year basis, we're up 2.5%. That's down 0.1 from 2.6% in December. So a little bit better news there overall for the markets, but still, when you look at the core numbers, you're not getting a whole lot of progress. We're looking here at the food price numbers. They were up in December by 0.7. So we have to see here we get the updated numbers for January. Food prices just rose by 0.2 during the month. Food at home by 0.2. Big drops down from what we saw in December. Gasoline prices were down 3.2%. That's a big weight on all of these numbers. And used cars down 1.8%. New cars up just 0.1%. And apparel prices up 0.3%, same as the month before. So a lot of the big contributors to CPI coming in softer than anticipated. And you can see why we see the headline number come in a little softer than economists had expected.
Mike McKee will take that. Thanks for the update. Appreciate it. Stay close. Downside surprise then, small one on headline CPI, 0.2% month over month. The survey was 0.3. Our survey here at Bloomberg, the median estimate for core was 0.3, in line at 0.3. I guess that's good news. Push it through the bond market. Yields drop at the front end of the curve. We opened this week at 350. We pushed higher off the back of hotter than expected payrolls. And then this morning we're down again by 4 basis points, 341 at the front end of the curve. Further out along the curve, 10s with a break of 410. Yields down by 2 basis points on the session now at 4.07, and basically at the lows for the year, Lisa, on a 10-year maturity following that softer than expected CPI print.
Okay, 0.1% on this CPI print allowed a rally in the bond market that has taken 2-year yields down by about 10 basis points in 1 week. After getting a jobs number that was significantly higher than the expectation of 130,000 jobs created in the prior month. You put this together and you understand the confusion that people have. Somehow people are saying that this inflation rate, given the fact that apparel prices didn't increase that much, that the used car market was a little sluggish, gives the Fed the green light to go ahead and cut rates by 2 or 3 times in 2026.
It keeps the Fed put alive.
Yes.
I won't talk about the scale of the move because it's fading as I look at it right now. And as we often say, following the data, the first move isn't always the right move, and that might hold here too. But with regards to the move that we are seeing directionally, keeps the Fed put alive. That if you do get the material weakness in the economy, you're not going to get the pushback on the committee as Kevin Walsh takes over. If you keep getting prints like that one.
Yeah, right now you're seeing 2-year yields at the lowest levels going back to September of 2022 and dropping. So even if you do get something of a knee-jerk reaction that does fade, there still is a feeling that the door is open. And I could say that politically the door is certainly open, but the numbers that we saw in terms of the labor market also seem to justify it, especially adding to some of the concerns that we see in the AI trade. So interesting to see how big this move is, how biased people are to look to that Fed for some sort of response.
Just heard from Senator Tom Tillis, and the door is closed for the hearing for Kevin Walsh. Still got to talk about that, you know, the timing. It's a matter of if, right? It's a matter of when rather, and not if, because ultimately Kevin Walsh is going to become the next Fed chair. You heard Senator Tom Tillis. He's going to vote for him. He likes the guy. But it's a matter of when still. And it's going to take some time. It's going to take some time.
It's fascinating to see Scott Bessent on the American airwaves earlier this morning, as you say, talking about how they're getting close, and then to hear Tom Tillis saying absolutely not, closing the door on that.
What's giving him that impression that they're going to get the hearing?
I think that
the hearing will proceed.
Hopes and dreams. I mean, how much is there actually motion on the other side to potentially resolve this legal issue?
Tiffany Wallinger-Pimco joins us now, not to talk about that, but to talk about the data. Tiffany, welcome to the programme. How much weight can we put on this week's data? Hotter than expected payrolls, softer than expected CPI.
Well, I think this morning's inflation print, even though it was in line with the Bloomberg consensus expectations, was actually pretty encouraging under the surface. You know, I think there's 2 things that we would highlight in that regard. You know, one is just that shelter inflation, which had been stubbornly just persistent since the pandemic, it's finally really decelerating. And we saw that in today's report. Rental dynamics for new tenant rents actually suggest that you're seeing a pretty stagnant rental market, and that will ultimately feed into OER with a lag. So that's good news for the Fed. I think the other good news in this report, is that the tariff-related effects are largely fading. So we probably did get a little bit of a bounce back in core goods prices, retail goods prices from the discounting that happened over the holiday season. But ultimately it looks like tariff effects have they're behind us at this point. They were passed through to the extent that companies were going to do it. So as that fades, you should have a Federal Reserve that feels more comfortable, cutting interest rates. It does look like they are a little bit restrictive relative to the median long-term estimate of the long-run neutral interest rate. So getting a couple of more cuts in this year seems very reasonable to us.
Tiffany, not all rate cuts are created equally. Do you see then a Federal Reserve that's cutting interest rates because inflation gives them the space, or because the labour market gives them a reason?
So I think so for us, the outlook for for the labor market is pretty stable here. Ultimately, we think growth is going to be okay this year. We're looking for 2%. That should support the labor market, but nevertheless, you do have this AI-related adjustment that's happening, under the surface. So those factors are sort of offsetting. We're looking for the unemployment rate to kind of stay where it is, and then outside of that, we're looking for inflation to moderate back to target this year. So that, in our view, would be consistent with the Fed that's easing somewhat. Of course, if the unemployment rate were to rise much more, then that would warrant more easing from the Fed.
Tiffany, do you think that this actually opens the door to 3 rate cuts this year, as the market seems to be implying right now?
Yeah, we'll definitely have to see. It's certainly possible that they could get in 3. Again, I think as kind of a rough estimate, we're looking at the midpoint of the long-run neutral estimate, which is right around 3%. They're at 3.5 now, so that implies 2 more cuts. I think getting another one in would, be the result of more disinflationary pressure, potentially below target inflation, or the unemployment rate moving up.
I understand the idea of celebrating disinflation. We're still at 2.4% year over year for CPI, and people are saying this is winning. How strong is the disinflationary force coming from the housing sector that gives you confidence that we're actually going to get down to 2%, even with Fed rate cuts, given that we've been above 2% for 5 years?
Yeah, the housing sector has certainly been one of the reasons why that we've had stickier inflation. So the housing OER and rental inflation have been incredibly sticky. That's in part because of it just takes them longer to adjust. So they didn't accelerate as much as home prices did during the pandemic, but now they're decelerating at a slower pace. That's finally over. It looks like that catch-up has happened in the rental market, and you're now seeing more stagnant rental trends. So that is important. But again, the other thing is that the thing that's held up overall inflation over the last year is some pass-through of the additional costs that companies have to pay as a result of tariffs. But that's a one-time price level adjustment. And when we look at core goods price behavior, it looks like that adjustment's largely happened. So now that it's happened, you should see core goods, price inflation also starting to decelerate. So again, all that is good news for the Fed.
Tiffany, just one final comment, if we can, on the committee that Kevin Walsh will ultimately at some point this year be taking over. How contentious will things be? How divided is that committee currently?
Well, I think you want to look at where everybody is, where everybody's sort of writing down where they think the long-run neutral interest rate is, because that's going to be the debate this year, we think. And of course the AI, and the technology related to fusion will have implications for that R-star debate. But there's a good majority of the committee that still thinks that the current policy rate is above their estimate of R-star, which means policy is slightly restrictive. And if you have employment that is consistent with maximum levels, and you have inflation that's running at target, you should be at neutral policy. And so again, the real debate this year on the Fed is where neutral policy is going to be. And again, we're kind of looking at the midpoint of their estimated range of 3%.
Tiffany, appreciate you jumping on. Thank you. Tiffany Welding there of PIMCO. If you're just joining us, welcome to the program. CPI out 10 minutes ago. Downside surprise, 0.2%. The estimate 0.3. That's headline on core. Core CPI coming in at 0.3, the estimate 0.3. Unlocking some gains off the lows in the equity market on the S&P. A bit of outperformance down the Russell, the small caps higher by 1/3 of 1% with the repricing at the front end of the curve. Yields coming in just a touch. They were down 4 or 5 basis points at the very front end of the curve. Lisa, we're now down 2 to 343.
Yeah, although you are seeing a 50% chance currently getting priced into the market in terms of Fed funds futures of a Fed rate cut, a third Fed rate cut for this year. But I like how you pointed out that core did not change. It was bang on line. And if you're looking at where the disinflation is coming from, yes, it's coming from retail, and yes, it's coming from potentially used cars, but it's also coming from gasoline. And that is one of the volatile factors that could turn around because of some of the oil price gains that we've seen of late.
In this market, in line is good news.
Evidently.
But let's just go with in line and, good news.
We've been too negative. I think this is great. I'm embracing the disinflation, and so too is the market.
You're just getting close to the weekend, 20 minutes away. You know what this is about. Mike McKee's still with us. He's standing by. Mike, you're looking for the details. What jumps out for you? Is this a good print?
I wouldn't go so far as to say I would trade on more Fed rate cuts because of this. There are some signs in here that are a little concerning. Goods prices were flat, and a lot of that has to do with, as Lisa said, used cars and gasoline. Services prices were up 0.4. And then underneath the hood, you see tariff effects. You do see them. We see household furnishings up 0.7. Appliances and laundry materials, washing machines up 1.3%, video and audio equipment up 2.2%, computers and software up 3.1%, and these are month-over-month gains. So we are seeing companies start to roll out price increases on things that have been tariffed. Now the question is this a one-time thing, which is what Chris Waller has been arguing, or is it, as others in the Fed have been concerned about, something that's going to keep prices going up for a little bit? When you look at Supercore, take out housing, and Tiffany mentioned how housing had gone down, it's still up 0.6% on the month. So we are seeing prices rise for things. And remember, this is CPI. There was no October CPI. The Labor Department put that down as a 0 for the month. So CPI is biased lower. Next week we get PCE for December. And according to the Bloomberg survey, that's going to go up to 3%. And a 3% handle is not something on PCE, which is the Fed's target, that the Fed is going to want to build a case for cutting rates on.
Yeah, the hawks of the Fed aren't going to like that. Mike, thank you, sir. Mike McKee, can't get away from the gloom. You tried, and Mike just brings you back in.
I'm just depressed now.
Right.
I don't know how. I mean, he's got some good points there, particularly about gasoline, because gasoline's inflected upward, seeing tariff pressures. Nonetheless, that housing component, do we really believe that? Are we measuring it correctly? So that's where I'm going to get my optimism. Rents have been stabilizing.
You're not alone. That's where a lot of pushback comes with regards to the official data. Equity still just about positive, up by 0.1% on the S&P. Outperformance on the small caps, the Russell, up by 0.4. In this market, anything could change in the next 5 minutes or so. Let's get you an update on stories elsewhere this morning. Here is your Bloomberg brief. Recapping the data, inflation coming in cooler than expected, rising 0.2% compared to estimates of 0.3. Core inflation coming in line with estimates. Elsewhere, Alibaba shares falling in the pre-market. Reuters reporting the Trump administration expects to add the company to a list of firms helping China's military. According to the report, the list doesn't impose sanctions. It signals White House concerns about the company. And finally, Rivian shares soaring in the pre-market. The EV maker surprising investors with strong fourth quarter results and its first ever annual gross profit after years of consistent losses. Their stock is higher by 26%. And that is your Bloomberg Brief. Up next on the program, Jim Karen and Morgan Stanley. With inflation coming in cooler than expected, plus Danny has your morning movers. Wendy's shares falling as the company struggles to keep value-focused customers. That stock is down by more than 4%.
crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
If we're reasonably comfortable that core inflation is running down more at 2.5%, I think that's a pretty comfortable place to be reducing policy rates. The numbers are imprecise, and there are issues in terms of just measuring inflation. So if you're at 2.5%, you're basically at your target. We should be seeing that kind of upward pressure on goods inflation fading, but that's a key question.
That was Andrew Honhorst of Citi weighing in on the inflation story. Inflation coming in a little bit softer than expected this morning, only moments ago, unlocking some gains and a move off the lows in the equity market. On the S&P 500 this morning, just about unchanged. On the Nasdaq, slightly negative. We have gone 3 days on the S&P 500 without gains. Can we avoid going day 4? Day 4 into a long weekend stateside. Let's get you some morning movers, some single names with more. Here's Danny Berger. Hey, Danny.
Hey, John. Not all fast food is created equal. Earlier this week, we learned that McDonald's had strong earnings. It is not the same for Wendy's. They disappointed not only on their fourth quarter, but their outlook too. They also said they're going to be closing something like 5 to 6% of stores. We know McDonald's cut prices drastically to bring people into a value offering. Perhaps Wendy's has some catching up to do. Shares down 4%. The flip side of this trade is the grocery trade, and that seems to be going well, although maybe not going into store. Maybe everyone's lazy like me and orders them. Instacart shares up 13%. They beat across the board. The CEO saying that their retention of customers in 2025 was akin to their peak in 2023. So those shares, again, up 13.4%. Finally, some breaking news in the past few minutes. The Pentagon confirming that they have indeed added Alibaba to a list of Chinese companies allegedly helping the Chinese military. Now, there aren't necessarily sanctions that automatically come with this, but it puts them on a watch list. Shares, the ADRs of which falling 4.2% this morning, John.
Hey, Danny, thank you. Looking forward to the program in about 10 minutes' time. Not just Alibaba, this from the Pentagon. Headline just crossing the Bloomberg terminal. Baidu, BYD, Alibaba aiding the Chinese military. BYD is an interesting one. And that'll be an interesting conversation with the Canadians later on this year, won't it?
Especially given how they have been increasingly leaning into that. And one of the concessions potentially to renew USMCA has to do with potentially increasing pressure on Chinese goods by Canada. Also interesting over in the Munich Security Conference. I'm curious to see what Europe says about some of these measures.
Let's bring in Jim Caron of Morgan Stanley. Jim joins us following inflation coming in cooler than expected just moments ago. Jim, welcome to the program. Is that enough to stabilize this market, or is it going to be difficult to put a lid on this volatility?
Okay. So I don't know if the inflation number necessarily does it. It is a good sign that we're having higher productivity, and it's part of the bigger picture story of better productivity, better growth, inflation's not rising. The larger picture is still a positive picture for the markets. We're having decent growth. But Jonathan, there are two words that we have to focus on right now: contagion and dispersion. We are going through a repricing of a segment of the markets, which is a software sector. And there's worry that this might create an event that is contagion for the rest of the markets, and that creates, some type of a bigger move down. The other question that we have to answer is there dispersion? Can you diversify these risks away? So far, what we're seeing is that a lot of the risk is concentrated in one segment of the market, right, which is the software sector. It's a question about leverage, and that's primarily in the private markets, primarily in the private credit space. But you're not seeing it in the publicly traded fixed income markets, right? High yield software is only about 3% of the high yield market, has a relatively high quality at this point because a lot of those bigger risks were dispersed and diversified into the private markets. So the ability for this to create contagion and become a bigger financial event, I think, is relatively low. It doesn't mean that people aren't worried about debt refinancing for the software sector and what that might mean for equities and things like that. But I don't see this as a liquidity event like your typical, market moving, big, substantial market moving event. I see this as a repricing in a segment of the marketplace that people are trying to get a handle on and trying to see if they can diversify the risks.
In the meantime, Jim, they're hiding in the same places. They're going to places like Staples and sitting in Walmart, going into earnings next week. What's your advice for the people piling into that trade?
Well, look, I mean, one of our calls for this year was a cyclical broadening of the markets. So, for the past couple of years, we've been talking about the Mag 7 and people forgot about the other 493. So the way that we see it is whether it's materials, whether it's industrials, or it's even some of the financials. Some of the financials right now are actually looking, pretty interesting just given the recent downdraft. And I think it's a good buying opportunity. My advice is that there's a lot of creative destruction that's taking place in markets today. And AI is chiefly responsible for that. But it also means that there's a lot of companies in the more traditional value sectors of the markets that are going to be the AI beneficiaries. We can't forget about that. And these are the companies, if they employ technology well, are going to create the economic value, and we're going to see higher gains out of industrials. I mean, look at stocks like Caterpillar, for example, right? Very, very strong, very old school, traditional company. These are the areas that, as a portfolio manager, as an investor, it's a very diverse market where we can create a lot of diversification. This is a great opportunity to think about being a stock picker and a bond picker as opposed to just a passive investor.
Jim, you said something very interesting there, as they employ technology. And they're employing technology, not necessarily humans, which is a reason why people are very concerned about the labor market right now. And I wonder, as you say, it will all come out in the wash, which is very wonderful, that you think that ultimately some of this broadening out is predicated on a series of rate cuts. Is that true?
I don't know if it's necessarily predicated on the rate cuts, but the broadening out, what we have to recognize here, it's a broadening out of the labor force too. So what we've seen really since 2001, so if we go back a few decades, is that the capital share of GDP had done really, really well, where the labor share of GDP had done very poorly. Now what we're seeing with a rebirth of maybe some of the manufacturing, some of the cyclical broadening that we're seeing, is that more of the labor share of GDP is doing better. So yes, there might be some unemployment in some of the white-collar technology jobs, but try to find an electrician. Try to find a plumber, try to find a carpenter, try to find a welder, right? These are the segments of the economy that is really just not spoken about enough, that are actually really, really strong. The demand for labor in those spaces, and those are higher paying jobs. Those are trades. Those aren't service sector jobs, right? Those aren't like, very low end service sector jobs. These are very high skilled labor jobs that are coming back. That's the other part of the economy that I don't think that Wall Street spends enough time talking about.
Hey, Jim, I hate to end the conversation there, but we're actually out of time. And we will find time to talk about that next time you're on. Jim, thank you. Jim Caron of Morgan Stanley there. Jim pushing back against the prospect of financial contagion risk. Some pushback from Jim.
Yeah, he's going back to the Steve Rashuto point. It looks good. It sounds good. It is good, and that seems to be what a lot of the bulls are. Right now, I'm just looking to see how do I become a plumber. It's a 4 to 5 year apprenticeship. So it's a lot of work, and you have to have good physical stamina, and you have to have a good sense of where things are in terms of mechanics, which might be a problem.
Do you have a good week? Do you enjoy this?
You know, it's actually fascinating. This is a fascinating moment. I did.
It's a fascinating moment. Enjoy the long weekend. You've all earned it. From New York City this morning, good morning. This was Bloomberg Surveillance.
The world's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
You don't think the court was hurt by the perception that it was a political decision?
The court's always hurt, it seems to me, if we look political. One of my concerns, my present-day concerns, is there's too much partisanship. It's true historically that most presidents have appointed justices to the Supreme Court who are members of their own party. The partisanship should not be an overriding factor. What you look at is temperament, learning, background, reputation, whether or not you have those qualities of independence and caution that make for a good judge.
Increasingly, you see dissenting opinions in the Supreme Court aren't quite as civil as maybe you might prefer. And is that of concern to you?
Yes, it's of great concern to me that our civil discourse, our civic discourse, is not civil enough. Aristotle said that a democracy depends on an open debate where you respect the dignity of those with whom you disagree. He said democracies only live if they are sustained over a period of time by a thoughtful, rational discourse, a discourse in which you respect the dignity of those with whom you disagree.
This is a 15, 16 grams tuna. Then sushi rice is still a little bit warm. So take one, like don't make it too tight. So from now, and very light, like a ball. Put wasabi in the middle. Then my process 1 to 6. 1. This is putting between the rice air. Then make the 4 fingers curl. Make sushi shape. Then touch this. 2. Then turn. Now these 2 fingers, top of the bottom, make the sushi shape more beautiful. 3. Then, looks like pushing, not pushing. 3, 4. Turn, same way, 5 and 6. So this is the 1 to 6.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Hazlida Amin in Davos, Switzerland, and this is Bloomberg.
Happy Friday the 13th and CPI day. It is 30 minutes to go until the start of your cash equity trade. I'm Danny Berger, Matt Miller on a well-deserved vacation. Bloomberg Open Interest starts right now. Coming up, an inflation report caps a busy week of economic data. Core CPI rising in January on higher servicing costs. Meanwhile, the AI scare trade came for a wide range of stocks this week. Literally everything. Logistics, that's just the latest victim. Plus another wave of earnings from EVs to pharma and food. We've got the latest read on corporate America. And one of those reads, Rivian, it delivered its first ever annual gross profit. The EV market otherwise has been pretty bleak, so good for them. Shares up 22.5%. We also heard from Moderna, those shares up 1.7%. Stronger than expected demand for its COVID vaccines, which was a surprise to all. And Wendy's, those shares getting pummeled. They beat expectations, but the outlook was disappointing. Cost-conscious consumers apparently looking for a bargain, even though McDonald's beats, maybe Wendy's didn't lower their prices enough. One of the big stories this morning we are tracking, though, inflation rising at a slower than anticipated pace in January. Headline CPI's year-on-year increase was at 2.4%. That is the smallest since May. Joining us now is Michael McKee, Bloomberg's international economics and policy correspondent. Mike, what was your read on the data?
Well, I'm a little more pessimistic than I think Wall Street is at the moment because everybody's pricing in more rate cuts from the Fed because CPI inflation is down. I'll tell you why that's not so good in just a minute. First, let's go over the numbers. The headline CPI just up 0.2 for the month of January, which is less than anticipated, and it's down from the prior month. And the year-over-year number falls significantly to 2.4%. Core up 0.3 as forecast, and so the annual rate 2.5%. The CPI rise, the smallest since July. We've sort of reversed the way inflation has gone this year in the CPI. But remember, PPI is still running at 3%, and that will figure into what I'm going to tell you in a second. The next data on PPI comes out next week. Biggest moves, gasoline prices were down 3.2%, and rent up just 0.2%. Both of those, the biggest contributors to why the headline inflation came down. But tariff inflation is feeding through. You can see appliances were up 1.3%, video and audio 2.2%, computers and software up 3.1%. Those are all tariffed items, and companies had held off on raising prices. Looks like in January they did. Now, here's the bottom line. If you're thinking about what the Fed is going to do, you have to remember that the Fed doesn't look at CPI. It uses the PCE index. And you can see what's happened to CPI. It's gone down. Remember, though, there was no October CPI.
Yeah, I was going to ask, just how distorted is this data?
It is distorted, and the government put in zeros for October. So CPI is not following the same path as PPI and as the PCE numbers. And PCE there is the yellow line. That is expected to be up 3% when we get the December numbers next week. And the Fed is not going to be looking to cut rates when inflation is going up at their on their target number to 3%.
Could you look at these numbers and say maybe less angst for the consumer? Food prices dropped. If inflation, when it comes to shelter, was less, gasoline was down. Does that at least signify maybe some pressure off of this White House, that some of those items saw less inflationary pressure?
If I were at the White House, I'd be highlighting those items because they're the consumer items. The issue then is what happens next. We had a big freeze in January that may have hurt some agricultural crops that could show up in food prices, and of course gasoline prices being extremely volatile could be going back up again as well. So as long as that continues, it's good news for them, but if it doesn't continue, people are still going to be thinking about price level is still high.
Mike, thank you very much for breaking down the data with us. That is Bloomberg's Mike McKee. Now, elsewhere this morning, just moments ago, the Pentagon added a number of firms, including Alibaba, Baidu, and NIO, is aiding the Chinese military. Bloomberg Tech's Caroline Hyde is here to discuss. Caroline, what does that even mean to be added to this list?
What it means is that they believe that Alibaba, like Tencent was announced a few months ago, that they are in some way working alongside the military. What it means is that are we going to see forced selling from a number of the big ETFs, big BlackRock and the like, who own ADRs of the likes of Alibaba? Are they going to be forced to no longer hold on to these particular companies? Look, it's not on the entity list, but it is on this 1260H list, which is basically saying that they are in some way working or aiding the military. Now, Alibaba has come back and sort of more broadly has, according to Reuters, has responded saying that there's no basis to conclude that Alibaba should be placed on the Section 1260H list. Alibaba is not a Chinese military company, nor part of any military-civil fusion strategy. But the worry here is that foreign investors are going to be less likely to hold the shares. We saw Tencent fall when this was initially announced for them. Alibaba's going to be having the same reaction in ADRs as well.
Shall we also discuss the disruption of karaoke companies, how they're apparently eating the world? I mean, yesterday on this show, we were looking at logistics and trucking companies' shares dropping, and we're trying to scramble why. It feels like every day there's a new announcement from some company, in this case, one that used to be karaoke company, disrupting some sector.
Yeah, in our show, we managed to find the why, and it was Algorithm, a $6 million market cap company that used to be a karaoke business, pivoted into the world of automated freight, and they put out a white paper. 300-400% increase in freight volumes without hiring any more people. Basically, freight is a really human organizational business, and they're saying we've got an AI tool that can cut that out. Look, would we ever have thought that this David and Goliath situation would be happening? Look, Altruist, we had the CEO of Altruist on yesterday. That is a wealth management company. It's worth $2 billion. It's VC-backed, unlike Algorithm. But we are seeing that it announced a new tool, a tax tool within its Hazel AI, and you saw $20 billion wiped off of wealth management companies. The AI anxiety is running rife at the moment. People are selling first, asking questions later. This is going to be coming for every single industry because most models are able to disrupt just the way in which we do our work yet more efficiently. But at the moment, the market's on tenterhooks trying to work out who it really affects and who it doesn't.
Do you think it's credible, though, that it's startups that are affecting things? Or is it going to be Anthropic? Is it going to be OpenAI? Are these the real worries?
Algorithm, OpenAI are startups, technically. They're not publicly listed. They're all eyeing going public. But what's interesting is it wasn't Gatik, which is a self-driving trucking company that has the backing of some of the most popular VCs and had joined our show a couple of weeks ago. It was a little-known karaoke company that had pivoted into making smart cab AI tooling. So I think the market's going to become a bit more discerning on what is the product that's really going to disrupt and what is the business model that's going to withstand that. But probably the likes of certainly OpenAI and Anthropic, they've got some incredibly powerful results coming out, and they've got some incredibly powerful platforms. People are going to be bracing for more.
By the way, Algorithm's such a good name because it was like rhythm, karaoke.
Add an algo.
Perfect.
.ai. We're all into it now.
We're all AI. Caroline, thank you so much for joining us. Tune in 11 a.m. Bloomberg Tech, where Caroline Hyde co-hosts. Now, Moderna earnings were boosted than higher than expected demand for its COVID vaccines this flu season. Bloomberg health reporter Jerry Smith joins me now. Jerry, I guess everyone, I haven't candidly gotten another COVID vaccine in quite a while. Why did they outperform in this area?
Well, I think this is a company that is, a lot of the investors are really focused on their flu shot. This past week, we saw that the FDA announced a refuse to file letter. Basically, they're not going to review the company's flu shot vaccine. This is a big setback for the company. Most of their revenue is reliant on COVID vaccine sales, which obviously have been declining since the pandemic ended. So the company's really trying to get more products. And this is a real setback where the FDA is saying, we're not going to review this. And the CEO of Moderna really made some extraordinarily sharp criticism of the FDA during an earnings call this morning, saying, there's a lot of regulatory uncertainty, not just for his company, for the entire drug-making industry, because we've seen a lot of examples of the FDA, companies saying the FDA is changing the goalpost. This new administration is giving us different feedback than the previous administration. So, companies usually don't criticize their regulator very sharply, but, Moderna's CEO really is coming out and saying, this uncertainty is harmful to patients.
That's what I was going to ask, just how different is this FDA than the FDA under the Biden administration?
Pretty dramatically different. You look at the top, and you've got Health Secretary Robert F. Kennedy Jr., who has been, very critical of vaccines, and that's just created a lot of challenges. And also at the FDA, a top official, Vinay Prasad, he's been a real stickler for, how companies compare their medicines in clinical trials. And so what we saw this week was, he said we're not going to review Moderna's flu vaccine because we don't like, the vaccine you compared your vaccine to. But, bigger picture, you think about the vaccine industry, vaccines are very political right now, and it's creating real challenges for a company like Moderna that is right now entirely a vaccine company, hoping to become a cancer treatment company in a few years. It's a question of how do they get from here to there in a really tumultuous regulatory environment.
So a beat today in shares up, but the road ahead still looks challenging. Jerry, thank you so much for joining us. That is Bloomberg's Jerry Smith. Let's get a check on futures this morning, about 20 minutes in before your cash equity trade. We had gotten a lift up after CPI numbers that were basically in line. Supercore comes in, still a little bit sticky, so that leads us on our way to a fourth consecutive decline. The NASDAQ 100 underperforms, down 0.1%, while the Russell 2000, some outperformance there. That's up 0.25%. Let's look at some of the other individual movers on our radar, because there are a lot this morning. Expedia down 5.5%, even though it had the fastest fourth quarter revenue growth in 3 years. but it's the same thing that is hitting every single company, it feels like. Is AI going to displace your travel booking? Airbnb, on the other hand, sees healthy demand through 2026 as it plans to make deferred payment plans more globally available. Those shares up 6%, apparently not ripe for AI disruption. DraftKings sales and profit, those fell short of forecasts as it assesses the impact prediction markets will have on the business, shares dropping 12%. Coming up, rebuilding Venezuela's oil sector and how the U.S. can benefit. We're going to bring you our interview with the U.S.